developers representing about $3 trillion worth of GDP, producing that's what they're paid, $3 trillion worth of salaries per year, which is generating economic growth for the rest of the industries. Say $100 trillion of the world's industries is generated by $3 billion worth of salary. That $3 trillion, that $3 trillion worth of salary is now producing nearly 3 times as much output. It's effectively a $9 trillion productivity from $3 trillion of salaries. Does that make any sense? The difference is absolutely extraordinary. This is the potential. This is the promise of AI. The number of engineers, software engineers, is actually increasing. People talk about AI reducing jobs. Complete nonsense. It's causing more software engineers to be hired, and the reason for that is very simple. If you can hire a software engineer and you could generate $9 trillion worth of productive work, why wouldn't you want to hire more software engineers? If that line was flat, then obviously people will hire fewer software engineers. But because the output is so incredible, people want to hire more software engineers. This is going to show up in our economy somehow soon. And so the first thing is useful AI has arrived. Now, what does that mean from the industry's perspective? From the industry's perspective, that means that tokens are now in extraordinary demand. Because if you could do this, you're going to want to produce more of it. And because tokens are now profitable units, tokens are now profitable units of revenues. Because it is now profitable, the AI companies want to build a lot more tokens, generate a lot more tokens, build more AI factories, which is the reason why compute demand here in Taiwan has skyrocketed. It is precisely the reason why all of you are so busy and your businesses are doing so well. In fact, that looks like some of your stock price. The compute pattern has changed. Everything has changed. So the first idea is that useful AI has arrived. AI is now a profit generator. AI is now a GDP generator. Behind it is a whole new kind of computing pattern. Not just a large language model, but an agent. Today, almost everything we're going to talk about is going to be based on this. So let me take a quick moment and show you what I'm talking about. This is an agent. It's an agent application. In the old days, this would be application, this would be code, and this would be operating system. Application, code running inside an application, inside an operating system. Today, it is agent, which consists of a large language model or many sitting inside a harness, and that harness helps it, orchestrates it to do productive work. This is the input. When that input comes, it has to understand, observe, reason, act, use tools. That tool could be a spreadsheet, web browser, a data processing engine, database engine, for example. This is orchestrated, this harness orchestrates this routing of information every single time it touches either processing the context, understanding what is happening, reasoning about what to do, coming up with a plan that it acts on. That orchestration path is orchestrated by some software. And so this is fundamentally an agent. It deals with short-term memory, called working memory, long-term memory, just like we do, we have long-term memory. And so the memory management system is incredibly important. This entire system is called an agent. The large language model is used to do the thinking, and the harness connects everything together, just like an operating system, okay? And so this is the new computing model, and this is what an agent. It could do incredible things. This is the big breakthrough. The simultaneous the convergence of large language models that are now able to do a really good job thinking, reasoning, planning, using tools, and the fact that we have now these harnesses that manages memory, the orchestration, uses tools, we can now do amazing things. Let me give you some example. This is a prompt. This is the prompt. This is the code that is generated, and this comes out. This is the input. This is the input, and that's the output. What do you guys think? It's pretty amazing, right? We use Claude Code here, but Codex does an incredible job as well. Here's another example. This is the input. Create a GIF, NVIDIA green dots on black scatter, form Taiwan 101 building, morph to GTC Taipei 2026, morph to NVIDIA I logo, then scatter and repeat, right? So you saw that. That was the prompt. Here's the next one. I lost my remote control battery clip. It looks like this. Create a CAD file. It uses a tool. Create a CAD file, ready for 3D printing to create a new one. Make sense? This is now the new computing pattern. Whereas we used to launch an application, click and type, we now replace that with explaining to the AI what we want, our intent, and the AI generates the code or uses tools and produce the necessary output. This is how computers are going to work in the future. This is agentic AI. For 2 years, we've been building towards this, and now it has arrived. Now, one of the big breakthroughs, of course, is tool use. A lot of people have said, you know, Jensen, AI is coming, agentic AI is coming, therefore all of the software companies are going to go out of business. I said it's exactly the opposite. Because there are going to be so many agents, the world is no longer limited by the number of people. Therefore, those agents are going to use more tools than ever. This is actually an incredible time to be a software company. But the software has to be presented to the agent in a way that the agent can use it. This is a big breakthrough. And in fact, what we have done, as you know, what NVIDIA's treasure is all of our CUDA libraries. I call them CUDA-X libraries. This is NVIDIA's treasure. Today, we're able to now present these CUDA-X libraries to agents who can use it much more effectively than even humans. And so this is a wonderful time for CUDA-X libraries. Let's take a look. 20 years ago, we built CUDA, a single architecture for accelerated computing. We reinvented computing. 1,000 CUDA-X libraries help developers make breakthroughs in every field of science and engineering. CUDA-X libraries are tools for agents. cuLitho for computational lithography. cuOpt for decision optimization. cuDSS for direct sparse solvers. AIQ for deep research across structured and unstructured documents. Ariel for AI RAN. Warp for differentiable physics. Parabricks for genomics. At their foundation are algorithms, and they are beautiful.
Just while we're waiting for Jensen Huang to resume speaking, we'll just quickly recap some of the points that he's been making here. He started off by hailing Taiwan's supply chain and tech ecosystem, but then he was talking up agentic AI, saying useful AI has arrived, talking about also how this isn't a threat to the software industry, but an incredible opportunity for software engineers as well. He was saying we're seeing enormous growth and productivity exploding with AI, causing more software engineers to be hired, so AI having a multiplier effect on some of the things that software engineers can do. Jensen is about to resume speaking again. Let's listen in.
A round of applause for math. Math is beautiful. The computing pattern of software is going to change. In fact, let's come back to this. This is the agent. It is the ultimate disaggregated and distributed computing model. So many different computers are going to be activated in order to process this agent. The agent consists of model, harness, tools and skills, and a runtime. All of that is running at different places in a data center. You can think of the model as the brain, the harness as the body, the tools that it uses, working in a runtime, think of it as a workshop. So this is a person, a worker, working with tools in a workshop. Of course, this is being done at extraordinarily large scales. And each one of those steps are running in a different part of the computer. And you could see the large language model is thinking, context processing, observing, understanding the environment, reasoning, coming up with a plan, and acting on the plan. Every single time that happens, an entire rack of Grace Blackwell NVLink 72 is activated. It's thinking with the large language model. Whenever it uses a tool, a CPU is used. That tool could be a C compiler. It could be Python. It could be JavaScript. Or it could be accelerated computing. Today's agents are relatively simple users of tools. Tomorrow, they're going to be very sophisticated users of tools, which is the reason why the CUDA-X libraries that I showed you are going to be incredibly popular with agents. They solve some of the most important problems the world knows. And all of our CUDA-X libraries are now going to come with skills that the AI could learn how to use. So the CUDA-X library, some skills, basically a manual, the AI reads it and go, aha, that's how you use it. The ability to use these libraries by agents are going to be incredible. And so the tools run on CPUs and GPUs and large language models. The security harness runs on CPUs and a security processor called a DPU, NVIDIA's Bluefield. The orchestration of all this runs on a CPU. This is the entire harness, and the CPU is orchestrating all of the work. One of the hardest parts is memory. You could just imagine. The working memory is called KV caching. What to remember, compaction, not just compression, but how to retrieve. Do you retrieve structured data? Do you retrieve unstructured data? What is the ontology, the relationship of all of these different data to itself? That entire processing is incredibly complicated. The memory system of AIs is going to cause the storage system to be completely revolutionized. As you could see, every aspect of this computing model, this computing pattern, this new application called an agent, is fundamentally different than the way that applications used to run. A whole bunch of software sitting inside a binary, sitting inside an operating system. This is the reason this disaggregated, this distributed, this heterogeneous computing problem is precisely the reason we built our next generation, Vera Rubin. Vera Rubin is not one chip. Vera Rubin is not a GPU only. It starts with the GPU, but Vera Rubin is incredible. This entire thing is Vera Rubin, from end to end. It has GPUs, Vera Rubin NVLink 72. It is orchestrated by Vera CPUs that I'm going to tell you more about. The storage systems, revolutionary. Vera, along with CX9, our software stack called Doka, the security processor that's inside so that everything is encrypted at rest, in motion, as well as in use. Everything across this is secure because the AI model is so precious. This is the reason why this entire system obeys confidential computing. Each one of these systems would be a complete revolution in itself. Vera Rubin is the most ambitious endeavor in the history of our company. The whole company worked on Vera Rubin across all 40,000 engineers, not to mention all of you. All of you participated in the creation of this entire system. Vera Rubin is really a miracle, and it's not just one chip, it is so many. Well, it's even beyond that. A long time ago, NVIDIA used to be a GPU company, but over the years, we've evolved to become a systems company. You're looking here now for the most complex system, most complex and ground-up system ever designed. But ultimately, our customers, our partners, don't want to buy computers. They want to build AI factories, which is the reason why NVIDIA has really started to transform ourselves yet again. You could see so much of our technology is now at the entire infrastructure scale. Our partners are at infrastructure scale. Power generators, cooling systems, the grid providers. So many industrial companies are now part of our ecosystem because ultimately we're trying to build an entire stack just like GPUs, just like when we were building Grace Blackwell NVLink 72, just like now we are building a full stack system so that our customers could build amazing AI infrastructure. Let's take a look. The world is racing to build AI factories, the largest infrastructure build-out in human history. AI factories are incredibly complex, every layer, chip, rack, network.
All right, while this video plays, we'll just recap some of those remarks from Jensen Huang's speech so far. He spent quite a bit of time explaining agentic AI tools, how it works, also talking about how every time somebody uses AI, an entire rack of NVIDIA technology activates. Bloomberg's Ian King was writing recently about this kind of approach to public speaking from Jensen Huang. He does see his speeches as lectures to educate people about AI and NVIDIA, and certainly the remarks so far do tend to be following that tone. He did also hail Vera Rubin chip just before he left off to show us this video, describing it as a miracle and also praising those people involved. But he had some interesting remarks a little bit earlier about the impact of AI on software engineers as well. He doesn't see this as a threat to software companies, but rather as a multiplier in many ways. He's saying that there are so many agents now, they can use tools more than ever. He said it's an incredible time to be a software company, but software does need to be presented to an agent in a way that that agent can use it. So these are some of the remarks we've had from Jensen Huang so far. This is the keynote address, of course, at the Computex conference in Taipei. There are 1,500 exhibitors present from 33 countries, and they're all hanging on every word from Jensen Huang, but he appears to be showing these videos at some points to catch his breath. But just to recap what he's saying, he says useful AI has arrived. He was also describing situations where people soon or can now use prompts which can result in creation of a CAD file that can then be given to a 3D printer to print difficult to replicate replacement parts for equipment and other pieces of equipment that might be broken. So talking about some of the practical implications of some of these AI tools that NVIDIA is working on as well. So talking about the agent, he gave us quite a long breakdown of how this works. talking about a model, a harness, and tools and skills and runtime. These are all the factors that make up an agent. And he says all of this happens at different places in a data center simultaneously. He described the model as the brain and the harness as the body and the tools in the workshop, really playing into that idea that he does treat these sorts of speeches as an opportunity to investigate the public, to educate the public about AI and NVIDIA more broadly. Jensen Huang returning to the stage now. Let's listen.
Where NVIDIA's computing layers and software and computing stacks are integrated into other people's platforms, third-party platforms and libraries that serves end markets. That was a computing ecosystem. This is an AI factory ecosystem. This is way downstream of all of you. Upstream of me is all of you, and downstream of us is this ecosystem. Because NVIDIA ultimately is not just building a GPU, not just building a system. We're helping customers build these AI factories, these AI infrastructure that is so immensely complex. Each one of these at 1 gigawatt level started at $30 billion. It is at $50, $60 billion, and soon it will be $80, $100 billion per gigawatt. $100 billion into an AI factory. It must work the first time, and it must work right away. The cost of capital is incredible. The complexity is incredible. So as you see, we used to design a chip inside a computer. And then we simulated a system inside a computer. Today, you saw just now, everything was built in Omniverse. I've been working with Omniverse with all of you for a long time. This was the dream come true. So that we can build these gigantic systems as large as the world wants to build inside a digital framework, inside a digital simulator, in a digital world, long before we build the first break ground and put our money to work. So this is our ecosystem. We call it DSX. RTX is for our GPU, DGX is for our systems, and now DSX, basically infrastructure. Because of the work that we do here across this entire stack, including our systems and software, it's the reason why we can work with small companies and enable them to be world-class AI clouds. Every one of these I'm about to show you are small companies just recently. And now CoreWeave is worth $50, $60, $70 billion and growing incredibly fast. Recently, we worked with Nebius, and again, they're growing incredibly fast. Each one of these clouds have incredible customers. Cursor, the software coding company, Black Mountain Labs, Image Generation, World Labs, World Foundation Model, Revolut, the leading financial services AI company, and Shopify. Here's another one. This is Nscale, and their customers are British Telecom, Google. Google is using one of our AI clouds, Thinking Machines, a Frontier Labs company, super exciting. Here's Naver Cloud in Korea, Bank of Korea, Hyundai, so many incredible companies. Here's one in India, Yoda, incredible companies. Here's one based in Singapore, building in Australia, Together AI, AI Singapore. This is one in Indonesia. Each one of these companies are serving regional as well as global customers. AI is going to run everywhere. Every company will be powered by it. Every region will build it. Indosat here in Indonesia. Here in Taiwan, GMI. Here in Taiwan, GMI. It's okay to clap. So, incredible companies, incredible opportunity, but all of them need several things. Of course, they need the computing stack. This entire stack underneath, this is what made NVIDIA famous. All of our hardware and software and libraries, our connection into the world's ecosystem of third-party developers makes it possible for anyone to stand up an AI cloud. However, the AI cloud is so complex now This is the software version. This is the computer science version. The money version, the asset version is what I showed you earlier. It's a giant factory. Having this ability alone is not enough, which is the reason why NVIDIA has become an AI infrastructure company. Now, doing this well and becoming incredibly good at helping customers build AI factories and deploying AI factories is incredibly important. And the reason for that is this. Compute is revenue now. Compute is profit. The absence of revenues and profit is loss. And so it's really important to realize that this is an example of an AI infrastructure coming online. It could be coming online quickly. It could take a while. Its throughput could be high. It could be low. Its resilience and reliability could be good or bad. And its lifetime of usefulness could be long or short. Because this represents 50, 60, going to $100 billion. This curve matters greatly, which is the reason why NVIDIA is such a great partner. Working with us because of our fully integrated capability, we didn't just come up with a PowerPoint slide. We created the entire infrastructure. We connected everything together. We built out billions and billions of it ourselves to make sure that everything works well. As a result of that, our time to first token, our time to first inference, our time to training turned on is much faster. Second, because our throughput per watt, our tokens per watt is utterly world-class. And the reason for that is because we integrate everything, we design everything from the ground up, we simulate the entire system, and we use extreme co-design. Just like I showed you just now with the Vera Rubin rack, everything was designed in order to deliver on this incredible throughput. If your data center, if your factory has 1 gigawatt, it will not have more. 1 gigawatt means 1 gigawatt. That's all the power generation you could do. If you have 1 gigawatt of power, then throughput per watt is revenues, because every token is profitable. Every token is revenues. This is the future. Compute is revenues. Performance per watt is your revenues. Choosing the wrong architecture just because the chips are cheaper doesn't translate, doesn't make sense. You need to make sure that your revenues per watt, the more you buy, the more you make. And so tokens per watt. And then lastly, third is reliability. If you ever get a chance to see these data centers, there are so many moving parts, millions of cables. The ability for all of those computers to work harmoniously, reliably, is extremely low. It is just extremely difficult. We have now been operating very large scale for a very long time. That experience matters. That difference, mean time between interrupts, extremely important. And then lastly, this is very hard. The lifetime of these systems, the software is changing all the time. 4 years ago, which is in the time of Hopper, AI has completely changed. 6 years ago, this is the time frame of Ampere, AI has completely changed. We started out talking about CNNs. Here we are, then we talked about transformers, and then we talked about mixture of experts. Now we're talking about agentic systems. Every single generation, every single few months, the software industry is coming up with new technology. If your architecture is not flexible, if your ecosystem is not rich, then this curve cannot be long. You cannot predict how long your system can last. I can. NVIDIA systems is all over the world. software developers start with NVIDIA CUDA. And by definition, therefore, the life, the ecosystem, the useful asset is going to be much longer. The difference is essentially cost. You could think of it as revenues, but the other side of revenues is cost. If the life of the asset is long, the TCO is low. This is the difference. This is what it looks like when compute. The more you buy, the more you make. Now, all of you are experiencing this with me. Isn't that right? All of your demand, your factories are working so hard. Your people are working so hard all across Taiwan because everybody wants to make money. They realize that AI, useful AI is here. Profitable AI is here. Compute demand is incredibly high, and compute demand is the constraint. And so let's go work super, super hard and help the world stand up AI factories everywhere. This is why it's so important. I'm so happy. Here I am standing in front of you. Vera Rubin is in full production. Vera Rubin is in full production. The supply chain we created for Vera Rubin is twice as large as Grace Blackwell. It's incredible. And what used to take 2 hours to assemble one Grace Blackwell rack now only takes 5 minutes. So not only is the capacity higher, the throughput is a lot faster, and we need it all to support the demand. This ecosystem is extraordinary. Millions of square feet has been put online to support Grace Blackwell and preparing now, ramping up now, Vera Rubin. I want to thank all of you. Vera Rubin is now in full production. Thank you. Let's take a look. Large language models generate answers. Now AI agents can do work.
All right, Jensen Huang taking another little breather there, just saying that the Vera Rubin now in full production, and what used to take 2 hours to assemble a rack in the Blackwell era now only takes 5 minutes. So ramping up capacity there. He also says, well, for more on how AI is becoming a macro theme, let's get over to Anthony Stevens now, who joins us from Hong Kong. Anthony, Korea, Taiwan, really off to the races now, and forget all the stories about geopolitics and oil and the risk around energy supply. What is this telling us today?
We've gotten off to a really strong start in Korea and Taiwan today, and that's based off macro numbers that are seeing AI feed in a very meaningful way. Taiwan is estimated to grow at around close to 10% when they revise their numbers higher. That is a good size growth number for a company, let alone an entire country, right? And you have Korea having exports in the high 50% range, which is the fastest growth before I was born, to be honest. So you have a generational change in the macro of these two countries alongside the growth in AI. And now you're seeing, as the themes kind of mature, you're seeing the AI trade widen out in a very meaningful manner. You saw the names on the screen during Jensen's speech. There are a lot of Taiwanese companies on that list of server makers that take in NVIDIA chips, right? In Korea, you're seeing 20% plus moves on robotic and physical AI names. These are completely new new economy drivers from the AI space that weren't even a factor 2 years ago when TSMC, Samsung, and NVIDIA were rallying. So you're seeing a really broad rally, and that comes in the context of equity markets that are very relaxed about taking this kind of technology risk as overall equity volatility comes down sharply.
Well, NVIDIA CEO Jensen Huang also saying there that the arrival of agentic AI is going to drive business for software companies, not going to put them out of business. Is this something that the market agrees with?
We saw that a little bit yesterday. We saw software rally very hard on the Friday session, up 6% against the flat S&P 500. A lot of these guidance from software companies now moving into the back half of the year is talking about monetizing the AI revolution, trying to find new verticals where AI can empower these software as a service companies. We've heard very similar commentary from the Indian software makers earlier in the year that they're looking to find ways of business process automation, of enabling AI kind of related business lines. A lot of companies engaged in like the regular business of life now need to have AI workflows, and there is a software element towards enabling those workflows. Now, how much of those business lines can be handled by the likes of OpenAI, Anthropic, SpaceX, and what have you, and how many of that business line stays within the software industry? Now, that's up for grabs.
Jensen Huang was also saying there that compute equals revenue now. Does the market agree with that, or is he talking his book here?
Look, from the publicly available data that we have, his statement is valid, right? So you see the indexes for compute pricing go higher. The absolute number of tokens consumed across the world is roofing, whether you're talking about China or the US or Europe. The price per token, people finally have some pricing power. So our token pricing indexes on Bloomberg, the AI adoption indexes on Bloomberg, the number of tokens used, these are all pointing in exactly the same direction. Now, you can argue about the repeatability of that growth, and that is one of the major debates in markets, right? Is it a one-off pop in AI use, and then we figure out how to use AI more efficiently down the line, or is this an exponential curve that just keeps going? That's a big debate. Right now, right here, the demand is insatiable.
All right, Bloomberg Markets reporter Anthony Stevens there breaking down those remarks from Jensen Huang. Let's get back to Jensen Huang now speaking on stage at that Computex event in Taiwan. Let's listen in.
Imagine the complexity, which is the reason why agents is the last computer science breakthrough. It has taken this many years for agents to realize its potential and become useful. It stands to reason that the computer that runs it is the most advanced in the world. This is Vera Rubin. Let's take a look. Can we bring out Vera Rubin, please? And Janine, do we have the racks, the systems? It looks heavy. This is Vera Rubin. Vera Rubin NVLink 72. This is the Grok LPX. At the next GTC, I'm going to talk to you about a lot more of this. Today, we have so much to talk to you about. This is Vera CPU rack, 256 CPUs, all liquid cooled. Let me tell you about Vera in just a moment. This is the Vera Bluefield storage processing system and also security system. And of course, this is our Mellanox networking, the world's first CPO. This is Vera Rubin. Incredible technology all coming together. Now, when we built Hopper, as you know, for pre-training. Pre-training was the most important application, the most important workload we were working on at the time. Then when we worked on Grace Blackwell, everybody said, Jensen, you know, NVIDIA is really good at pre-training. Inference is so easy. Do you remember that? People used to say, inference is so easy. We could do that too. But as you know, inference equals money. And the models, MOEs, are so complicated. And to do it at incredibly high response time, fast interactivity, and high throughput at the same time is incredibly hard, which is the reason why we created NVLink 72. Today, NVIDIA's token cost is the lowest in the world, not by 10%, by X factors, orders of magnitude, all because we did extreme co-design, all because we understood the computing model, the computing pattern of inference, and we were able to create NVLink 72. Now, with Vera Rubin, It is beyond inference. It is now inference in an agentic system. This is Vera Rubin. No cables, no hoses, no fans. What used to take, the last time when I showed this to you, we had cables everywhere. The cables were amazing to look at. But now, there's a PCB in the middle, which connects both sides. What used to take 2 hours now takes 5 minutes. The reliability and the resilience of Vera Rubin is going to be off the charts. This is our Vera CPU tray, the most advanced CPUs that has ever been built. I'm going to show you that in just a second. And this is our storage tray. 2 Vera CPUs, 4 CX9, incredible amounts of software. This is our new LPX, LPU30, the Grok system, designed for very low latency inference. The throughput is delivered by Vera Rubin and extended with NVLink 72. If you want to extend that even further, you can have Grok LPUs. Here, we have the Vera Rubin NVLink, the switch tray. This is the switches in the middle, and this is revolutionary. Because of Vera Rubin's, because of NVLink 72 and the NVLink switches that we created and invented. And this is our Ethernet switches for scale out. What's amazing is we introduced these 2 systems for Grace Blackwell. These 2 systems were created for Grace Blackwell. And today, NVIDIA is the largest networking company in the world. I'm so proud of the networking team. This is such an incredible enabler for everything that we do. I'm going to now talk to you about the next major industry we're going to be part of. Thank you. Janine? Thank you. Zaijian. I think there are 2,000 people back there pulling that. Okay, let's talk about CPUs. Vera CPUs. CPUs built for the age of AI. All of the CPUs until now were created for people. We were the users. We were the users. We were the renters. The way we use CPUs, we live in a world counted by seconds. The way we rent CPUs in the cloud, each one of them, more CPU cores you have, the more you can rent. The economics of the use case of the old CPU and the economics of the old CPU, fundamentally different than agents. Agents are impatient. They don't live in a world that is in seconds. They live in a world that's in nanoseconds. When it uses a tool, it wants the response time to be as fast as possible. When it accesses database, it has to come back as soon as possible. Every moment that the agent is waiting keeps it from going to the next step, the next step, the next step. It is vital that we make the CPUs as low latency as possible, as interactive as possible. So we created Vera CPU for the age of AI. Now, inside our system, it's used for 3 different ways. The first way, of course, is Vera Rubin for thinking. And inside the Vera Rubin rack, there are already 2 CPUs. As you know, we are building and selling millions of Vera Rubins. We have sold millions of Grace Blackwells. NVIDIA already is one of the largest CPU makers in the world. In the Vera Rubin rack are 2 CPUs. One for orchestrating and managing the GPUs, managing the KV cache, dealing with all of the software that runs.
We'll have to leave Jensen Huang at the Computex event there, but there he was showing off Vera Rubin, which he says is in full production. Vera Rubin, built to run agents, has no cables, no hoses, no fans. An impressive sight that it was. If you wish to continue watching Jensen Huang and you're a Bloomberg subscriber, you can do so on Live Go. But that is it for Insight. Horizons Middle East and Africa are up next. Keep it here with us. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. The U.S. and Iran trade messages over the weekend seeking changes to a draft agreement that would extend a ceasefire and open the Strait of Hormuz. But it remains unclear whether progress is made. Stocks rise to a record as investors double down on the AI trade that's powered equities to an all-time high. Oil also climbs as the U.S.-Iran ceasefire deal remains elusive. Plus, Jensen Huang says agentic AI has now arrived. In his Computex keynote address, NVIDIA CEO hails AI as a profit generator propelling GDP growth. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Amar in Dubai. Well, happy Monday. Let's take a look at what markets are doing this morning, starting with U.S. futures this morning up 0.2%. And this argument of equities really forgetting about the Iran war and the Middle East tensions is very prevalent here. We're back to the AI trade. We're back to the story about tech. Now, something that is quite interesting about the S&P, it's obviously up this year 11%. 80% of the gain in the S&P 500 is propelled by 10 companies, all of them in tech. 7 of them are semiconductors. Now, obviously, the biggest 2 that are contributing to this gain are Micron and NVIDIA. We saw Jensen Huang speaking earlier. That is what is leading to this upside in U.S. equities. 9 straight weeks of gains up until Friday. Now, that is a similar image we're seeing across the MSCI Asia Pacific. About 1% higher this morning, already trading, led by, again, I sound like a broken record, the Kospi in South Korea. Both SK Hynix and Samsung have gained massively year to date. SK Hynix about 260%, Samsung about 165% since the start of the year. Now, again, the biggest green we're seeing across the tech image is when it comes to those chip makers. So SK Hynix, Samsung, both trading on the upside in Korea this morning, leading to this gain in Asian equities. Oil prices gaining this morning $93 a barrel, lower than prices we were seeing before the deal came, or talks about a deal came into position. But when we're talking about Brent crude prices, they are higher this morning. Now, again, they've gone above those levels since the first time since mid-April. U.S. Treasuries, the 10-year yields, not doing much this morning, 4.46%, but again, affected by the war in the Middle East, a trend that we've been seeing since the start of the war, really. Now, when we want to look at Asian equities already trading and those PMI numbers we saw coming out of China over the weekend, we have Winnie Su in our Hong Kong bureau. Winnie?
Yeah, good morning, Abir. As you just mentioned, the big story here in Asia today is still around tech and AI. And hence, as you mentioned just now, MSCI Asia up for another record. Now, we have, yes, the Kospi here leading gains, but also worth noting that Nikkei 225 here up nearly 1%. And we have SoftBank Group, in fact, jumping some 10% earlier today. And it's on track to overtake Toyota to become Japan's most valuable company. So it really goes to show how this AI narrative is changing the market landscape structurally. Now you flip aboard and take a look at the Taiwanese market, because we do have the Computex conference going on right now. As you just mentioned, we have that keynote speech from NVIDIA's Jensen Huang, but also we will be hearing from a lot of these other major tech and chip companies as well. So lots of excitement, and you're seeing the market reflecting that already. MediaTek here up 4%, and some of these PC names in Taiwan also jumping in expectation for some collaboration when it comes to working with NVIDIA on new products and further down the supply chain as well. Back to you, Abir.
Thank you, Winnie. That was Winnie Su taking us through what is happening in Asian markets. Now, the U.S. says it conducted what it described as self-defense strikes on Iranian radar. This comes as Washington and Tehran traded messages over the weekend seeking changes to a draft agreement that would extend a ceasefire and open the Strait of Hormuz. President Trump says his proposed deal states clearly that, quote, Iran will not have a nuclear weapon. For more on the latest developments in the war, Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, joins me now. Stuart, thank you, as always, for joining us for those updates. Now, we went into the long holiday in the Middle East with some cautious optimism, but things have seemingly gone sideways over the past week or so. What is the latest?
Yeah, I mean, I think there's an element of that, although, honestly, it's been the same pattern that we've seen since the alleged ceasefire kicked off in early April. So it's this constant back and forth. And we were sort of trying to work out this morning just how many times they've been going back and forth on the wording of this, supposed MOU that exists. We lost count. And this most recent weekend, I think, was a great example where we're going into it. Trump was in the Situation Room on Friday. We thought we were going to get a deal. All the moon music was positive, and then we seemed to be right back to where we started. And similarly, with where you led off on this, which is you have these strikes on Iranian assets, you have strikes potentially coming into Kuwait and places like that. Again, it's a repetition of everything we've seen. So it's really hard to tell where exactly we are in that process right now.
Yeah. And you're right. I was seeing those headlines about sirens in Kuwait being blasted. We also heard about news over the weekend about American soldiers being hurt. But something else that's happening in parallel is Israel's incursion into Lebanon. That is the deepest incursion in decades.
Yeah.
How does that affect the broader peace talks between Israel, the U.S., but also Iran?
Definitely complicates things. And it's not just Lebanon. You're seeing the same thing happening in Gaza as well. So, Israel is pushing forward on, I think it was originally given something like 53% of the territory in that sort of ceasefire. It's now at 60. It says it's going to go to 70. You're seeing the same thing in Lebanon as well, where Israel is trying to expand its so-called security zone around itself. The Iranians have made it pretty clear that's a red line for them. If we have a ceasefire in Hormuz and around the Gulf, then that has to extend to every theatre in this conflict. And that, one would presume, includes Lebanon. I think they have said Lebanon explicitly. Yeah. So definitely complicates the matter. Again, not an easy process to start with, but it's just yet one more thing to worry about.
One more thing to worry about, and returning to wait and see and hear back from both sides on things. Stuart, thank you, as always, for joining us. That was Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, the U.S. dollar is in focus as traders navigate mixed signals, with Washington and Tehran seeking changes to a draft ceasefire extension. However, it is unclear whether they're making much progress. Joining us now is Paul Mackel, Global Head of FX Research at HSBC. Paul, thank you for joining us this morning. Now, I want to note to something in your research. You say that central banks are gaining importance again, and some FX fundamentals are back at the table. Now, looking ahead, what do you think would play a bigger importance? Is it geopolitical events that we're seeing out of the region, or is it monetary policy from central banks around the world?
Well, the geopolitics still very much matters, of course, but I think that the sensitivity to exchange rates is not what it once was. And I think there's definitely a lot of headline fatigue in the currency market as well. So, of course, meaningful headlines will matter, but there's been so many headlines for people to navigate. As I said, I think there's been a certain degree of fatigue that's been coming through. But on the other hand, what's coming increasingly into the frame, we're thinking a lot more about what central banks could be saying and doing next. We're very much getting closer to the point where some of them are going to be raising interest rates in response to what's been happening with elevated oil prices, higher inflation readings, etc. So this, I think, this clash is happening. On the one hand, we're thinking about geopolitics, but on the other hand, that's not going to be driving FX as much because we're thinking, as I said, what's going to be happening with the data and how central banks are going to be moving their policy rates.
Now, you also mentioned the U.S. dollar. It's a big part of research, and the DXY is up today, and obviously it's been moving similarly throughout this conflict. But even before the conflict and into recent years, people were betting on a weaker dollar, but it's kind of defied those expectations. What do you think investors are getting wrong about the structural dollar story, and how does a hawkish Fed affect those prospects?
Well, if you look at the DXY, as you mentioned, I mean, over the last year, it hasn't really done that much. It's been very stable. And I think that you're getting this, again, competition occurring between the bulls and the bears. Now, our view has been is that the dollar is stuck in a soft orbit, and it is relatively soft compared to where we were, a little over 1 year ago. But I think what's, again, in the back of some market participants' minds is how does the Fed fit into this? And of course, we're still trying to understand who is going to be the real Kevin Warsh. Is he going to be the dove that some in the administration perhaps would like to see? Or is he going to be showing his old stripes of being a hawk? And I think this is going to matter a lot. And I think it's going to be dictating the next big move on the dollar.
Yeah.
Now, if we're right that he's going to be relatively balanced, then it keeps that dollar, as I said, in a soft position.
Well, okay, but sticking with the US dollar, but a theme that's emerged a while ago about de-dollarization. Now it's gained momentum in some EMs and parts of the Middle East. But when it comes to de-dollarization, how much momentum do you think it's gained? Or are investors getting ahead of themselves when we talk about the de-dollarization of economies?
Well, whenever the dollar is falling very fast, then it seems to be a very popular narrative. Again, if you go back to 1 year ago in the second quarter, I don't know how many commentators and analysts said that the dollar was going to be in a continuous free fall, because of this de-dollarization. That ran out of steam very much in the early part of the third quarter. Look, I mean, there's some semblance that this is happening, of course, if you're looking at what central banks are doing with their reserves. But on the other hand, if you look at what foreigners are doing with their demand for U.S. assets, presumably that still requires for them to be buying some dollars. You're not getting that same momentum, as I said, compared to where we were 12 months or so ago. So yes, it's happening, but it's very glacial.
Okay, let's pivot to a different currency, the Japanese yen. A lot of headlines about it this year. You see it ending the year at the level of 157. It is around 159 right now. Do you think we're going to see another intervention by the BOJ? Is that something that you're factoring in? Or does the market see the 160 level as a stable sort of benchmark?
Well, I think many people are a bit concerned about trying to push through that potential ceiling right now at 160 because it was a very forceful hand, as we saw in the recent intervention data released just last week. But on the other hand, we're going up against quite an interesting period because the Bank of Japan is expected to be raising interest rates at its next policy meeting. And then not long afterwards, we're going to be deciphering what the Fed is going to be thinking about its policy outlook, that is, for Fed funds. So 160 is on the radar. It's causing this hesitation to push through it. But if you get a mismatch there in terms of monetary policy divergence, well, that is, if the Fed is more hawkish, then 160 may not be a ceiling at all.
Yeah, well, that was what we know about the yen for now. Paul, thank you so much for joining us this morning. That was Paul Mackel, Global Head of FX Research at HSBC. Now, for a look at some of the stories that we're following this morning, Berkshire Hathaway will acquire Taylor Morrison Home Corp for $6.8 billion in an all-cash deal. It is the conglomerate's first major purchase under Chief Executive Greg Abel. The offer of $72.50 per share is a 24% premium to the home builder's Friday closing price. Taylor Morrison CEO Sheryl Palmer will continue to lead the company. SoftBank Group is poised to overtake Toyota as Japan's most valuable company, marking a milestone for the global AI boom and a dramatic reshuffling of the country's corporate hierarchy. The stock is up more than 80% this year, pushing its market cap above $288 billion. And meanwhile, SoftBank has announced plans to invest.
Hello everyone, good morning to all of you. Welcome once again to this live analysis. स्टार्ट करते हैं आज का सेशन. फ्राइडे को नेचुरल गैस में याद होगा एक रेजिस्टेंस जोन पे था मार्केट, वहां से एक सेलिंग एक्सपेक्ट करी थी, थोड़ी बहुत ही आई, ज़्यादा कुछ नहीं. मार्केट ऑलरेडी बुलिश लग रहा है काफ़ी ज़्यादा. क्रूड ऑयल में तो परसों कुछ खास था नहीं, मार्केट फ्राइडे के दिन थोड़ा बहुत वॉलेटिलिटी क्रिएट किया एंड वहीं पर क्लोज हो गया था. आज हल्का सा गैप अप हुआ है, रेजिस्टेंस तो काफ़ी दूर है, देखते हैं वहाँ तक आता है नहीं आता है. मेनली प्राइस गिर रहा था बिकॉज ऐसा लग रहा था यूएस ईरान के बीच में डील हो जाएगी, बट अनसर्टेनिटी स्टिल इज देयर, मोस्टली बिकॉज ऑफ ट्रम्प रिमार्क. ट्रम्प सेज कि जो ड्राफ्ट यूएस और ईरान के बीच में है दे नीड टू बी एडिटेड. सो लेट्स सी, कुछ निकलता भी है नहीं निकलता, बस ये ऐसे ही चलता रहता है. नहीं तो क्रूड ऑयल के प्राइस हो सकता है कंटिन्यूसली इसी लेवल के आसपास बने रहें कोई चेंज होने के चांसेस फिर कम ही रहेंगे। परसों MSCI इंडेक्स रीबैलेंसिंग थी, लास्ट मिनट में इंडियन मार्केट भी गिर गए थे। डॉलर इंडेक्स 99 के नीचे एंड निफ्टी बैंक निफ्टी परसों का ही सेल ऑफ थोड़ा बहुत कंटिन्यू है कह सकते हैं। फर्स्ट 15 मिनट के अंदर ही चल रहा है प्राइस, अभी बाहर निकलता है लास्ट मिनट में सेल ऑफ आया था, क्या रिकवर करेगा नहीं करेगा, नीड टू सी। निफ्टी बैंक निफ्टी बोथ आर इन साइड कैंडल। कल एक्सपायरी है निफ्टी की, तो ध्यान रखना थोड़ा सा। टुमारो निफ्टी 50 वीकली एक्सपायरी फर्स्ट वीक। President Trump asked for several amendment to the deal his envoys reached with their Iranian counterpart. बाकी देखना पड़ेगा क्रूड ऑयल की प्राइस और कहाँ तक जा सकते हैं। मैक्सिमम रेंज स्टिल इज देयर, नॉट एक्सपेक्टेड रेंज के बाहर निकलेगा इतना इजीली। गिफ्ट निफ्टी को देखोगे थोड़ा सा ज़्यादा क्लियर है, काफ़ी देर से साइडवेज बना हुआ है आज। मॉर्निंग पे ओपन हुआ था सडनली, गिफ्ट निफ्टी 23,530 के अराउंड सपोर्ट लिया था। विट सी मे बी टेस्ट दिस लेवल अगेन, फिर से टेस्ट हो सकता है, पॉसिबिलिटी इज वेरी हाई। इसमें देखो अभी डायरेक्टली दोबारा सेल मत करना अभी, ठीक है। ऑलरेडी परसों काफ़ी कंसोलिडेशन किया है यहाँ पर, रेजिस्टेंस ऑलरेडी यहाँ पर एक बार सेलिंग आई थी, परसों सेकंड टाइम ही आई थी, तो थोड़ी बहुत सेलिंग आ गई। यहाँ से नीचे गया नहीं तो टारगेट थोड़ा लग रहा था नीचे तक जाएगा, यहाँ से फिर से सपोर्ट लेके आएगा, बट ये जितना भी पुल बैक आ रहा है उसमें बाइंग के लिए ही जा रहा है वापस। नाउ अगेन 320 300 के ऊपर आ गया। अगर नेचुरल गैस यहाँ से निकलता है ऊपर तो देखना पड़ेगा और कहाँ तक जा सकता है। ये रेजिस्टेंस है, याद रखना यहाँ पर अभी थर्ड टाइम आ रहा है, एक बार ऑलरेडी आ चुका था पहले लास्ट ट्रेडिंग सेशन में, एक बार और आया है, ये थर्ड टाइम हिट कर रहा है, तो ज़्यादा क्वांटिटी मत लेना। लोअर लो बना नहीं है एक्चुअली में। यहाँ से अगर मार्केट ऊपर निकलता है $3.4 के ऊपर, फिर 3.400 के ऊपर, अगर $3.400 के ऊपर अगर ये निकला, इसमें मोस्ट प्रोबेबली प्राइस कैन गो टुवर्ड्स $3.560। तो ये मेजर लास्ट रेजिस्टेंस जोन है, इसके ऊपर निकलता है तो वही MCX में बनेगा, ये आपका अप्रॉक्सीमेटली 5% और ऊपर। अगर ये रेजिस्टेंस होल्ड नहीं होता है तो ले 340 345 कैन गो, अगर ये रेजिस्टेंस ब्रेक हुआ। नीचे देखो मेजर सपोर्ट तो 394 के आसपास ही है, वहां तक आए, वहां से सपोर्ट अच्छा मिल सकता है वापस। बीच में कोई नया सपोर्ट बन जाए तो अलग बात है खैर। और एक पॉइंट ऑफ इंटरेस्ट है ये 315 के आसपास, ये एक सपोर्ट था, ब्रेकडाउन हुआ, रीटेस्ट किया, फिर लेवल के ऊपर निकल गया, फिर सपोर्ट की तरह काम कर रहा है। लॉजिकली ऐसा होता नहीं है कि बार रीटेस्ट करता है मार्केट, बट या द मेमोरी इज देयर फॉर अ सपोर्ट। फॉरेक्स में गैप अप हुई है कैंडल, ओपन इक्वल टू लो एज वेल। फॉरेक्स में देखोगे यहाँ पर मार्केट ने ऑलरेडी, हमारा मार्केट तो यहाँ पर क्लोज हो गया था, इसके बाद फॉरेक्स ने इस लेवल के नीचे ब्रेक डाउन करके रीटेस्ट में क्लोज किया था। आज गैप अप हुआ है तो ये अभी भी मेरे अकॉर्डिंग सपोर्ट ही बने रहेगा। तो आप ये मान सकते हैं नीचे 315 314 314 15 इज अ फर्स्ट सपोर्ट, उसके नीचे निकलेगा तभी और डाउन जा सकता है, अदरवाइज थोड़े चांसेस कम ही दिखते हैं। निफ्टी कंटिन्यूसली फॉलिंग, सपोर्ट तो ब्रेक ऑलरेडी हो चुका है। गिफ्ट निफ्टी में देखोगे 23,640 का दो पॉसिबिलिटी, या तो ये डायरेक्टली मुझे लग रहा है सपोर्ट लेने जाने वाला है या फिर रीटेस्ट के लिए आएगा वापस 23,640 670 के बीच में, वहाँ सेल करेंगे वापस से। ठीक है, दो पॉसिबिलिटी हो सकता है डायरेक्टली गिरता रहे या रीटेस्ट के लिए आए, मोस्टली रीटेस्ट के लिए आना चाहिए, ब्रेकडाउन तो हो चुका है क्लियरली। गिफ्ट निफ्टी में देखोगे 23,300 टू 380 के आसपास सपोर्ट कहीं है। देखते हैं वहां पहले जाता है या फिर रिटेस्ट करता है ऊपर। US says it struck Iranian radar and drone control site over the weekend. गिफ्ट निफ्टी ट्राइंग टू बैक सम प्रॉफिट आई थिंक काफ़ी बड़ा सेल ऑफ आ गया है फॉरेक्स में सॉरी गिफ्ट निफ्टी में भी देखोगे एमसीएक्स में भी देखोगे एनएससी में सॉरी वापस जाता है ऊपर 23,740 के अराउंड डे हाई के आसपास वापस रेजिस्टेंस है दूसरी पॉसिबिलिटी नीचे डायरेक्टली चला जाए सपोर्ट पे दूर है काफ़ी 23,370 340 के अराउंड गिफ्ट निफ्टी में तो कल एक्सपायरी मुझे लग रहा है इसी रेंज पे क्लोजिंग देना चाहिए आज Iranian media Meher reports explosion on Qasim Island in the Strait of Hormuz at two other locations. थोड़ी देर पहले शायद यूएस ने फिर से स्ट्राइक करी है ईरान में ईरान मेहर न्यूज एजेंसी रिलीज अ स्टेटमेंट फ्रॉम द आईआरजीसी फॉलोइंग व्हाट appears to have been a spat of reciprocal strike from both the US and Iran. Per the release, IRGC Aerospace Force in response to recent US strike targeted the air base likely Kuwait's Ali Salim from which the US strike originated from.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Well, SpaceX is preparing for what could be the biggest IPO in history, with a valuation that would instantly make it one of the world's most valuable companies. The listing is already forcing changes across Wall Street, from index rules to investment products, as investors position for Elon Musk's market debut. Let's get more on the details of that story with Danny Lee, Bloomberg Asia aviation reporter. Danny, talk to us about how consequential of an IPO SpaceX will be, and how exactly is Wall Street adapting to the news of it possibly going public?
Yeah, good morning. So SpaceX will be the mother of all public listings, and as you said, one that could be the biggest in the world by quite some margin in the not too distant future. And this is off the back of a $75 billion of funds that's like to be raised, and an astronomical $1.8 trillion valuation. And it's those kind of sums which are going to be testing Wall Street here. The fact that this $75 billion could very much eclipse by more than double what was last the biggest IPO in the world, and that was Saudi Aramco. And it's as a result the kinds of movements in these numbers that are really forcing these market participants to adapt, such as index providers trying to quicken the pace of inclusion for the likes of SpaceX, and even ETF issuers creating a whole line of new products to let people take advantage, and particularly the fact that there are going to be a large number of retail investors, unusually large, up to 30% of the stock allocated to retail investors. That could really help swing things. So, yeah, there's a lot at play here, and particularly consequential with a large number of companies that could still list in its wake.
So speaking of companies that would list in its wake, we know about possibly OpenAI, Anthropic. What consequences are there for other mega listings being lined up here?
Yeah, we would have the likes of OpenAI and Anthropic that also could test the public marketplace from being in the private market so far. And we're talking about potentially really quite large numbers as well. We don't know yet those kind of valuations, but it's just getting that SpaceX IPO right, and for it to become a very smooth process. And given the likes of these outsized founders like Elon Musk dictating things that will help not just give enthusiasm for more listings, especially with this AI trade, but also help really potentially spur on a lot more enthusiasm with potentially another big market rally as well.
Yeah. Danny, thank you so much for that update on SpaceX and what it would mean for Wall Street, but also the other listings in the U.S. as we await for more details. That was Danny Lee, our Asia aviation reporter. Now, that's it for Horizons Middle East and Africa. I'm Abir Abu Amr in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI trade pushes Asian stocks to a new all-time high, even as the absence of an Iran deal drives a rebound in oil. The US and Iran both look for changes to their draft ceasefire agreement, while Israel expands its ground assault in Lebanon. Plus, Nvidia's PC push. The world's most valuable company takes on Intel, announcing a new chip for laptop and desktop computers. Well, a very good morning. Happy Monday. Welcome to a new week. This is the picture in markets as an Iran deal remains elusive. So stocks batting off the geopolitical uncertainty in Asia. They're being driven by AI. And in fact, shares across the Asian continent smashing through to new all-time highs this morning. So the MSCI Asia Pacific Index up more than 1%. Also getting a boost from US futures pointing higher. You've got Nasdaq futures up 0.6% at the moment after Wall Street benchmarks closed at records on Friday. The SOX, it bears pointing out, the Philadelphia Stock Exchange Semiconductor Index on pace for its best quarter ever. Now, where we are seeing a bit of downside this morning is in Europe. Futures here pointing down by 0.2%. And if we flip over cross-asset, you can see a bit why. Because oil is up from a 6-year low. Traders minding events in the Middle East. Brent now trading up more than 2% at $93 a barrel. This is the headwind to the AI enthusiasm. And that oil rebound reviving concerns about energy-driven inflation. So treasuries falling across the curve, yields up, for example, on the 10-year by 3 basis points at 4.46. Now, the dollar, the haven of choice of this conflict, of course, is also slightly stronger for the first time in 3 sessions. So we're up 0.1% on the Bloomberg Dollar Spot Index. Now, let's take a look at the risk events on the docket for today. At the top of the hour, we'll get the latest nationwide house price data for the UK, followed by, at 3 p.m, ISM manufacturing numbers stateside. And then after market close, it's the HP Enterprise earnings, with the bar set very high after that blowout Dell report last week. Well, let's set you up for the day and the week ahead. We begin in Asian markets. Given that they're defying the geopolitical uncertainty, let's go straight over to Winnie Xu and see what she's watching. Winnie, what's going on where you are?
Yeah, good morning, Lizzie. Well, the big story for Asia still is in tech and AI. As you mentioned, the MSCI Asia made another record today, driven by that AI rally. We have South Korea's Kospi here leading gains, with Samsung, in fact, seeing a target price boost from Goldman Sachs on that memory chip crunch. Now, we also worth mentioning that SoftBank here on the screen, you can see up more than 12%, and it is, in fact, on track to overtake Toyota to become Japan's most valuable company. So you can see how this AI boom is really reshuffling these industries structurally. Now, you also flip the board and take a look at what's going on in the Taiwanese market, because we have the Computex going on, and with NVIDIA's Jensen Huang now unveiling a new chip for the PC market. It's really been boosting Taiwanese PC makers here up about 10%, as well as MediaTek also up some 5% on the announcement of the collaboration with NVIDIA to make such new chips. Now, you also flip the board and take a look at what's going on in the currency space, because it is showing a bit of a different picture, a bit more worries when it comes to the geopolitical tensions. Hence, we are seeing that strength in the US dollar pressuring currencies in Asia. With the Japanese yen here getting closer to that level, we watch out for the intervention risk, as well as the won continue to underperform Asian peers because of this forced selling going on with the rally that we're seeing in the South Korean stocks. Now, when it comes to China, we just got that set of data with the private factory gauge seeing a bit of a slowdown in May compared to the previous month. And that goes to show how the overall economic strength remains quite weak and not providing so much of a support when it comes to the currency. Back to you, Lizzie.
Winnie, thank you very much. That's Winnie Su in Hong Kong. Well, let's dive into the geopolitics now, shall we? The US says that it's conducted strikes on Iranian radar sites over the weekend, while diplomatic exchanges continued between the two countries. Meanwhile, Israel has expanded its ground assault in Lebanon, shattering a brittle truce with its northern neighbour. We can get more now with Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. So, Paul, the Trump administration seems to be selling a looming deal, but Iran seems to remain reticent. Who should traders be believing?
Hi, Lizzie. To be honest, I think they're both a bit reticent on the final terms. I think both sides, broadly speaking, do want a deal. Trump and the US have made that very clear over recent weeks. And I think the Iranians do want something, but they both seem to be holding out. Probably trying to negotiate the final terms, whether it's the exact details over how the Strait of Hormuz will be reopened, or how much and how quickly Iran's frozen funds abroad will be unfrozen, and this type of thing. But I think the trend is definitely in the direction of a deal, even with these skirmishes we're seeing, like the ones only a few hours ago that saw the US fire upon missile launch sites and Iran react by firing at the US base that it says carried out these attacks. So it is quite hard to square those things, but it does seem like we are still heading towards a deal. Whether it will be in the next few days, whether it will take a bit longer, we don't know. But clearly both sides do seem to want to get to that point.
But how do you square Israel's ground assault in Lebanon, growing as it is, and real bellicose language coming out of Israel?
Very much. Now, Israel is, its troops are further into Lebanon than they've been for about a quarter of a century. It's definitely a complicating factor, because we have to remember that Iran said that it wants a ceasefire on all fronts, and that includes Lebanon, where Israel is fighting Hezbollah, which is pretty much Iran's most important proxy group in the Middle East. However, Iran has not complained much about Israel's deeper incursion over the last week or so. And in fact, there is a lot of thinking that it's telling Hezbollah to carry on striking Israeli troops and civilian areas in northern Israel, because those attacks with drones and the like have been pretty intense from Hezbollah as well. So it's unclear what's going on there, whether Iran thinks this is a way to squeeze out better terms from the Americans, or whether it's sort of this is kind of seen now as a separate front that's not that connected to the US-Iran talks. We'll have to see, but certainly that war in Lebanon, you would think, could complicate the talks between the US and Iran.
So we've talked about Lebanon, we've talked about the Strait of Hormuz. What about the other two key sticking points here? Frozen Iranian assets and also the nuclear file, of course. So of the assets, the Americans haven't said much about this. They're trying to downplay it because any release of frozen funds is not going to go down well with a lot of right-wing Americans, including some people within Trump's MAGA base. Iranian media is talking about $12 billion having to be released as soon as there's an agreement for an interim deal, and then another sort of $12 billion in a month or two after that. So we'll have to wait and see on that. In terms of the nuclear program, I think the thing they're negotiating right now is Iran's stockpiles of highly enriched uranium. The US wants those destroyed or diluted, possibly taken out the country and sent to a third state such as China or Russia. Iran publicly is reluctant to allow that, wants to keep hold of that HEU, highly enriched uranium, but there does seem to be movement, and there do seem to be signals they can reach an agreement on that. In terms of Iran's future enrichment, that's a huge and very complicated matter, but that looks like it will only be discussed after there's this interim peace deal, so the sides will go into deep negotiations about Iran's future enrichment only once they've got this interim deal in place. Paul, thank you for the update. That's Bloomberg's Paul Wallace live from Dubai. Well, as a result, we've seen oil climbing from a 6-week low as the outlook for a peace deal to end the war in Iran becomes uncertain once again. As Paul says, Washington and Tehran have traded messages over the weekend seeking changes to this draft agreement that would extend a ceasefire and open the Strait of Hormuz. But it's unclear whether much progress is being made. Now, this, as former National Security Advisor John Bolton says that President Trump's push to amend the peace deal with Iran is to get gasoline prices low for the midterms.
Well, I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
Let's get more on the oil perspective. We can speak to Anthony De Paula, our Middle East energy markets reporter. Anthony, good morning. So you've still got oil pretty elevated. If traders aren't pricing peace yet, what does the price suggest that they are expecting?
Good morning, Lizzie. Yeah, I mean, we've seen a big drop-off in prices since most of the region here went on vacation last week for the Eid holidays. So we come back and we're seeing oil at about $93 a barrel, which today is up from a real low on Friday, as we failed to see any real progress in that deal going forward. So oil is still pricing in that uncertainty there. But what we're really seeing, rather than pricing in peace or not peace at the moment, what we're really seeing is that the price is reflecting the fact that those cargoes of important crude oil, natural gas, and refined products are not passing through the Strait of Hormuz. So we're still seeing that major blockage there in Hormuz that is keeping a lot of those tankers, some stuck in Hormuz that were there before the start of the war, and it's really preventing new tankers from getting in. So we've seen a drop-off in production in the Gulf. We've seen a drop-off in refinery production. And so that means that vital crude, the jet fuel that will be important for the European summer, the diesel, that's still not coming through. And so that's what we're seeing in the prices. We're going to see some reactions up and down as we do get more coming out of the peace talks and the potential talks over this ceasefire. So we will see some headline reactions to that, but we're really seeing oil pricing in that continued disruption of crude and other fuels coming out of the Gulf, which is super important for global economies and the oil market, Lizzie.
OK, Anthony, thank you very much. That's Bloomberg's Anthony De Paula, Middle East energy markets reporter. Still ahead on Daybreak Europe. Nvidia's CEO enters the PC market with new chips for Windows, loosening the stranglehold of Intel. But first, Jay Powell's first public comment since leaving the Fed chairmanship, warning about the central bank's credibility. More on that next. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, the former Fed Chair Jerome Powell used his first public comment since leaving the role to warn that the central bank's credibility could be damaged if politicians are able to remove officials over policy disputes.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Let's bring in Bloomberg M Live strategist Mark Cranfield now for more. In the flesh, here with us in London. Welcome, Mark. I wonder, how much do we care about what Powell says anymore? I saw a note this morning saying, yes, there was no market reaction now, but if the credibility of the Fed keeps being challenged and there's a leadership crisis at the Fed, maybe then we'll care a bit more.
We're quite a long way from a leadership crisis at the Fed. The new chairman has barely had anything to say yet. And really what investors care about is how Walsh is going to manage this situation between short-term expectations that inflation is relatively high, might stay high for a long time, but then eventually the risk to the US economy that things start to slow down as people rein in spending. So it's balancing those things. And how is he going to deal with the dissent within the Fed? We're seeing a pretty rare case at the previous meeting where we had almost as many dissenters as we're used to having in the Bank of England. We've never seen that in the Fed before. So Walsh has got a pretty tricky job here. The things that Powell is saying is things that he said before, talking about independence, credibility, those issues which he stands for. They're certainly important. They're not going to move the needle in the markets in the very short term. Investors want to know, how is Walsh going to deal with the dissent within the Fed, and how's he going to get everybody on board to make the right decision going forward from here?
So we've got various bits of data coming out from the US this week. The highlight will be the jobs report on Friday, expected to show more resilience in the labour market in May. What would we need to see for traders to price in a more aggressive shift higher in rates from the Fed?
Well, the unemployment rate is 4.3. It's expected to stay pretty much the same. If there was a surprise drop, say it went to 4.1, for example, we saw it one time last year where it suddenly dropped like that. Traders would go, oh, the employment situation is much stronger than we were anticipating. And you would probably see the yield curve shift up quite a bit on the back of that, because it would bring the urgency forward that not only have you got inflation numbers going up, now you've got the jobs market even stronger. So at the moment, traders are not expecting the Fed to change rates this year, but they are in the first quarter. They're looking for a potential hike in the beginning of next year. They could well bring that forward maybe to the fourth quarter of this year. But it would need to be quite a big change in the unemployment rate. Otherwise, people are going to immediately start moving on to when's the next inflation report. What does that mean? So, yes, it's a big number, but it needs to move quite a lot to really get traders excited.
Okay, Mark, great to have you with us this morning. Mark Cranfield, Bloomberg MLive strategist. Now to some other top stories we're following this morning. The UK Prime Minister Keir Starmer is being forced to publish hundreds of private exchanges between disgraced former ambassador Peter Mandelson and members of his government. Mandelson was ousted from Starmer's team after Bloomberg revealed new details about his relationship with the paedophile financier Jeffrey Epstein. The disclosure could illuminate the circumstances surrounding Mandelson's vetting process. Elsewhere, the Mexican President, Claudia Sheinbaum, has stepped up her criticism of what she calls US interference in Mexico's domestic politics. At a rally in Mexico City, she claimed efforts to destabilise her government have intensified since the deaths of 2 CIA agents in April. Sheinbaum pointed to US charges against 10 Mexican officials, including the state governor of Sinaloa, as the most serious example of intervention so far. So those are some of our top stories from around the world. But coming up on the programme, the Iran war is disrupting more than oil flows. It's also squeezing the chemical feedstocks that make everyday plastics. We'll get you that story next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, we all know that we're paying more to drive our cars and book holiday flights as the Iran war pushes up fuel prices. But another part of the story is each oil barrel is equally important to our lives. Chemical feedstocks are key to making plastics for packaging, the automotive and pharmaceutical industries, and a whole range of everyday products. Philip Hertz, the oil analyst at Bloomberg NEF, one of them, I'm pleased to say, joins me now. So thank you for coming on so early, Philip. The closure of the Strait has really had this huge impact, as we know, on global plastic and chemical markets. But what's it meant specifically for Europe?
Right. So there are 2 points that I would want to make for Europe, but starting off with the global picture, because you already compared it to road fuel and jet fuel, but really the impact on chemical markets is actually bigger than for jet or road fuel. If you look at the overall picture and you take ethylene as the case, which is the largest base chemical embedded in plastics, packaging, etc., you talk about probably 25 to 30% of global volumes being lost. So an incredible amount. Now, the second point, and tying that back into Europe, is that everything happens with quite a severe delay. So the entire impact has not really fully materialized yet. It would first materialize in Asia, because that's really the principal market affected by the feedstock disruptions. And then only further down the line would it affect Europe, which then would have to divert more chemicals to Asia to compensate for that shortfall. So we're not there yet.
So how hard has Asia been hit already?
Pretty hard. I mean, if we talk about, depends on the market, obviously, but if we look at the Asian producers outside of China, South Korea, Taiwan, Singapore, Japan, India, etc., and we look at what the state of affairs was in early May, we're talking about less than half of production really running as per usual. So a lot of volumes there being lost already.
Okay. And then, so what are we looking for the months ahead for European chemical markets?
Yeah, right. So here again, key theme being it happens with a severe delay. We had a lot of mitigating factors so far. Also for Asia, we've had a lot of inventories to run through. So we talk about the feedstock inventories, but also the chemical polymer inventories themselves, crude oil inventories. And plus, on top of that, while the strait has been closed since early March, you still had a lot of shipments arriving until late March. So a lot of the impact still has to materialize. Next couple of months, currently, as things are standing, it's pretty hard to not see how chemical supplies could not be more tight than they are now. Consequently, more pressure on chemical prices, which, to be fair, are already at 70 to 250% of 2025 prices. So they're very elevated, but it has not really transpired for consumers yet. So most likely, the argument is pretty hard to not make that you're going to see elevated consumer prices across different products over the next couple of months, 1 to 3 quarters.
Okay, which brings us back to the CPI story. Philip, thank you so much for bringing us this research. Philip Hertz, oil analyst at Bloomberg NEF. Well, the Bank of England Governor Andrew Bailey says that British banks are still locked out of using Anthropic's powerful new AI tool, Mythos. Speaking in an interview on Bloomberg TV on Friday, Bailey called for an international approach to fighting cybersecurity threats.
The spillovers from this sort of from cyber risk are so big that we can't just have a single sort of national approach towards dealing with the consequences and mitigating it. There's got to be an international approach to this. It's got to be a sensible, sort of firmly based international process, because I think anybody who thought, well, I've dealt with my banks, that's okay, I'm afraid that won't work, because they're all so heavily interconnected. We've got big payment systems, big messaging systems, so that approach won't work.
Now, as chairman of the Financial Stability Board, you're obviously involved in lots of discussions around sort of global efforts on financial stability and looking for risks. And one area, again, where people are looking nervously at the US in particular is the run-up in private credit, and whether there should be more of a sort of a tougher approach to at least having more reporting requirements or other things on private credit. You've highlighted that a lot of traditional banks and institutions are now very much intertwined with private credit. Is that, I mean, are you getting a hearing on that from the US in terms of the risks of that?
Excuse me, yes. I think, look, first of all, private credit is playing an important role. I think it's a good thing. Let's come back to AI for a moment. We've got a very big investment demand going on for it to support the innovation in AI and in the tech sector more broadly, and private credit is an important part of meeting that demand, and that's a good thing. What I think we have to look very carefully at is the word private can be misleading in some ways, because it is not an island on its own. It is connected into the system, into the broader system. A lot of the underpinning liquidity will come from the banking system. It is connected into the banking system. That's not bad. That's inevitable. So it's very important that we understand those interconnections, how they work. Are there points of sort of fragility in there? That's why at the Bank of England we're doing a second system-wide exploratory scenario to follow on the one we did on hedge fund activity in major government bond markets a couple of years ago. So that's the first thing. The second thing I think is important is, and I think this is particularly true with the spread into sort of so-called retail investment, is, do the investors understand the assets they've got and the characteristics of those assets? Because there are clearly, there are some signs of strains in the market. I think they're often described as idiosyncratic. Okay, every incident will have a different story attached to it. But we are seeing some increase in requests, quite a big increase in requests for outflows to take liquidity out. And I think how that plays out will depend on what investors think they, think or thought they had relative to what they sort of now think they've got.
Bank of England Governor Andrew Bailey speaking there to Bloomberg's Stephanie Flanders. Plenty more coming up. We'll talk defence next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI trade pushes Asian stocks to a new all-time high, even as the absence of an Iran deal drives a rebound in oil. The US and Iran both look for changes to their draft ceasefire agreement, while Israel expands its ground assault in Lebanon. Plus, Nvidia's PC push. The world's most valuable company takes on Intel, announcing a new chip for laptop and desktop computers. Well, a very good morning. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets as things stand. Asian stocks are battling the geopolitical headwinds, the uncertainty in the Middle East, but AI driving shares to new all-time highs on the MSCI Asia Pacific Index, now up 0.8%, so pairing some of the earlier gains, but also sentiment getting a boost from American stocks. On the Nasdaq 100 futures, up 0.5% after we already saw a record close on Wall Street benchmarks on Friday. Now, where there is a bit of downside is Euro Stoxx 50 futures down 0.25% now. And if we flip over to the cross-asset picture, we can explain a bit more of why, because we are seeing oil higher, up from a 6-year low. Traders bearing in mind the events in the Middle East. So Brent now up 2.4% at $93 a barrel. That feeding into concerns about energy-driven inflation, so treasuries falling across the curve. You're looking at yields up on the 10-year by 3 basis points at 4.46, and the dollar is stronger again today. The haven of choice, of course, of this conflict, so up for the first time in 3 sessions. Now, let's take a look at the front pages this morning. The FT leading with the story that broke in the past hour, the news from for Windows PCs from NVIDIA. The paper saying that it means the semiconductor giant's going head-to-head with Apple, Qualcomm, Intel and AMD for the first time. So the FT reporting that computer makers including Dell, Asus and HP will use what NVIDIA claims is the most efficient PC chip ever built and pair it with Microsoft's Windows software. Let's flip over to the New York Times, shall we? They're assessing the latest on the talks to end the Iran war and President Trump's influence in global politics. So the headline is Trump hits the stalemate phase of his international interventions and it stings. The paper concluding in Ukraine, Gaza and now Iran, President Trump's early declarations of easy wins have given way to harsh reality. Finally, let's look at the Washington Post. This morning they're leading with the US property market, and the headline is Desire for Privacy is slowly killing this symbol of the American dream. The paper saying that trends are changing dramatically and saying a picket fence in the front yard once signified middle-class neighbourliness, but hardly anyone buys them anymore. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find by going to DAYB Go. Well, let's turn to defence now. And Pete Hegseth has avoided mentioning Taiwan during a speech at the Shangri-La dialogue over the weekend. The US Defence Secretary sought to convince US allies that staying quiet is the best way to project American strength, as he hailed newly stable ties with China and praised defence allies in Asia.
There is rightful alarm regarding China's historic military buildup and the expansion of its military activities in the region and beyond. We share a clear-eyed assessment of that security environment and a mutual understanding that a Pacific dominated by any hegemon would unravel the regional balance of power and undermine the equilibrium we all seek to preserve.
Let's get more now with Bloomberg's Jill Deesis. Jill, I wonder how much America's quieter stance on Taiwan is a win for Beijing, actually.
Yes, well, this was a really interesting speech, Lizzie. I think that, the first thing to keep in mind here is that of these types of speeches given by a defense secretary from the United States, this is the first time in at least a decade that Taiwan hasn't been mentioned, and actually a pretty sharp shift from what Pete Hegseth himself said just a year ago at this event when he mentioned Taiwan a handful of times. I think the other piece of this, too, that's really interesting is the fact that this is coming just a couple of weeks after that Trump-Xi summit in Beijing. During that event, Xi was cautioning Trump over mishandling the Taiwan situation. So I do think that that's the kind of thing that kind of plays in the back of your mind when you're looking at how exactly Pete Hegseth, other U.S. officials are talking about Taiwan on the world stage, or at least in this instance, maybe not talking about Taiwan. Now, what Hegseth has said is that, there's a certain approach that the U.S. is using here when it comes to diplomacy, that the stance hasn't really shifted. It's more of a matter of how they sort of talk about things and present things publicly. But yes, I think you're right that it's hard to not see this as a win for Xi when, again, he just came off that Trump meeting, having those words of caution, and now you don't see that kind of forceful language coming out of the U.S. that you might have seen just even a year ago.
Also, Jill, it seems kind of ironic that the US is stepping up cooperation with Japan and the Philippines, but also criticising European allies of being moralising agents of drama. How do we square that?
Yes, well, Lizzie, I think there's a couple of things to really sort of keep in mind here. Obviously, this all sort of unfolding against the backdrop of the Shangri-La conference in Singapore. It does seem like the Trump administration is putting a lot more focus on sort of that Indo-Asia kind of element of its international diplomacy here rather than Europe. But I do think the other piece of this is that, you look again at that Hegseth speech, while he didn't mention Iran explicitly, it's hard to divorce that from this idea that the Trump administration is quite frustrated with a lot of its European allies over the Iran war, over their inability to use some European, sort of bases and such for U.S. presences, including Italy. So I do think that some of those frustrations with Europe and NATO writ large may be playing into that a little bit. But it is interesting to kind of see how all of that unfolds on this world stage.
Jill, thank you very much. Bloomberg's Jill Desis there. Well, let's get some of that European perspective now, shall we? Germany's top defence official said that while Europe's rushing to rearm, it needs time and clarity from the United States in order to do so. Carsten Breuer also told us that China missed a big opportunity by not sending senior military officials to that Shangri-La dialogue in Singapore.
It's my first time I've seen the Chinese delegations on big numbers and also on small numbers. It's important for me is always that the dialogue is keeping up, that we are able to talk, that we are able to communicate. The size of the Chinese delegation is very small this time, and it's also very low ranked. So I think China is missing an opportunity here to talk within the region, but also to other partners, to other militaries, to other politicians.
Let's talk about Europe. He was pretty critical of Europe. He was praising the Asian allies. I guess the numbers don't really add up because Europe has ramped up its defense spending. What else do you think Europe can do to kind of bridge the gap and perhaps reverse that relationship with the U.S.?
Well, hearing the speech from Secretary Hexet yesterday, I was probably leaning a little bit back, only a little bit, because what he offers as limits, as lines where we have to go, I must say we are fulfilling this with the German military, with the German army. So the defense spending in Germany is at this stage. We are ramping up enormously. When Secretary Hexet last year was here, he was talking about even Germany is doing this. We understood the message. We understood what we have to do, and it's not only Germany, it's also other countries.
Are you concerned about capabilities gap? We know that Europe has said that it will be able to defend itself by the end of the decade. I'm just wondering, in the meantime, where are the vulnerabilities? Where are the capabilities gaps? Some say nuclear could be an area.
For me, it's important that we are in a dialogue about this. So when we are talking about capabilities, we need a roadmap. It's clear that the U.S. is seeing their main effort now here in this region. But what we have to do is, if they're taking capabilities out, we have to mitigate those capabilities. So it has to be clear, it has to be transparent, and there has to be a roadmap in what time frame we have to do. So this is a kind of a little bit of a European dilemma. What we are facing. We have all understood that we have to take care of our security on our own, that we have to take over more responsibility, but we can't build up the needed capabilities that fast like it is necessary. So this process has to be designed, it has to be steered. And on this priority, it's ISR, which is on top of the list. It's capabilities in the airspace. It's capability in space. It's of course air defense. What is in there? It's digitalization, where we have to get much more ahead of what we are doing. So multi-domain operations comes to mind. It's deep precision strike weapons or long-range fires. So this is the top priorities, if you will. So, but you know, I'm a little bit reluctant to talk about priorities, because priorities, when you set priorities, you probably don't look into what is necessary. So we have an underspending in defense budget over years and years. So we have to fill the gap, to build up a baseline, and then starting from there.
So that was Germany's Chief of Defence, Carsten Breuer, speaking to Bloomberg's Haslinde Amin. And Haslinde also got to speak to NATO's military head, saying that the alliance is in good shape when it comes to member states' defence spending. Admiral Giuseppe Cavo Dragoni, speaking to us also at the Shangri-La dialogue, talked about President Trump's demands for Europe to rely less on the United States. Let's take a listen to that as well.
We had a message loud and clear a long time ago. I think that we react. We had a commitment, a strong commitment in The Hague to reach the 5% by 2035. We are on that path. We are progressing on that. We are just doing it. We have a NATO defense planning process to give us the capability that we need, and we will acquire that in time. So I think we are in a good shape. And of course, we as a military side, we don't have any drama going on.
It does seem like there's a lot of aggression in the comments. He talked about how Europe and NATO are weak, delusional, plagued perhaps by immigration. Do you think those comments are justified?
Well, I think that in the past there has not been the proper balancing of responsibility, of burden sharing, financing, and also, authorities' responsibility. We are moving on the good direction. Now, I think that a good reassessment and redistribution of responsibility and burden sharing is necessary. So, but we are on that pathway, and I'm satisfied the way the alliance is responding.
What are you willing to do, and where are the red lines? Because we've been told that drone attacks, for instance, have escalated. Is that not enough to prompt a response from NATO?
Again, a strong and mature alliance need to be able to handle also the escalation. We need to manage that. We need not to overreact. We need to, first of all, try to set dialogue, if we can, just to clear up, just to be sure that it is a mistake and not an aggression. Something is happening right now, and that's basically it. An attack is going to start Article 5. You know that Article 5 has already been called by the United States after 9/11, and we answer pretty quickly. So that's the way it could happen.
NATO's top military official speaking to Haslinda Amin as well there. Well, speaking of all of these things, coming up on the programme, SpaceX's IPO is reshaping Wall Street before shares even start trading. We'll get you more on our deep dive story next. This is Bloomberg.
Is the Vivian Tom clientele?
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that just empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, they are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
What happened was you were out.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Introducing RTX Spark. Everything we've learned over 33 years distilled into one chip. Blackwell RTX GPU with 6,144 CUDA cores, 1 petaflop of AI performance. A custom 20-core Grace CPU built in partnership with MediaTek. Fused by NVLink. 128 gigabytes of unified memory. TSMC 3 nanometer process. 70 billion transistors. And in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
Well, the NVIDIA CEO Jensen Huang says that the RTX Space Superchip will launch in laptops and desktops from brands including Dell and Lenovo later on this year. And it's a fresh shot at the PC market with a new chip designed for AI-powered computers. The processor combines computing and graphics capabilities and will run Microsoft's Windows for ARM software. The move pits NVIDIA more directly against Intel as it looks to expand beyond its dominant position in AI data centers. And Huang also gave an update on one of its key AI processors.
Here I am standing in front of you. Vera Rubin is in full production. Vera Rubin is in full production. The supply chain we created for Vera Rubin is twice as large as Grace Blackwell.
So that was Jensen Huang at the Computex trade show in Taipei. We're staying with tech. SpaceX is preparing for what could be the biggest IPO in history, with a valuation that would instantly make it one of the world's most valuable companies. The listing is already forcing changes across Wall Street, from index rules to investment products, as investors position for Elon Musk's market debut. Let's get more now on our deep dive of the day from Danny Lee, Bloomberg's Asia aviation reporter. Morning, Danny. Just talk us through how consequential of an IPO this is going to be. Put it in context for us, and how exactly Wall Street's already adapting.
Well, Lizzie, good morning. So SpaceX is going to be the mother of all public listings, and as you said, will definitely be on track to be one of the biggest in history. And we're talking about $75 billion of funds to be raised on a $1.8 trillion valuation. That's astronomical, and it's the size of it in which is making and forcing market participants and Wall Street to try and adapt to the largesse of not just SpaceX and the size of the sums being raised, but potentially ones that are coming down the track. You know, as you said, though, the fact that SpaceX is trying to raise $75 billion, it's definitely one that is going to be more than double the previous largest IPO in history, that was Saudi Aramco. And with the fact that these rules are being rewritten, what we are seeing is the likes of these market participants, index providers especially, which are trying to adapt their listing rules to be more inclusive to the likes of SpaceX, to get them on the listings much sooner. And we have even ETF providers as well joining the fray and getting a whole slew of products ready that include the likes of SpaceX in some of their products. And so that's why it's going to be very consequential when you look at some of the offerings that are coming down the track, and when you deal with the size of the kinds of founders out there, you know, to get this listing right could definitely pave the way for more to come, and therefore more attention given this AI rally that we have seen over the years and so.
Yeah, what does it mean for those other mega listings that are being lined up, Danny?
Yeah, the fact that you have OpenAI waiting in the wings, also Anthropic, the fact that SpaceX, if the market can get this right, Wall Street can get this right, adapting to the rules, it really could encourage a slew more of these private firms to join in this capital markets rally, frankly. And so with the kinds of the challenges that are needed to deal with these size of issuances, the key thing is that by getting this right and encouraging more, this could definitely spur on a much bigger rally in equities thanks to this AI boom. So yeah, it's definitely one that we'll have to watch and wait to see how consequential of a listing SpaceX will be to encourage more to follow.
All right, it's a great read, Danny Lee. Thank you for bringing it to us. Bloomberg's Asia aviation reporter on our big take of the day. Now, to some of the top corporate stories this morning. Berkshire Hathaway is to acquire Taylor Morrison HoCorp for $6.8 billion in an all-cash deal. It's the conglomerate's first major purchase under Chief Executive Greg Abel, and the offer is at a 24% premium to the home builder's Friday closing price. Taylor Morrison's CEO Cheryl Palmer will continue to lead the company. Elsewhere, HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. As competition intensifies in Asia's biggest financial hub, Bloomberg understands that HSBC has been deploying its top leadership to win back the market. CEO George Eldhary has sent tailored video messages to key clients across Greater China while pressing executives to engage with roughly 400 major customers ranging from buyout firms to hedge funds. So those are just some of our top corporate stories this morning, but plenty more coming up. We shall bring you some terminal charts to frame your day ahead. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance, we're talking about it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
I expect that the way to think about it is when we get the Straits open, and now there is actually a lot more traffic going through the Straits than there was 2 weeks ago. When you get the Straits open, then it's about 300 nautical miles per day for one of those big tankers. And so the people in Pakistan and India that have refineries that are mostly shut down are going to get their oil, they'll turn the refineries up, and then refined product prices will go down globally, and then it'll spread from place to place. But, you know, really it's like a month or two until everything gets back to the refineries.
Kevin Hassett, Director of the US National Economic Council, speaking there. And in our last few minutes together, I want to talk about volatility, low volatility specifically. We start off with oil. And as you can see, oil volatility is back in its long-term range. Now, flip the board over. That means that as policymakers monitor how oil prices are going to affect inflation data before they act, G7 FX volatility has also collapsed. And what does that mean? Flip the board one more time. Traditionally, historically, macro volatility readings this low have been reliable indicators of a sustained equity rally. So, calm waters could be good news for stocks. But to get all of these charts and all the charts we use on Bloomberg TV, in fact, terminal subscribers can use the function CHRT TV Go. Now let's take a look at the risk events on the docket for the week ahead. On Wednesday, we've got Broadcom earnings coming out. On Friday, the highlight of the week, non-farm payrolls, the jobs report stateside. Are we going to see Fed bets changing if we see real resilience in this labour market, more of it? And then on Sunday, of course, oil in focus, given the geopolitical situation in the Middle East. We've got the OPEC ministerial meeting as well. The opening trade is coming up next. Anna, Guy and Tom will take you all the way to the start of the European cash trade. Have a great week. This is Bloomberg.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the King of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. And now batteries, the only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%. Because it is taking over the electricity generation industry.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Good morning, everybody. It's Monday, June the 1st, so here's what's on the market's agenda. Nvidia's taking another run at the PC market. Macron's charm offensive, well, it's winning a SoftBank investment for France. And oil is up again as US-Iran talks seem to be stuck.
OK, let's talk about these markets. I've been off for a week. I'm not sure that much has changed, to be honest. We seem to be where we were a week ago. Brent is up a little bit this morning. That's the only thing that really stands out. Had been fading towards the back end of last week. Elsewhere, futures are fairly static. You've got US futures up a little bit, European futures down a bit. Euro-dollar barely budging, despite the fact that Isabel Schnabel at the ECB is talking about rate hikes. The countdown to the opening trade starts right now.
So Nvidia's Jensen Huang pouring more fuel on the fire of the AI trade as if it was needed, talking up the demand picture, seeing incredibly strong demand once again, talking about the fact that the Vera Rubin GPU will start full production in Q3. The likes of OpenAI, Anthropic will be using that chip alongside SpaceX. Think of IPOs, of course, tying into that story. And then, as Anna was saying, pushing into the PC market with, in and of itself, would be a major story. And this is another push. So Jensen Huang, again, putting more of a catalyst around the AI trade. Good news for Asia, good news for the NASDAQ 100 futures pointing higher. Europe, though, left in the shade for now.
So where do we leave the AI debate after this? Where are we in this kind of story? Because everything I read over the weekend, the AI bubble debate is absolutely raging right now. You've got arguments on both sides. Which one stacks up the most? It's really hard to say. But it does feel as if, actually, normally you'd say, well, it's going to sort of meet somewhere in the middle. Will it? Is it going to be one extreme outcome, i.e. we rocket higher from here, or do we crash down to earth with an almighty thud? It feels like it's one of those two, but calling it right now, almost impossible.
Yeah, we have a couple of guests, actually, with interesting views on that subject and whether there's value to be found in the tech sector at these kinds of levels, because we're at records in South Korea, record on Taiwan, record in Japan. SoftBank up by 10% in just today's session at one point. That's on the back of just the overall excitement and what they're doing. We'll come to the SoftBank story in just a moment. But interesting, the things that NVIDIA was saying about going into PCs, because this is a place where they operated for a long time. The story around NVIDIA has been so different for so long. But now is this sort of trying to shore up some kind of competition with Intel. It seems they're aiming very much at a very advanced market here, but keeping those laptops really thin with some high power seems to be the aim.
So it's good news for ARM. The architecture will be built on ARM architecture. The chips will be built on ARM architecture. That ties us back to the SoftBank story. Knows 90% of that UK-based company, of course. It's a reminder of just the supply chain grid. grip that NVIDIA has. It's a reminder of the closeness and the leverage they have over their customers. And it's a reminder of just how they are bending the ecosystem to their will. And, of course, they have the balance sheet to do this. So this is a GPU, CPU and the networking on the laptop, on device, with that energy efficiency, which means they can be thinner but more powerful.
And coming later this year. And if anybody is worried about the sustainability of their jobs, it's OK, because Jensen Huang's been saying it's an absolute nonsense. The AI is going to cause unemployment. And so for all the lower value human capital around this desk and elsewhere, that makes us feel better.
It's lovely to have you back.
Sure, that's directed at me, not you.
I think that was just humanity in general.
But it's interesting, he's also talking about these chips taking people's... But he's also, at the same breath almost, saying we're building these things to sort of do the tasks that humans are doing.
Yeah, he says AGI is here.
So which one is it? Is it we're building AGI and we're going to take your jobs, or don't worry about it, we're not going to take your jobs?
Is it just that we'll be greater with AGI alongside us? Is that the dream?
I'm just surprised that Guy Johnson wasn't invited to the $1 trillion banquet. Did you see that he held in Taipei with the Taiwanese bosses of chip companies there? And he held this $1 trillion banquet, is what the local press were describing it as he sat down with the likes of TSMC, MediaTek and others for a dinner to discuss their plans.
Sounds like something you'd have at Versailles, I would have thought, would be the logical place.
Maybe that's
well, there's some logic.
If you're going to build a data centre in Europe, you probably want to build it in France. Probably the most stable power, probably the cheapest power, probably the most connectable power that you have on the continent, because it's definitely a struggle for all those things elsewhere. And it now looks as if we are going to see an announcement later today. It's going to happen very shortly. The SoftBank is going to be building huge data centres in France, 75 billion. Are these going to get built? I don't know. That is the debate at the moment. Costs are rocketing. If you're going to build data centres, the cost of them seems to change on a daily basis and only seems to go up. So there's all kinds of costs involved. SoftBank clearly sees that there is an opportunity in Europe to do this. But there are going to be challenges. You're going to have to raise an awful lot of debt to be able to do this. But it does, if you are going to do it, France is the place to do it. So Emmanuel Macron feels like he's pushing on an open door.
Yes, and our reporting seems to credit him and his personal relationship with Masayoshi Son and the way he has personally gone out to target this and to get this investment for France. And a lot of focus on this sovereign AI theme, because even Masayoshi Son saying, you know, we do a lot of deals with companies. We talk to companies a lot of the time. It was interesting to get an approach directly from a head of state, which seems to be what got this over the line.
And that spending commitment is another potential driver of demand for chips, of course, because those data centres will all have to be stacked with AMD and with NVIDIA's chips. But it does talk to the leadership being taken in France, and it does talk to that energy mix as well, and maybe a lesson for other governments around the world looking to build that infrastructure. And clearly France is, to your point, in Europe now leading on this.
There is a lack of kind of detail on how you finance these things. We'll just park that to one side for a moment, and how it's going to get built and where it's going to build and over what timeline it's going to get built. And there are plenty of data centres at the moment that have been committed that haven't been built. And SoftBank is a classic case. In the States, it's been very slow to build the data centres that it has committed to do so.
It is interesting on that question of energy, some of the Bloomberg credit analysis suggesting that they have the money to do this particular investment because they've got an IPO of SB Energy. This is SoftBank. That particular IPO coming up, which is in the renewable space, and they're going to use some of that money, it would seem, to help them fund this particular rollout. Shall we go back to the Middle East? So we've talked about equities, which in Asia and the US seem to be very focused on the AI story. In Europe, there is maybe more room to be focused on the energy story in the European equity session, and certainly bond markets are still focused on the energy story. So what have we learned? Well, we haven't made a huge amount of progress towards any kind of agreement. There's been trading of messages around an agreement. We had President Trump in the Situation Room on Friday, as you know, Tom, and we thought that maybe a deal was coming. But over the weekend, we have heard very little on that front. The US has conducted what it calls some self-defense measures against Iranian radar and Iranian drone activity. The Iranians say they'll target unspecified air bases in response to this US aggression. But this is all the small-scale stuff that we've seen over the last week, and it hasn't really moved the dial. But in the absence of progress, oil has gone a little higher.
Because we're drawing down inventories, we're getting towards the bottom of the barrel. That at some point is going to be a concern. The Chevron story last week I thought was interesting, and as much as Mike Worth was talking about the fact that we are going to see significantly higher prices as we work our way through the summer. So all of this kind of headline noise is going on. Actually, I'm not sure there's sort of that much noise, but things are kind of changing. On a Friday, we get a comment from Trump. We go into the weekend. On Monday morning, we're a bit more circumspect. But we're trading headlines, and we are basically where we were, and we're basically where we are. But we continue to have a Strait of Hormuz that is closed.
Brent is up 2.4% in the session. It's at $93 a barrel. It's still down 20%. in the last month. Over the month of May, it was down 20%. Goldman Sachs putting out some analysis, which I think was interesting.
Yep.
We may have the full screen quote for you. We see significant upside price risks from potentially more persistent Middle East supply losses. That is expected. This is what really stood out to me. Also, meaningful price downside from weaker demand. Actual end-use oil demand may have fallen more in response to higher prices than expected.
And pointing the finger at China and pointing the finger at Europe, where we're starting to see economic contraction becoming a reality, despite the fact that we're maybe going to see the ECB hiking rates as a result of the inflation that comes from this. So, yeah, it is a two-sided trade at the moment. But you come back to this idea that if you want to manage kind of elasticity, one of the ways you can do that is with inventories. And we've done that so far. And now you're in a situation where maybe you're going to struggle because that inventory drawdown is coming to an end. So what happens at the end of that process? Are we going to go into a more inflationary period? And how much demand destruction are we going to see necessary to maybe balance that out? Let's talk about what we've got coming up on the show. We'll talk about all of this fixed income story with Laureline Renaud-Chatelain, Pictet fixed income strategist. Will Hobbs is going to be here a little bit later on. Brooks McDonald, Asset Management CIO, and Anna Rosenberg, Amundi Asset Management's geopolitics head, will be joining us later in the programme.
OK, let's look ahead to what else we are watching throughout this week then. Today, Computex conference. We're getting the Jensen Huang speech. Of course, that's wrapped up, and we've walked through that, and the conference officially gets underway tomorrow. This was essentially kicking things off today. US earnings with HP, that's after the market, so more in the hardware space with maybe some AI lift coming through for HP. Tuesday, Euro area May inflation data, and on Wednesday we got the OECD economic outlook, the Fed releasing its beige book, US earnings from Broadcom, again in the chip space aftermarket, and on Thursday we get US initial jobless claims, which is the drum roll ahead of non-farm payrolls on Friday.
Looking forward to that. Expectation is that we're going to see a fairly strong number, that the US economy continues to remain in good shape. Let's talk about some of the news we also are watching this Monday morning. EasyJet apparently has drawn takeover interest from an investment firm, potentially shaking up the European airline market as it navigates high fuel costs and the steep competition we're seeing across the continent. Castle Lake said late Friday that it's considering a possible offer, while cautioning that no approach has been made to the airline's board and that it's possible that no offer will materialise. EasyJet has responded in the last few minutes saying that it will consider any proposal, but the board is mindful of valuation and deliverability. HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. Sources say CEO Georges Elredi has sent tailored video messages to key clients across Greater China, while pressing executives to engage with roughly 400 major customers. To support the push, Bloomberg understands that HSBC has hired more than a dozen investment bankers for its China business over the last year. And the UK Prime Minister Keir Starmer will today be forced to publish hundreds of private exchanges between disgraced former ambassador Peter Mandelson and members of his government. Mandelson was ousted from his post as US ambassador to the United States by Starmer after a Bloomberg News investigation revealed his relationship with the paedophile financier Jeffrey Epstein was closer than previously known. It comes as the potential Labour leadership rival Andy Burnham leaves open the possibility of an early general election if he wins power. Which do you focus on in terms of the chaos that is currently raging through UK politics? Is it that first story? Like Starmer's on the way out. This is a postscript, isn't it? Or is it what Burnham does next and how that challenge is shaping up?
Yeah, it would seem that there'd be more at stake for Keir Starmer if we hadn't been through all of the Burnham drama of recent weeks. And that's still unfolding. That's still to play out. And you said if he wins that by-election, and that still is a really big if. I don't think we've had any polling for the last 6 days or so, but 6 days ago it had them almost neck and neck, Reform and Labour. So this is absolutely not a done deal that Andy Burnham returns to the House of Commons. So
June the 18th is the vote in Makerfield then, and the reporting around a potential early general election raises the question as to what is priced in terms of the political risk around gilts. And we've been discussing this with fixed income guests, and a number of guests last week, and gilts have performed very well, in fact, in the last week or so, outperformed some of their counterparts, is that a lot is already priced in. Well, clearly calling a general election early, if that is what transpires, would potentially add additional political risk.
From the manifesto priced in, which is back to the conversation we've been having for the last few weeks.
What it implies, to my mind, is the fact that he believes that he is going to stray quite considerably from Starmer's manifesto. So in order to be able, therefore, to push his own manifesto, he needs a mandate to be able to back that up.
Yeah.
So that would have to be the assumption around that. There's also this talk about Shabana Mahmood becoming the Chancellor, which I think is interesting too, and kind of how you would balance maybe the relationship with the market. She may be seen as a more stable kind of character to be able to lead the Treasury. Or do you keep Rachel Reeves in place, which is another debate that's raging as well. The financial markets, I suspect, will be much more focused as we get towards Makerfield with that latter point.
Yes, we've seen Shabana Mahmood mentioned. We've seen Rachel Reeves continuing mentioned, which I would have thought was unlikely a few weeks ago, but maybe that's things have
Seems to be becoming more likely. Yep.
But other names I've also seen in the mix as well, some of the more longer-serving members of the Labour Party. But 7:13 here in London. Coming up, Jay Powell speaks out after stepping down as Fed chair, warning of the threat to the central bank's credibility. We'll have more of his comments. Plus, we'll return to the AI story with SoftBank's Masayoshi Son due to speak this morning with Emmanuel Macron, the French president, about a new €75 billion investment in France. Up next, we'll be joined by Victor Hjort, who's global head of credit and equity derivative strategy at BNP Paribas. How is he navigating the European dimension to any of these stories?
Fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
The cross-sectional bandwidth of Vera is off the charts. It's the first one to be PCI Express Gen 6. It is also the first one to have LPDDR5 with 1.2 terabytes per second. 2 to 3 times the bandwidth of the highest performance CPUs. On the outside, 3 times the bandwidth on the inside. The bandwidth per core and the bandwidth period is world-class.
NVIDIA CEO Jensen Huang speaking in the run-up to the Computex conference in Taiwan. I mean, a lot of acronyms in there, Tom, but I get the impression it's better than the thing that came before.
Yeah, it's quite good. It's quite powerful,
it's not
the Vera
bad.
Rubin.
Yeah.
But it wasn't just the Vera Rubin. We've got the update as well in terms of this chip that's going to go into laptops and desktops, and they already have signed on Dell and Lenovo for this, so it's a renewed push by NVIDIA. The chip is called the RTX Spark Super Chip, and it combines a CPU, and it combines a GPU, and it combines networking, the kind of setup that you actually have on a data center, but compressed, obviously, for your laptop. So this is another potential significant revenue stream. It won't be as large as the GPUs into data centers, but not insignificant for NVIDIA.
Can I just come back? I think you make a really interesting point, which is I had no idea what he just said, OK? Not a clue. Like, lots of great numbers. It's, as you say, it sounds fantastic. The market, I'm not sure the market understands it either. And we've gone from, why was Micron worth kind of a fraction of what it was like just a few weeks ago, and now it's worth all this money up here?
Yeah.
What did the market miss back then, or what is it missing now?
Well, I suppose the revenues are real. There's concern about the cash flow at the moment, isn't
but
there?
why did
spending a lot as well?
We seem to be changing our valuation assumptions very, very quickly around some of this technology. Micron was worth a fraction, like, what are we up, 600% over the last few weeks? Why have we gone from pricing the market? Why are people buying it? And what is it that they're seeing that has changed so dramatically over the space of just a few weeks to change this valuation metric? And we're looking at this technology, we're trying to understand what it does and what the implications of it and what the cost is and all this kind of stuff. But I think the market's really struggling at the moment to figure out what it all means. Anyway, I think you make a really interesting point about all those numbers and all that stuff. I heard that. I had no idea what he's talking about. Anyway, Victor Hewlett's here to rescue us and help us.
Sure, Victor knows.
No, exactly what he's... Yeah, Global Head of Credit and Equity Derivatives Strategy at BNP Paribas. It's not an unreasonable point, though. We've gone from a market that was kind of tracking up when it came to the technology story, quite aggressively, but then we've gone parabolic with some of these stocks. Nobody's buying puts at the moment. Everybody's more worried about the upside calls at the moment. They want to protect the upside explosion, the potential for this kind of massive gap higher. How does the market look to you structurally, given that imbalance between puts and calls?
Yeah, I think, I mean, strategically, if you're in equities, you want to buy the dips in the market and you want to buy the dips in volatility where you get those opportunities. So I think, context for this conversation is that some of the earnings expectations have also started to go parabolic, right? So you look at something like Kospi, which I think is up 100% or so year to date. The earnings expectations are up 150% year to date. So in some ways, and in some parts at least, it's the market, the equity market, chasing the earnings expectations. So to the extent that there is froth, it's froth in earnings expectations, I would argue.
So it's the E that is. We don't know what the E is going to look like ultimately here. There's a lot of kind of circular financing going on. There's all kinds of other factors here. We don't know how many of these data centers are all going to be built, the expectation built in. So does the E just keep, does this expectation just keep growing? Kind of what happens next, I think, as you look at the patterns that are forming in front of you and the shape of the market in terms of the derivatives area in equities, what are you seeing, and what can you tell us about what you think is going to be coming from this?
Yeah, so there is the earnings element, which obviously is what's triggering a chase, and then there is the technical element, which is retail money. So retail money was completely absent in April when the market started to rally after the Middle East ceasefire, and that's sort of unlike last year's tariff situation where retail was really the thing that lifted equities after Liberation Day. So here you got a different situation. Retail missed out on an opportunity to buy. They're coming in late and they're going for what they naturally invest in, which is familiar tech stocks. So that wall of money enters the story quite late and now sitting on capital gains, and so therefore are feeling wealthy. And then we're going into a period here over the next 2 months where we're going to get a lot of IPOs, which is another potential source of volatility. So the earnings, the retail money, and the IPOs are all, I think, sort of sources of volatility, and I think for most people, volatility on the upside.
So when we get those IPOs then, Victor, does the retail crowd double down on exposure to tech and add SpaceX, add Anthropic, add OpenAI? Or does it move money out of the places where it is now to buy into Elon Musk's vision and those of the other AI names I've mentioned?
So we think that there is, because retail is sitting on these gains and because they were late to the game, we think that there is probably more sources of funds there, but there is probably going to be some reallocation as well. What I think is interesting about the IPOs is that they're being designed in some ways to encourage retail participation, with higher allocations and with relatively small free floats compared to enormous market caps on the valuations. So I think retail participation in these IPOs are there by design, yes, and will be really important for how they perform. And
this goes back to an earlier conversation about whether we're in bubble territory. You talk about the earnings justifying it and other things, retail being late to the party. Talking of parties, I mean, how much is this down to central banks and when they want to remove the punch bowl, or is that too much a conversation from the past and not relevant here?
I think it's the crucial issue, right? If you compare today's market with the late 1990s, which is quite fashionable, there are at least two things that are absent. So, one is the leverage, at least the corporate leverage. The US, hyperscalers are borrowing a lot. Everyone else is not borrowing a lot at all. And so, therefore, the average rise in corporate leverage is so far not there. And obviously, the Fed hasn't started to hike rates. And there is the episode of the late 90s where they did remove the emergency cuts from 1998, and the market was still able to carry on. But once they got into more restrictive territory in 2000, the market struggled. So I think that's absolutely the issue. Okay. So far, we're not there.
So that's the point the guy was making at the top of the show is that there's this continued gap between the energy story and the AI story, and does that close at some point? And you're suggesting that if things are derailed, if this equity market is to be derailed, it will be ultimately through the function of higher energy and the central bank response to that. Do you see that coming? Is that a moment that we need to start preparing for now?
I don't, I don't see the amber lights here quite yet, because, what you want to see in order for the Fed to get to the point where they really want to slow things down, you want to see the economy broaden out. So you don't like the K-shaped. You want the lower end of the K to start to move higher. And, in my credit world, you want to see companies outside of the hyperscaler space start issuing bonds and feeling that they also want to participate in the investment game. So far, we're not seeing that. If you look at industrials, if you look at consumer retail, there is not much leverage going on there, and there's not much investment going on there, which means that the tech space has the credit market all to themselves, if you like.
Okay. Victor Hjort, thank you very much indeed. Global Head of Credit and Equity Derivatives Strategy at BNP Paribas. Really interesting in terms of the comments from Victor there on credit. And obviously, we spent a lot of time thinking about private credit, the exposure to AI software. And Victor actually thinks in his notes to us as well that disruption risk can be faded.
Well, it's interesting to keep reintroducing the Fed conversations. It feels as if it's been absent in the, oil and AI have been such dominant themes.
Coming up, markets pricing in growing inflation expectations then. We will be speaking with Pictet Wealth Management's Laureline Renaud-Chatelain. Next, this is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
You up to the minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
First of June, good morning. So much for sell in May and go away. The equity story in May was very, very strong. And in the United States, that continues this morning. Here in Europe, a little less so. We are lagging once again. FTSE's down by circa 0.5%. Elsewhere in Europe, 2/3% to the downside.
Last week, we saw bond markets trying to price in peace in the Middle East and doing that by sending yields down by 10, 15 basis points, depending on which of the developed market bond markets you were looking at. Today, we see something a little bit different. So pricing in a little bit more inflation fear once again. Oil prices up by nearly 2.75% on Brent. That's a 93 handle, so 93.63. And so yields are a little bit firmer this morning, up by around 3 basis points on some, the French and the German 10-year, I can see at least, Tom.
OK, let's dig a little deeper on that story then, the bond story, and bring in Laureline Renaud-Chatelain, fixed income strategy lead at Pictet Wealth Management. Laureline, good morning. As we think about this disconnect once again between AI and energy, with your lens on fixed income, are the bond markets giving us a clearer read, or at least a more accurate read, of the risk around energy and inflation?
Yeah, good morning. So it's a good comment on the fact that we had core PCE last week in the US, and one thing that really struck us is how information technology inflation is ballooning. And although this is a very small weight in the core PCE index, it is having a big impact. And you've seen also Fed members saying more and more that they're concerned that in the short term, all this AI investment is actually inflationary. We also see that chips are much more expensive than before, and that's pushing up also importing prices. And in this sense, there is some of worries that maybe in the long term, yes, it's disinflationary, but in the short term, that could boost core PCE inflation this year. And that actually has been already kind of priced in, I would say. When you look at short-term inflation expectation in the US, they are still higher than the long end.
If some of that is priced in, do you want to be getting exposure to parts of the yield curve at the front end if there's been some pricing in at this point? Where along the yield curve is potentially looking attractive to you?
Yeah, definitely. So our narrative has been that when you look at inflation expectation or also at what is pricing for central bank, the market has been very aggressive in repricing policy rate higher this year, but also short-term inflation expectation. Now, that has moderated a bit, especially in Europe last week. We've seen a massive rally on one-year inflation swap, so they move almost from 4% to closer to 3.2%. But still, there is some juice there, as you mentioned, and so the part that we prefer, both in credit and in sovereign, is the short-term part of the curve. And that's where we see most room for a repricing if the Strait of Hormuz reopens and then the oil flow normalizes.
Laureline, so we're watching what happens, of course, on the ground in the Middle East and the reopening of the Strait. Oil prices, in the meantime, have dropped considerably from the highs around the Iran conflict, of course. So then we're also watching what central banks do. I mean, the ECB's Isabel Schnabel, for example, giving some quite hawkish commentary, but she does that fairly often. But are you sensing a harder ECB line, harder ECB rhetoric on fighting inflation?
Yes, definitely. We've had, obviously, Schnabel last week, but other ECB speakers, and they all hold the line that potentially an insurance hike is necessary in June, just to make sure that inflation expectations, both from consumer companies, remain well anchored. And in this sense, we have ECB's President Lagarde speaking this week, so we'll see if she's toning down that narrative or if she's endorsing it. But definitely the market now is moving into this expectation of a hike in June. I would say the big question to us is more, do they follow up with another one, maybe in September? The market is expecting 2 hikes from the European Central Bank this year. We expect only one, on the narrative that one will be enough, because then we'll see moderation in terms of economic growth. We have also wage growth that is really not of a concern in our view.
We'll get data on inflation out of the Eurozone this week as well, Laureline. And you mentioned the PCE impact from the tech spending, from the AI rollout in the United States. How will that feed into Europe?
Yeah, so in Europe, as we know, they're not yet building a massive data center, although we have some news that maybe France could be one place where we could see some of them. So far, the focus in Europe will be much more on the energy impact, so both on the second run effect coming from that, the output price also from manufacturing, things like that. AI is not yet a story. And when we hear about the ECB, they are really concerned about these menu prices. So the fact that if you have input prices that go up, then at one point your consumer prices go up as well, because companies have to basically transfer this cost to the end consumer. And so far we haven't seen that, but it's something they're watching very closely. And so are we. So more on the consumer side in Europe, the focus.
Laureline, good morning, it's Guy. Can I take you back to the energy story? You are at the point where you probably feel that there's a lot of speculation and you're being whipsawed on a day-to-day basis. Are you going to make the decision to buy the front end only when the Strait of Hormuz opens? Are you waiting for that certainty rather than kind of speculating on ifs and whens and buts?
So the good thing with the short end is that you get quite a good carry, especially if you look at the US or Europe. And it's a good carry with not too much duration. So you're not going to be way meaningfully impacted if yields go way higher. So that's why we have started to build up this position, especially in credit, high quality credit. That's a place where we like. And then what we focus is really the carry, the quality of the issuer behind that, mostly. And then the question that you are raising is more for duration. When are we going to add longer dated bonds? And at this stage, we're not ready to do that. We are underweight fixed income across the board with an overweight on liquidity, because we want to keep this cash for opportunities, whether on equities or on bonds, once we have more clarity on the Strait of Hormuz.
OK, let's turn to the United States. Data out Friday, first Friday of the month. Last time, payroll surprise to the upside. If you get another upside surprise this time round, how do you think that will affect Fed pricing?
Yeah, so probably the market now, we've seen this shift in narrative, right? Before, there was still this expectation that the Fed could wait and see and basically remain on hold for longer. The market has shifted to pricing some risk of hikes. So one hike is fully priced by March next year. So the narrative could shift into pricing a full rate hike for this year, for example. And so we know that the narrative around the employment vulnerabilities in the US has been one reason why most Fed members have not turned yet very hawkish, but that obviously can shift. And it will be very interesting to watch also the Fed speak after the employment report and see if that shifts their mind and if they're moving into more a neutral versus a hawkish bias rather than a neutral dovish bias.
OK, so that on non-farm payrolls and the potential impact on Friday, of course, with that data crossing. Laureline, before we let you go, back to the credit space, what is the ability for the market to continue to absorb additional issuance when it comes to corporate credit?
I have to say that if you speak about high-quality corporate bonds, investment grade or very high-quality high yield, the ability for now is great. I mean, spreads are very tight, all issuance are overly subscribed. And when you see also hyperscaler have came this year with a lot of issuance, it has been very well taken. So for now, there is no concern. And I think one thing that is clear is that when you look at the overall USIG index, for example, the size and the share of the hyperscaler is very small. So you don't have lots of exposure to this theme. So that's why probably when you have new issuance, a lot of investors want to build this exposure because historically it hasn't been there. It's mostly banks that are the larger issuer in the USIG space.
Laureline, great to catch up. Always appreciate your time. Thank you very much. Laureline Renaud-Chatelain, fixed income strategy lead at Pictet Wealth Management. Talking of the Fed, a warning from the former chair.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Nice tucks. Former Fed Chair Jerome Powell used his first public comments since leaving the role there to talk about Fed independence. We're going to talk more about those challenges later in the show. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back. This is the opening trade. It's Monday, but it is the 1st of June, so the start of a new month and a new week. We have European equity markets, though, looking fairly negative this morning, in contrast to what we see over in the States and in Asia. Asian equity markets touching new highs on various markets. US equity futures guy pointing higher. NASDAQ futures up by 0.5%. A lot of tech chat this morning. Europe, of course, focused more on the oil story, perhaps.
So that feels like it's the difference, doesn't it? Asia and the US focused on what is happening with the tech landscape. We're focused here on what is happening with the energy outlook, and that is the challenge that Europe faces, maybe some of the other regions of the world. Talking of which, oil is up this morning. The US says it conducted strikes on Iranian radar sites over the weekend. Washington and Tehran apparently exchanged diplomatic messages seeking changes to a draft agreement that would extend a ceasefire and open the Straits of Hormuz, which is still closed as we speak, partially closed. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa, joining us now. Paul, in the last week, we have seen oil prices coming down. On what, I still haven't quite figured out. How much should we believe in terms of the messaging coming out of the White House on the possibility of a deal getting done and the Strait being reopened?
Hi, Guy. I think you won't be the only one that is a bit confused by this. These talks are dragging on, and every time Trump or even the Iranians signal that something is close, we just don't get there. And of course, we had Trump on Friday saying that, you know, he actually said himself that he would make a final determination, as he put it, before he went into a White House Situation Room meeting with his top advisors over Iran. Yet we're still not there yet. But I think the trend line, and this is why oil was down so heavily last week, with Brent down about 11% to, you know, roughly $93 a barrel. The trend line is towards the two sides reaching a deal. I think traders, with a lot of justification, have decided that Trump does not want to revert toward that. He needs a deal to somehow extricate himself and U.S. forces from this conflict that has sent energy prices soaring, that is increasingly unpopular with Americans, that has pushed up inflation globally. And the Iranians, too, they seem to, their messaging on the whole makes out that they also want a deal to end this war. But the two sides are still negotiating over the terms because it's very complicated. I mean, you talk about Hormuz. Hormuz itself is an issue because although the deal, the framework as we know it, will be basically a 60-day extension of the ceasefire, with Hormuz being reopened and the U.S. lifting a naval blockade of Iranian ports, we don't know if Iran has committed yet to free maritime traffic through the Strait. If it doesn't, then I think the U.S. is gonna hold out, because it's hard to see Trump and the U.S. accepting a deal that reopens Hormuz, but not in a way that allows for free maritime traffic. There's also Lebanon, which is an issue. Iran wants a ceasefire there. Israel is reluctant to do that. And then there are also issues over Iran's nuclear program. So there are lots of details that I think are still being negotiated now, and that's why we're seeing the hold-up.
And Paul, on the complexity of Lebanon, I mean, there is demonstrably no ceasefire now. In fact, Israel is pushing further into Lebanese territory. To what extent is that a risk as well, in terms of derailing these potential talks, or these current talks, and a potential deal?
I think you're exactly right. I mean, there's no way you can say that there's still a ceasefire in Lebanon with the scale of fighting that's going on, and the IDF now, further into Lebanon than it's been in about a quarter of a century, and they captured the Crusader-era Beaufort Castle over the weekend. So fighting there is intense, and it's devastating, swathes of southern Lebanon. But interestingly, Iran is not criticizing this ground invasion, at least in the sense of it potentially derailing the talks or scuppering them. It's not saying that. And in fact, there is some thinking that it's telling Hezbollah, which is a key ally of its, to up its intensity of attacks on the IDF and northern Israeli communities. So it is possible that, this war in Lebanon, devastating as it is for the people on the ground there, can kind of carry on without really hurting the US-Iran talks.
Paul, thanks very much. Thanks for the update. Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa, joining us there from Dubai. Let's turn now to today's markets in 3 minutes on the opening trade with Ven Ram, cross-asset strategist for Bloomberg Markets Live. And he is, this week, right here in London. Ven, really nice to have you around this desk with us. So we were hearing there about everything that's happening in the Middle East, slow progress. The oil prices are watching that story. Bond markets are watching that story. Equities are arguably watching a completely different drama unfold, and that is around AI. And it all seems to be upside. US stocks, futures pointing again higher. Ven, what do you make of US stocks?
Morning, Anna. It's absolutely spot on. I think that the AI is the overpowering narrative. Now, if we had sat here in January, early January, thinking, what are the main drivers for this year, hardly anyone would have pointed to an escalation of Iran conflict to the point that we got to a war. And yet we got a war. And what happened? I mean, equities fell 10% from the top, and that's about it. And they shrugged it off. The point is, it was an unknown. And the equity markets shrugged it off. So if an unknown cannot spook the markets, what is going to spook the markets? And I do worry about that. My point is that, stocks are appearing increasingly invulnerable. And that in itself is a sign of, caution, right? Because, equity multiples have been stretched, and you've got, there is no earnings recession in sight. So, but this froth is, the longer it continues, the more it sets us up towards a bubble. And that worries me a lot.
But we're not in a bubble yet. What are the chances of getting to a 5% US 10-year yield?
Well, I think that, if you look at the Fisher equation, Tom, so you've got your yields have got to be somewhere near nominal growth. You've got, real growth of 2.5% above trend, and you've got inflation running well above 2.5%. So what does it mean for the 10-year yield? It's got to be higher than 450, and I think 450 is not reasonably cheap or excessive in valuation. But if you look at the front end of the curve, we are doing 405, and that is excessively optimistic, right? I mean, the Fed has got to raise rates. You've got inflation, which is a big problem, and the Fed has been missing the inflation target for the better part of 5 years now. Yeah. So, you've got to raise rates, and 405 just doesn't cut it.
Ben, is there excessive optimism in the gilt markets? I'm looking at yields that have come in about 40 basis points since around middle of May. Gilts, the 10-year, the 2-year, they've rallied in the last 15 days or so.
I think they've rallied in conjunction with German bonds, and I think that some of it is justified because the Fed, the Bank of England, is not going to raise rates nearly as much as the markets are thinking. I've been saying for a long time that 410 is the level that the Bank of England will probably get to, because that's what the Taylor rule equation says. And the markets are pricing in 410 at the moment by the end of the year. But even so, I think that the 2-year yield at 420, 425 is not doing justice. I think you need to factor in the higher inflation, the persistence of inflation in the UK. And that persistence component suggests that yields need to be higher, not lower.
Does that mean that the market is overestimating hikes in Europe and underestimating the need for hikes in the US, Ven?
Yeah, absolutely. I think that, the markets are thinking, maybe there's a 50% chance that the Fed will raise rates. And I don't think, I think the markets are smoking something they shouldn't, because it's not happening. I mean, the Fed needs to raise rates because of the nominal and the real growth that we talked about.
We will certainly watch the politics. Ven, thank you very much. Ven Ram, cross-asset strategist for Bloomberg Markets Live. Remember, you can get up-to-date analysis and insight from Ben and the rest of the market's live team. MLI Vigo is the function, as always, on the Bloomberg terminal to get their contributions. Let's get individual stocks on the move this morning, or set to move. Chloe Melly has a rundown. Chloe.
Good morning, Anna. HSBC is going to be in focus today as it is trying to revive its investment banking business in Hong Kong. It is said to be hiring loads of bankers there and also sending top executives in the region to try and regain market share. And all of this is happening as it is facing intense competition in the Hong Kong IPO market. And some are saying that the setbacks faced by the bank in that region are due to some of the aggressive cost cutting that the CEO has been pursuing in other regions like the US and Europe as well. And some analysts are saying, for example, that the downsizing has been quite difficult and that it might have hurt some of the competitive advantage that HSBC has. So that's definitely one in focus this morning. Moving on to another big UK name, and that is EasyJet, which this morning has said it hasn't had any discussions about a potential offer from Castlelake, which is an investment firm that said on Friday that it was considering a potential offer. And EasyJet has said it is confident in its strategy going forward and that the offer was highly opportunistic because of the very depressed stock prices. We can see here that is definitely the case. It has been underperforming Ryanair, its closest rival, by quite a large margin. But we'll see how the market reacts this morning to this latest update on that potential offer. And finally, UMG, another M&A story, is in focus today. It has Universal Music Group has rejected an offer from Bill Ackman's Pershing Square, saying that the offer was not in the interest of either the shareholders or the artists that UMG represents. And so we'll be watching out for any update there and any reaction from the market on this.
Chloe, thank you. Bigger picture here in Europe, then, we'll be watching what happens with the oil majors as oil prices up by 3%. That could be an area of green, but most of Europe expected to be in.
It's interesting. London's expected to underperform today, despite the fact that actually maybe you've got those oil prices going higher. So it's not an oil-related story that's going to kind of affect that market. What other factors are going to be kind of in the mix on London?
Chip makers in focus in terms of what we've heard from Jensen Huang, but also the commitments, investment commitments from SoftBank. So Schneider Electric, Legrand over in France may have some skin in the game when it comes to the data center story.
Yeah, they're working with with NVIDIA, I think, on some of that, with SoftBank, on some of that data center investment. So that's interesting. Continue to watch those oil prices then. Some of the latest lines coming through from Israel, just sending them a little bit higher in the last few minutes. Coming up, but on the opening trade, we will bring you the start of the European equity trading day. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
When it matters, investors turn to Bloomberg surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg surveillance. We're talking about it.
What happened was you were out.
income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Okay, welcome back. A couple of minutes to go until we start the new month, the new trades, 1st of June. Let's talk about what the back end of May looked like. May was incredibly strong, generally for US assets in particular, but for US assets in particular. Friday session looked a little bit like this. We went out there for Europe. We closed a little lower, so there's a little bit of downside. Maybe that's why we're seeing what we're seeing in futures this morning. But Europe feels like it's focused on the energy trade. The rest of the world definitely focused on the AI trade, Tom.
Yeah, European futures looking like they're left out in the shade, pointing lower by 0.3%. There was upside last week for the European stocks. You did end the week in positive territory, modestly, but today pointing lower by 0.3%. The FTSE 100 futures pointing lower by close to 54 points, not getting the lift from higher oil prices. Brent is up around 3% so far in the session. DAX futures over in Germany, of course, pointing lower by around 0.3%. We'll be watching energy, we'll be watching chips as well, of course, Anna.
Yeah, absolutely. We'll certainly watch chips. Let's have a look at some of the other individual stocks we'll watch. We'll start off with the chip story, though. What will the read across be from all that AI enthusiasm in the US? We see it in the futures. We see it in the session overnight over in Asia. The likes of SK Hynix and Samsung and SoftBank all continuing the strength that we've seen of late. We've had lots of news lines out of NVIDIA, including a move back into PC markets, so we will certainly focus on the chip sector. EasyJet in focus on the back of what seems to be quite a lot of interest from Castle Lake. No firm conversations about any kind of takeover. That seems to be the line from both sides. But if we did see an offer from Castle Lake, it would have to be substantially higher than where the stock closed on Friday. So that is interesting for us to watch. And Roche is in focus as well. Roche moving its weight management drugs to phase 3. We will watch how that influences the market.
Okay, the market. Let's talk about the market and figure out what the open is going to be looking like. The FTSE 100. Let's start there and see what's happening. We are expecting it to open a little softer this morning. We start off with an unch, a big green unch, so at least it's green. The expectation was that this would be a market this morning that would open a little softer, and maybe that's what we're going to see. So we're just ticking down a little bit. But the expectation was that maybe we would see the FTSE 100 down by around circa 0.5%, and we're now beginning to edge in that direction, down by 0.2%. Elsewhere in Europe, we're expecting maybe a slightly more positive picture, but we are looking at very positive, well, no, I'd say very positive. We're looking at upside over in the United States. The tech trade is expected to drive the Nasdaq up by maybe another 0.5%. What are we seeing in terms of the sectors, Tom?
4 sectors currently in positive territory. Energy at the top of the list, gaining 1% on high oil prices, of course. The tech sector is playing that role. Renewed optimism coming through from SoftBank's investments in France, but also what we're hearing from Jensen Huang in Taiwan. Tech up 0.8, just shy of 0.8%. Telecoms up 0.6 as well. And basic resources getting 5 sectors right now in positive territory. Utilities has just joined that pack. Very modest gains coming through there. On the downside, biggest losses coming through for healthcare then. That sector down 0.8. Media, which had been the leading gainer across your sectors on Friday, is currently amongst the biggest losers, down 0.7%. Anna.
Yes, I mean, don't have much to add in terms of the sector picture. It is a day where oil prices are up by 3%, and so energy stocks, quite understandably, go higher. And on the technology side, we were watching to see what read across there'd be, and broadly, we are stronger. Looking for what we'll have more on Schneider Electric in just a moment, but looking to see if there is read across from the SoftBank story, the NVIDIA story. Lots of positivity, of course, around that sector at the moment.
Nokia is gaining 3.6%, so they got the optics part of the business, and that's been a very...
That was down quite heavily on Friday, wasn't it?
That was possibly some profit taking because the run up in Nokia has been
extraordinary, yeah. So I think it was down quite hard Friday, so it's bouncing back a little bit this morning. Certainly not quite filling the gap towards the back end of the session that we saw. So on a 2-day basis, that stock's still down by 3.5%. So it's interesting to see that was bouncing back. Where SAP was up on Friday, after we saw some more positive more positive news around what is happening in the SaaS sector. So quite a mixed picture coming through from technology this morning.
OK, let's get into a conversation about where these markets go next. Will Hobbs, Brooks Macdonald CIO, joins us on set here in London. Really nice to see you, Will. Thank you for coming in. We'll get to your thoughts on what's going on in the UK, because that's really interesting a little bit later on in the conversation. But thinking broadly about some of the themes we've been throwing around this morning, I mean, AI and AI optimism driving Asia, driving US stocks, US futures pointing higher as a result of that. But you're not necessarily convinced by the rate of adoption we're seeing for AI technology. So tell us how you invest in AI with that sort of hesitancy in mind.
Yeah, no, this is the question of the moment, isn't it, I think, Anna? And one of the things you've got is I've always got in my head that idea of the William Goatsman analysis that looking at bubbles in the past, they're much rarer than they might appear, and quite often when you find big stock surges, it's actually a step change in technology. And what these valuations bring is they suck in talent and capital to solve the problems at the frontier. You've still got this very jagged frontier in the capabilities of the latest generative AI. So that gives us question marks about where this could go. But ultimately, I think now you're still sort of trying to work out how to invest in the picks and shovels phase, which, you talked about all the memory stocks, these incredible earnings growth stories, and how now to look at the next phase, which gets us a bit into the UK, of how this impacts the knowledge economy and what are the big areas that it could change.
And so you think that actually maybe the market is too focused on the current winners from AI, and actually it should focus on the companies that are going to win from adoption?
It's not too surprising, though, in a way, because this is where the earnings growth stories are at the moment. I mean, the earnings upgrades for Korea alone, astounding. And so that's really backing the earnings growth. And what you're finding so far, and this is where we don't quite know the answers, is that demand is totally overwhelming plausible supply. That's conferring massive pricing power on the memory stocks and various other parts of the supply chain. How long that lasts for, we don't know. But in a way, yes, I think if you're thinking to the medium term, you've really got to think not just AI. There are a broader batch of technologies associated with the information revolution, which I think are mostly going to be deployed in the knowledge economy, hence the UK and various other areas. And that is some of the areas where you've got to think about some of the adopters of this new batch of communications and other technologies, how they might coalesce in surprising ways and change the rules of the game.
So will that suggest that you assume, or that you're seeing evidence that the adoption is worth the cost, that they're getting that return on investment? Are you seeing evidence for that?
Tom, that's a really interesting question, because so far we're looking at patchy evidence, and obviously everyone's trying to look at this, again, the problem you have a little bit is that while that frontier remains quite jagged, you have quite a lot of trouble seeing generative AI migrate out of sort of relatively mundane tasks like generating paragraphs, where it's annoying but not disastrous if it hallucinates, further up the chain, and then you get into problems. But you are already seeing productivity statistics in the US pick up. That can't be generative AI, and that's already, the trend is higher. I think the trend is already higher in the UK if you use the right statistics on labour force growth. So in a sense, this predates, and that would not be too surprising. You've got machine learning, the generative AI forebear, already being deployed in quite widespread terms, and there's quite a lot of areas where that would be increasing productivity. Generative AI, if it comes off, could just be the cherry on top of that productivity trend already rising, if that makes sense.
Is there more upside in getting exposure to services that adopt AI or the industrial space, particularly as we think about physical AI and embedded AI?
My hunch is services, Tom. I think that's
because it happens more quickly, because it's easier to adopt, because the gains are easier to accrue?
I don't think the gains will be easier to accrue necessarily, but I think in a sense this is the area where there is most to go for. The cake is potentially biggest. And that is where, if you look at manufacturing now, I mean, you're already operating dark factories in China where the lights never come on. How much more productivity can you get in that space particularly? There are areas and there are bits to squeeze, but it's the services sector, I think, where there are most jobs and not necessarily jobs at risk, but superpowers to confer on the various employees. And I think ultimately that means that what you may find in the services sector, particularly things like legal, financial services, is actually, because your marginal cost to serve come down, more people get access to legal, financial and other services. The bottom end comes down as such, and so you get supercharged like that way.
During most of these booms, you need the cost to come down for wider adoption. The cost is going up, not down right now.
Yeah, no, that's very true. And I think that is why I would talk a little bit about, you know, I always think back to this that amazing study by McKinsey, they were asked by AT&T, and you guys know this well, to look at the mobile phone market and where it would end up. And this was from the early 1980s. And McKinsey, totally understandably, turned around and said, by the turn of the century, it's going to be about 900,000 phones worldwide. That was out by 100 times. And the reason for it was because from their vantage point, they thought these phones were ridiculously heavy. You could see that. The batteries were short. Coverage was wrong. So we just don't know which problems are going to melt away first to make our current forecasts incredibly wrong. But what we would say is that while you're getting, you know, all of this talent and capital sucked into the space, I think there's a good chance that some of these problems will be solved and costs do come down. You just don't quite know when. And so your diversified pitch is a sense a little bit.
But at the moment, the market's buying the picks and shovels, which are unbelievably expensive. And do they have to come... The inflation rate in the input cost side into the AI story is very expensive. And if you look at the cost of influence, we are effectively subsidizing it, because you can tell that because companies like Anthropic and things like that are losing money.
Yeah.
So kind of...
Yeah, no. Whether this trade comes off or whether, you know, I do think that, you know, Damodaran talks about this a little bit, doesn't he? The sort of big market delusion. You've got 5 guys coming into a poker table. All of them think they're going to win big. There's going to be some disappointed people. So some of that infrastructure play, I don't think we have to bet hard that it's all going to come off.
But to your point is you've got to see wider... We want to see wider adoption.
Yeah.
How do we get costs down to generate that wider adoption? Because these guys have to make money to justify the investment that is being made.
At some point...
Are we going to pay the higher price?
I don't think so necessarily.
So prices have to come down?
If prices have to come down, and if you look at the studies of the past, you tend to find that these technologies, they end up mostly going to the consumer, don't they? Either via the sort of consumer surplus or directly so. It's just the path to that point. But I'm not sure that you're going to find massive pricing, you know, because if you look at these models, at the moment, they're not doing anything that much different from each other. There's not sort of one that's really standing out relative to the others. Therefore, how much pricing power can they have when it comes down the road? So I do think that some of this, there is going to be some disappointment in this area, but my bet is that the broader industrial revolution, the information revolution, that is going to mean a more broad-based kind of story in stock markets.
And part of that will be more productivity. And for that reason, you don't think we need to worry as much as we do about debt levels in European economies, including the UK, where you say that the drama around gilts is quote-unquote hysterical. Explain your thinking.
No, it has been hysterical, I think, Anna, and that's been the case for some time, I think, in many ways. And, you know, some of that is down to, you know, the UK has had this kind of lull in economic growth. Some of that was down to the fact that we were at the epicenter of the great financial crisis and we were woozy as an economy for some time afterwards. But my sense is that that's been the wrong narrative for some time now, and actually that if you look at the trend in productivity growth, not taking the labour force survey, but taking the HMRC data plus some self-employed statistics, the growth in the labour force is less, therefore the trend in productivity is more. And if you assume, you know, many of the worries about the debt pile in the UK, for instance, are an assumption or an extrapolation that the growth of the last decade is all we're ever going to have. Therefore, yes, you worry about the debt. But if you go to, you know, your post-World War II, pre-GFC trend growth rate, then your debt to GDP disappears to zero in a space of 50 years if you don't need more of it. So I just think a lot of this is a bit of a red herring in a way, and that the UK has had way more debt to GDP in the past, and it hasn't been a problem. It's all about productivity growth. And the UK is big in the knowledge economy. We are a knowledge sector superpower, as you guys pay testament to.
That's nice of you to say so.
Sure. You just wonder whether the AI is doing the jobs or we're doing the jobs. We'll park that thought.
I don't think someone's got to do a job, haven't they?
Let's hope so. Will Hobbs, Brooks McDonald's CIO. Thank you very much indeed. Quick look at the Core 6. This is what we're looking like this morning, just to check out what is going on around Europe. As you can see, defence stocks are down. Some of the safer trades, like Nestle, are also softer. Luxury, a little higher, but look at Schneider, up by 2.5%. But let's cast our eyes upwards and figure out what is happening with EasyJet. Chloe Melley's got all the details.
Good morning, guys. EasyJet is seeing a huge boost this morning with shares up more than 11% after it said it hasn't had any discussion with the investment firm Castlelake, which said on Friday was considering a potential deal for EasyJet. And so EasyJet has said that it is very confident in its strategy moving forward, and that the timing of that approach was highly opportunistic given the struggling share price. And so we are seeing a huge boost in the shares this morning for EasyJet. Moving on to another sector that is in the green this morning, and that is data center equipment. And so we've got a couple of news there. We've got a big SoftBank investment in French data centers, and also Nvidia entering the PC market. And so there's a lot of optimism, a lot of positivity around that tech sector. And so this is really feeding through into those data center equipment firms, especially those French ones. So Legrand, Schneider Electric seeing a big boost this morning, but also other names in that sector like Siemens Energy also getting some of that boost. And moving on to Universal Music Group, which has rejected an offer from Bill Ackman's Pershing Square, and it is down as a result this morning about 1.6%. This is an approach that was already seen with quite a lot of skepticism and had received a lot of pushback from top shareholders. And so we're maybe at a bit of an impasse there, and that explains some of that weakness. And finally, let's end with more M&A, and we've got the Finnish company Hiab, which has bought the company Labrie Environmental Group, which is a truck maker, for about $1 billion. And so that is really boosting that stock this morning. It really gives it access to the North American recycling market. And so we are seeing shares up about 5% for that company this morning.
Chloe, thank you. Chloe Melly this Monday morning with the stocks that are moving. A bit of M&A activity then to talk about, either in terms of what we've heard confirmed or what is being much talked about. We'll get to that shortly. We'll also talk about some of the tech news. Coming up, SoftBank makes a €75 billion bet on France. Could it become the new European epicenter of AI? That story is next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back. This is Monday, the 1st of June, and European equity markets look pretty mixed, actually, which in itself is better than perhaps we'd anticipated. The futures picture was pretty dire earlier on, but US futures point higher. The Asia session has been positive, although all of that, though, has been focused very much on technology and AI enthusiasm. Here in Europe, the downdraft that you would expect from the higher oil prices we're seeing this morning is cushioned by, of course, Guy, energy stocks going higher, up by 1%, and a bit of technology and a bit of M&A.
Bit of energy, bit of... Yeah. Does energy feel like a net negative for Europe this morning rather than a positive? Kind of, yes, the energy stocks are higher, but is that what's weighing broadly on sentiment, maybe across Europe? Maybe it's just the fact that we closed a little bit lower than where the US, we closed a bit higher than where the US finished on Friday. Let's talk about one of the single stock stories that we're watching this morning. EasyJet shares are certainly flying a little higher this morning, as you can see. We're off our highs, but still up by 11.5%. The move comes after the airline's board called the overture, which we heard about late last week by the investment firm Castle Lake, quotes, highly opportunistic. This is the UK budget carrier, grapples with a depressed stock price, cautioning that attempting a takeover would be fraught with risk. Joining us now, Bloomberg Managing Editor for Space and Aviation, Benedict Campbell. Benny, good morning. Why is Castle Lake interested in EasyJet?
Well, EasyJet called it opportunistic, and if you look at the share price, that's one way to start. It's one of the weakest performing stocks so far this year. Before today, they were down by about a fifth, so that gives them an opening. And then if you look at the sort of the underlying assets of EasyJet, they're not that bad, certainly better than what the stock price might reflect. They have a very solid order book with Airbus. They have slots in popular slot-constrained airports. So we live in constrained aviation times, as you know. It's difficult to get good aircraft these days. It's difficult to get slots at good airports. So EasyJet has both of those things, and that's probably where Castle Lake sees an opening. So they think this is an undervalued asset. But it has valuable assets on the other side, so that's why they are considering making this bid.
And is this a business with experience of the aviation industry? What has Castle Lake's activity within aviation been to this point then, Benny?
I mean, Castle Lake is not a household name, but they do have considerable experience in the space. Notably, they made an appearance here a couple of years ago, partnering with Air France KLM for their bid for SAS. They eventually retreated, but they played a role in that. They are principally a sort of distressed type lender. They are a lender to Virgin, for instance. Not that that's a distressed asset, but they have some exposure here in the aviation space. What's important to note here, and this is something that EasyJet sort of alluded to, is there are considerable regulatory hurdles here. Castle Lake is a US asset, and EasyJet obviously is not. And by the rules that are governed over here, you cannot own, or the majority of an airline, if you are from a different jurisdiction. So Castle Lake could only own a minority stake in EasyJet, made more complicated by the fact that the founding Stelios company or owners still own 15%. So there are multiple issues around this. Castle Lake can't just sort of swoop in and take over the business. They would again have to come in with a partner or settle on a minority stake.
And Benny, you mentioned earlier that we are in this world of higher costs for airlines. How is and how has EasyJet been navigating that inflation push that you've been seeing across the sector?
Well, the company today came out and said they're confident in their strategy. They have an investment-grade sort of outlook. Their profit outlook is still positive. Investors take a slightly more dim view on this. As I said, the stock is down quite a bit. This is a company that, like every other company in the field, has really been hit by what's going on in the Middle East, the closure of the Strait of Hormuz, and the resulting increase in the fuel in the price of fuel. That's something that really has hurt the company. And again, this is where the opportunistic sort of approach comes in. This is probably a good time to look at an asset that is grappling with all these issues while at the same time still having a sort of strong foundation in terms of its business model, but also in terms of its assets. If anything, the sort of the budget space of the industry is probably the part that is going to come out of this stronger, because people will be more budget-minded as they travel going forward. So the likes of EasyJet, the likes of Wizz, the likes of Ryanair certainly are probably longer term going to be net beneficiaries. The question is, can they make it through to the other side without things like Castle Lake coming in?
OK, Bloomberg Managing Editor for Space and Aviation, Benedict Carmel. Benny, thank you. As we look at the EasyJet stock price up 12% so far in today's session. Let's get to the tech space right now, because SoftBank has announced plans to invest as much as 75 billion euros in French data centres, making the country a top European hub for AI infrastructure. Let's bring in Peter Elstrom, then, Bloomberg's Executive Editor for Global Technology. Peter, so SoftBank coming out with these plans. What are the details? They sound pretty sizable from a European perspective. What are the details, and will SoftBank actually be able to execute these plans?
Yeah, there are enormous numbers for Europe in particular. I remember our reporters broke this story a few weeks ago. They wrote that Masayoshi Son and SoftBank were going to come into France and they were going to invest billions and billions of dollars. And I remember we talked about the numbers and we're like, this can't be real. This seems too big for Europe in particular. But SoftBank and Masayoshi Son have been making some very aggressive bets in AI. Son has done this throughout his career in different areas. He's had some enormous successes, including Alibaba. Right now, he's invested a huge amount of money into OpenAI in particular, more than $60 billion. It's really the biggest bet on OpenAI in terms of dollars, at least. And he's also talked about building $500 billion in data centers in the United States. So this is another enormous bet by him in France. It really came out of this meeting that he had with Emmanuel Macron back in March, where the two of them talked about this, and Macron appealed to him directly about trying to bring some of this AI investment into France. So they're talking about an investment, as you say, of up to 75 billion euros. They're beginning with construction up in the north of France, in Hauts-de-France, and they're going to begin. It is a very big bet. It looks like France is kind of emerging as one of the winners in the AI space.
So why is that?
Not only have the data centers, but they have Mistral, too.
Why France?
Well, I think in this case in particular, I think it's because of Macron's appeal, but I think also it helps that they've been taking AI very seriously in France. I think Mistral it's a small player on the global stage, but it's a quite successful player within Europe. And they're appealing. They got this investment from ASML, as we've talked about before. I think European companies like the idea that they're going to have a domestic player that will provide them with this AI technology so that they're not dependent on an OpenAI or an Anthropic, for that matter.
So we know why France wants this and wants the investment, Peter. But why is SoftBank making an investment into Europe more broadly? What is it that is at the core of this?
Well, Masayoshi Son has talked about in his conference calls in particular about how he wants to bet big on AI. He believes in AGI, artificial general intelligence in particular. I think for him, this is a nice chance to diversify his bets. As we wrote about recently, some people, even inside of SoftBank, have grown a bit concerned that his big bet on OpenAI is too concentrated. He's putting too much of his money on Sam Altman in particular. So it probably helps to not invest only in OpenAI, in AI models in particular, but also data centers. Again, he's investing this money in the United States, but he's diversifying a bit here. And in France, he's giving himself some opportunities to benefit from having data centers and other geographic areas in particular. And it's helped his stock. His stock was up about 14% today. He overtook Toyota as the most valuable company in Japan. That's a big deal for him.
Yeah,
that's very symbolic.
In 26 years, I think.
Yeah, Toyota is an icon of business there. Son is running the company. He's a first generation. He founded SoftBank, of course. And his ability to overtake Toyota, at least for today, is a good sign.
But briefly, Peter, anything from NVIDIA that stands out on what we've been hearing from Jensen?
Oh, yeah. Computex in Taiwan has a ton of news coming out of it. The biggest news probably out of NVIDIA and Jensen in particular is the fact that they're moving into the PC space. They want to compete in laptops with Intel and AMD in particular. Another expansion for Jensen Huang, probably good for the stock.
Okay, probably good for the stock, and we'll watch Intel. Watch Intel, we'll watch ARM, lots of other related, watching Schneider Electric go a little higher on the SoftBank story as well. Peter, thank you very much. Thanks for joining us. Peter Elstrom, Bloomberg's Executive Editor for Global Technology. Lots of technology themes to pick up on this morning. The other big theme in markets, though, still is, of course, what's happening in Iran. It's moving oil prices, coming up diplomatic exchanges between the US and Iran as Israel expands its ground assault in Lebanon. We will discuss with Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. This is Bloomberg.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
Oh boy.
can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Happy Monday. It's June the 1st. This is the opening trade. We are 30 minutes into today's session. European stocks are down 0.2%, so not feeling the AI love, at least for now. That's been, of course, rippling through the Asian markets. US futures also on the front foot, with Nasdaq 100 futures pointing up by 0.4%. But again, Europe is not playing in that party right now, though some individual names are. Here in the UK, the FTSE 100 is actually down 0.3%, despite the uptick that we've seen in oil prices. The DAX in Germany is just nudging into positive territory, with gains of just 14 or 15 points. And over in France, the CAC 40 is performing marginally better, just up 0.1%. Guy, what are you seeing?
OK, let's talk about the breadth and what is happening here. Basically, it's a 2-to-1 down versus up. up, 170 up, 418 down. Volume's a little on the light side, but not that. Well, actually, maybe it is. Maybe we are seeing a little bit of light volume. Europe doesn't feel like it's participating in the AI trade today. You've only got a few stocks that are benefiting there. Elsewhere, higher energy costs are weighing, though they are lifting some of the energy names. Let's talk about the gainers. Let's talk about the losers in this market this morning. EasyJet, the Castle Lake story, certainly one of the main drivers in the aviation sector. That stock is up by 11%. What is it the Castle Lake is looking at here? Is it the underlying assets? YAB is a distribution company. It manages all kinds of distribution assets. It is looking or buying a industrial waste production vehicle producer. Got to get this right. Basically, trash carts, trash trucks, and that stock is up by 7% on that. Nokia's also rising quite nicely as well, though it did get. It was down on Friday. Today it's up. It's not fully kind of filling that gap this morning. On the downside, let's talk a little bit about what is happening there and give you an idea of what the picture looks like. Wise Group is the big loser on the downside. Elsewhere, I think it's a real struggle to figure out exactly kind of why some of these stocks are moving. Defence stocks generally are a little off this morning. Rolls is down. That's quite a heavyweight in terms of the downside. Roche is also down by 0.6%. Just a kind of a little bit of negativity in the pharma space. Plus a few kind of idiosyncratic stories, enough maybe just to suppress these European markets, Anna.
So those are the markets, Guy. Let's get up to date on some of the other stories we're covering then this morning. Berkshire Hathaway is to acquire Taylor Morrison Home in an all-cash deal worth about $6.8 billion. The deal is the first major purchase under Chief Executive Greg Abel and a vote of confidence in the U.S. housing market. The offer of $72.50 a share per common share represents a 24% premium to the house builder's latest closing price on Friday. Hungary's Prime Minister Peter Magyar says the country will amend the constitution to oust President Tamás Sulyok. The decision comes after Sulyok rejected Magyar's demand that he resign. Magyar, whose election victory ousted former Premier Viktor Orban, had set a midnight Sunday deadline for Sulyok to leave. In a video response, Sulyok cited what he described as his allegiance to local and European constitutional norms that required him to stay on. Bloomberg has learned that the European Union is considering a temporary freeze to its price cap on Russian oil as the war in the Middle East continues into a fourth month. The current price threshold is $44.10 per barrel and is due for review later this summer, with options including suspending dynamic and automatic increases until the end of the year. Guy.
Let's turn attention back to what is happening with the oil story. Oil climbing from a 6-week low. The outlook for a peace deal to end the war in Iran becoming a little uncertain once again. We are oscillating on this story. Washington and Tehran traded messages apparently over the weekend seeking changes to a draft agreement that would extend the ceasefire and open the Strait of Hormuz. You got Iranian comments this morning on an operation that Tehran hopes it can manage with Oman in terms of managing that piece of water. A lot of uncertainty, but basically the oil market is assuming that a deal is going to get done. There's not much call buying, there's a lot of put buying. That seems to be the skew right now. Let's figure out what is happening here. Anthony DePaola, our Middle East energy markets reporter, joining us on the details. Anthony, that seems to be the picture. The oil market seems to believe that a deal is going to get done. What evidence do we have to back that idea up?
Good morning, Guy. Yeah, I mean, coming back to work this morning after the region has been off for most of last week due to the Eid holidays here, it looks like a lot has changed because we're down about $10 from where we were when we left, say, Friday over a week ago. And we're coming back up a little bit today, as you said, from that low on last Friday. And that's because we didn't see much movement on the deal over the weekend. The issue here is that traders are still waiting for clarity on an opening of the Strait of Hormuz and when that oil can start moving out, and vessels can start getting back into the Gulf. So we're still seeing oil at elevated prices, still up about a quarter from where it was before the conflict started, and that's because of this lack of flow of crude, natural gas, refined products out of the Persian Gulf. So until we see that open and until we see that flow restored, we won't see that price dropping back to those current levels. And it might take a number of months until that tanker flow can get started. So we do see this positive view in the market by the fact that we have really taken some heat out of the price over the past week. Some very positive pronouncements about a ceasefire extension, 60 days. So very detailed aspects of that, giving the market some confidence that there will be a deal. But we are just waiting for that final signature. And I don't think anyone is discounting the fact that there could be another flare-up, but we are seeing and taking the positivity of the potential for a deal, as we can see from the market right now, Guy.
Okay, Anthony De Paola, thank you very much indeed, our Middle East energy markets reporter with that update. Let's stay on topic and broaden out the conversation, bring in Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Anna, so the oil markets to some extent as well, but certainly the equity markets are betting that there will be a deal. Are they right to do that?
I think they're very optimistic at this point in time. There may be a deal, there may be a muddy deal, but the issue is that the underlying issues won't be resolved, because this is a highly complex situation, and we will not go back to the status quo ante, to how it was before the war started. Because even if there is a deal in which basically you get, both sides reopening the strait, ultimately you have various problems. Firstly, no one really knows who's actually in charge in Iran. There is a decentralized power structure going on, and this is why you're seeing these strange flare-ups of missile strikes, drone strikes happening at the same time as talks are taking place. Who is in charge? Is it the ones that are negotiating, or is it the hardliners? So essentially this means that any commander controlling drones or missiles can veto any deal by disrupting the Strait of Hormuz, by disrupting the region. That's one of the big challenges. The second big challenge is that you have opposition forces still in the country, in Iraq, outside of the country, that are not happy with this regime. They want it out, and they will at one point try to weaken the regime again, together with Israel, who is also not happy. So that means that the regime will continue to find itself in a situation of instability and will lash out occasionally. So at best, you get a reopening, a partial reopening, but there's going to be a risk premium because they will create uncertainty. So that's the challenge that we have here.
Do you think the markets are therefore underestimating, particularly the domestic pressure that Trump is under from the right of his party, underestimating the risk that Trump will ultimately have to accelerate any further military response, that ultimately the only card he has left right now to get the kind of deal that he has promised he will get is to restart a military campaign against Iran?
Well, I mean, Trump right now only has bad options, because restarting a military campaign could be a lot more chaotic than what it is already, right? You could see then a lot of disruption in the Gulf, which would put energy prices higher. So Trump is looking at this saying, okay, either I get a deal, which is not great, or I restart military operations, which could be worse. So this is why Iran is having the upper hand. They're looking at this thinking, all right, we have time on our hand. We can play this. We can continue to ask for more and more and more, because clearly the US is very keen on getting a deal, and we're going to try and extract as much concessions as we possibly can. The challenge is that Trump cannot accept some of these demands. And so we are in this back and forth and tit for tat, which makes it really difficult to get a deal over the line.
Are we right to talk about a deal, Anna, or should we just be talking about an extension of a ceasefire with things still to be decided in the future?
I think there are three scenarios. It's a comprehensive diplomatic solution, which is a very low likelihood. The second one, which is, when we talk about the deal, I think the only thing that's on the table, I call it a muddy deal, which is basically we both agree to disagree, but we reopen the strait. And then the third scenario is no deal. And in that no deal scenario, you have a military escalation, you have a status quo. Okay, so these are the scenarios on the table. Right now, we're still in this possibility of a muddy deal materializing, but it's tricky for Trump because it means at this point he needs to pay off Iran with a large upfront sum, which is very difficult for him to do domestically, politically. Then you have Israel, which is facing an election. This deal is not good. The terms of what we've seen is not good for Netanyahu facing an election, because it puts him in a situation where potentially he has lost the war against Hezbollah and against Iran in an election year. That's why Israel is doubling down on Lebanon right now. This is a sign that we're not going to be okay with Lebanon being part of a deal with Iran. So these are two fundamental issues that make it difficult, on top of what I just outlined at the beginning, the decentralized power structure in Iran.
Yeah.
So even if there's an appetite to do a deal, you have a lot of challenges to resolve that
Tell us more about what we know and don't know about the Iranian regime itself, because we see these lines coming through this morning from one particular spokesman saying Iran reiterates it has not negotiated on nuclear issues with the US. But do we take these comments at face value, or there are just so many voices speaking out from Iran that we can't be sure what has been said and by whom?
Well, I think that the negotiators are saying certain things, but then you have the hardline elements. We don't know. The Ayatollah, is he alive? Has anyone seen him? We don't know that yet. He's making comments that that Iran cannot give up the nuclear material. And frankly, when you look at this from a geopolitical perspective, you look at how Iran has been attacked. Giving up the nuclear material increases the risk of being reattacked. It would mean opening the doors to another attempt by the US, by Israel, to finish off the regime. So it's a huge risk for them to do that. The nuclear issue will not be solved as part of this deal. If at all, it will be kicked down the line to negotiate at a later point in time.
What sort of timeline are you thinking of? There is a big discussion in the oil industry about the fact that the tanks are getting empty. We're getting back, we're down to kind of the levels that we can't take much more out, that inventory is getting to zero. I don't know when we get to that point, but it feels like it's coming onto the horizon. It's becoming a reality very soon. So how long do you think it would even take to get to a muddy deal? Is it days, weeks, months? I
mean, we should have already gotten it. This should have happened a couple of weeks ago already, because, as I said, this deal is not going to be good and it will require difficult compromise. Should have happened. It's not happening. Why is it not happening? We keep on having these mixed messages. Well, because they're not agreeing, clearly. Because it's politically difficult. Because it's politically difficult for Trump to kind of face this into a position where he can claim a win. And he needs to claim a win on this. So I think they're trying to square the circle somehow. I've seen yesterday or the weekend there was some report about, instead of giving Iran upfront just unfreezing of billions, you call it an investment fund. I've even seen the idea to have some US-backed property investments in Tehran. Very creative. I think something like this could allow Trump to give Iran some money and claim it as a win. So we're seeing a lot of creativity here.
If I look at the other end of the kind of distribution of outcomes, if we do get the tank bottom and oil prices rise sharply, where do you think the pain point is that will force Trump to do something because gas prices in the States are too high?
I think the pain point is already here. It's an issue of this is not a sustainable situation. And he knows this. And this is why we're seeing so much appetite to try and do a deal, even though it's a bad deal. Okay? He knows that this is, it needs to be resolved. And I think this is why the markets are optimistic. They understand that. Trump, we're also kind of have this situation where they do a temporary deal. They don't solve any of the issues, kick them down the line. And then after the midterm elections, Trump revisits this whole issue. Because however you frame this, this is going to be unfinished business.
Do you think we can get through the midterms without this getting resolved?
I think something will give. I don't think we're going to be in the status quo.
Right, okay.
Just staying on the oil part of the story, but shifting our focus from Iran to what's happening in Russia, we've got some Bloomberg reporting about the number of Ukrainian attacks in the month of May on Russian infrastructure. Maybe that has more of a domestic impact than it does on international oil markets, given the sanctions and the energy caps. How are we thinking about Russia's position right now vis-a-vis Ukraine, and whether or not that does have more of an impact in terms of the energy markets as we look at the infrastructure damage in Russia right now?
Yeah, for Russia, this Middle East conflict is a hope or an optimism when they look at this from the degree that, firstly, they are benefiting from it financially, but secondly, it's putting pressure on Europe. And that means that we've just heard it, on the oil price cap. They are hoping that this will cause more political instability in Europe and lower the appetite in Europe to continue to support Ukraine. Because Russia is struggling on the battlefield increasingly. We are hearing made-up stories about battlefield successes on the Russian front. At the same time, Ukraine is striking deeper. Now we've seen drones on Romania. Europeans are getting a little worried that Russia is being increasingly in a corner and more willing to lash out. And so Russia is hoping that they're playing this long game where over time Europe is in a more difficult situation if the situation in the Middle East doesn't resolve itself, and more willing to ease all pressures from Russia. So clearly they're looking at this right now and think this may be an opening for Russia to take advantage of.
And we saw the US administration before the Iran conflict pretty engaged with trying to find a solution around Ukraine. Now we have the Iran conflict. And I just wonder about the bandwidth for the US administration right now, as we read over the weekend and last week and in the weeks just gone, in fact. More surveillance over Cuba. Is this the precursor for some sort of Venezuela activity over there? Lots of questions, at least, being asked about that. But do from a geopolitical perspective, this must raise questions with how much a US administration can deal with at one time.
Yeah, I think that Russia-Ukraine is not anymore top priority for the US at this point. It's a European problem. And when you look at how the funding has moved, it's now fully funded by the Europeans. And from the European point of view, the best strategy is to slowly bleed out militarily Russia over time by keeping the conflict more or less contained and by getting Russia to a point where they have to compromise. That's the strategy. I don't think we're going to get them to a ceasefire because neither Russia nor Ukraine are in a position where they have to. Now, to your question on the US, I think in the second part of this, the second half of this administration, we're going to see the U.S. double down on Latin America. Cuba is clearly there. They want to reduce Chinese influence in Latin America. The Western Hemisphere more broadly, Greenland is still on the table, not militarily, but politically, absolutely. And of course, I think we've discussed Iran at length. This means that the U.S. will have to stay somehow exposed to what's happening in the Middle East, because this is not easily solved.
Yeah, OK, so back to the Don Rowe doctrine, perhaps, in the second half of the presidency. Anna, thank you very much. Thank you for joining us. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Coming up on the programme, plenty of tech themes in focus this morning. We'll get back to the SoftBank story. It plans to invest as much as 75 billion euros to build AI facilities in France. We'll discuss that next. This is Bloomberg.
I think the productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back. This is the opening trade, 1st of June, and this is the picture across European equity markets. We're pretty flat, actually. We're flat on the DAX. We're flat on the CAC 40. The FTSE 100 providing a bit of the downside. Media stocks have been a little bit weaker today. Rolls-Royce, last time I checked, was a little bit weaker today. Stocks Europe 600 then down by around 0.25% overall. And we're waiting, Tom, for more news around what's going on in France, the enthusiasm for the French AI story. SoftBank, Masayoshi Son, on the ground, on location in France, ready to make a big investment.
Yeah, and seemingly a pretty sizable win in terms of investment decisions and commitments for President Macron. So we're expecting to hear from the president alongside Masayoshi Son, of course, the head of SoftBank, a company, by the way, which has seen its market value top Toyota in Japan. It's become the most valuable company, at least for today. Of course, that's more about its investments in OpenAI than maybe the investments that it's pledging in France around data centres. So around 75 billion euros in terms of the data centre build that they're pledging for France, starting with about 40 billion. So in total, we're talking north of 80 billion US dollars. And to your point, Guy, earlier, partly this is down to the fact that President Macron has lent in himself personally, but also because of the nuclear energy and the relative cost advantage that France has on that front, which, of course, is such a necessary component.
When would this happen? I guess would be one of my questions. He's made big commitments in the States, and it's taken quite a while to build them.
Yeah.
Even if he broke ground today, how long would it actually take to get this stuff up?
There's
and
a
running?
date attached to about half of it, isn't there?
Yeah.
But no date attached to the other half, it would seem. What was it, 35 billion by 2031 is the way that this is being phased. So we'll see whether... But, you know, even that is quite a win in terms of investment in the AI story over in France. Interesting that we get also at the same time Salesforce announcing, we've got a big event obviously in France today around technology, but they're announcing a 2 billion investment, and that is to do with AI as well, just as the manufacturing PMI data comes in a little bit better than had been expected from France. And talking of data, we'll get plenty more data this week. Let's have a look at some of the other things we're watching this week. The Computex conference, we've talked about some of the lines from NVIDIA already in the preamble to that, but that kicks off in earnest tomorrow. US earnings are in focus with HP after market. We're also getting tomorrow inflation data out of the Eurozone. Then we start to move over to the States. The Fed releases its beige book on Wednesday. US earnings come in the shape of Broadcom. We get data culminating in non-farm payrolls come Friday.
Keep an eye on the ISM today. Keep an eye on the prices paid component of the ISM manufacturing data today, because it has
especially for tech.
It has been skyrocketing, which takes you back to the tech story. Let's discuss what's moving markets this morning. Skylar's here, Skylar Montgomery-Koenig from the MLive team. Let's talk about oil prices. We were just talking about it a few moments ago with our last guest. Oil prices are pricing in a very optimistic scenario.
Yeah, I mean, absolutely. If you look at the last 2 weeks, the market's just seized onto this idea that the Strait will open again. And the broad trend for Brent has just been downwards, that we're at levels on Brent that are kind of the lows we've seen in the past 2 months, or at least not far. We're bouncing a little bit today. But particularly when you look at options positioning, put open interest is the highest, or it reached the highest a week or so ago that it's been in over 18 years or something like that. And so there's clearly been this shift that everyone's very optimistic that there will be a deal.
Are we overestimating the impact that AI is having on growth? I mean, there's some evidence out of Taiwan. Growth is up about 10%. Exports out of Korea are soaring up about 50%. AI as a catalyst for driving macroeconomic growth globally. And that seems to be offsetting the concerns about the oil story right now.
Yeah, I mean, I think certainly it's a powerful growth driver, and we've seen that strongly in the U.S., but I think we need to be very mindful that that impact is felt unevenly. So, yes, companies that have AI exposure will do quite well, but you also still have this energy impact. So if you look at world GDP forecasts, that's barely moved this year. You've had 70 basis points add to CPI forecasts, so people are very worried about inflation, but overall growth hasn't shifted in terms of expectations whatsoever. Now, part of that is certainly the AI story, and that's feeding positively into earnings, but that only impacts some companies. So I think when we're looking at the equity market, we need to be mindful of what's the tech exposure. So yes, you want to be exposed to stuff that has a higher tech weight, but also what's the energy exposure? Because my worry for some of these Asian equity markets is that they're big energy importers. So if you look at net energy imports as a percent of energy use for the likes of Taiwan and Korea, but maybe a clear is quite high, but maybe more of a clear short is something like Italy or Spain, where you have both a low tech weight in your MSCI index, as well as that big exposure to imported energy.
So talking there about the inflation dynamics, is that why we see bond and equity markets handling the uncertainty in oil prices quite differently? Equities trying to look through it entirely, whereas the bond market's quite focused still on those higher energy prices as we see them this morning.
Yeah, absolutely. I think it's the inflation focus, so this idea that we know we're going to get higher inflation numbers in the U.S. in particular, CPI CPI at 4% this year, that's quite worrying for a Fed. And when you have data coming in so strongly, as Guy mentioned at the beginning, ISM comes in today, prices paid is going to be quite high, it's expected. Prices paid, employment, new orders, the ISM number itself is all expected to rise today. And so if you have inflation that high, but activity is still very resilient in the background, then the Fed can focus on that inflation mandate more. And it means that you could firm up that hike and have a stronger yield. And I think that's the message that you're seeing, is that AI can contribute positively to growth and to inflation, whereas you're more looking at the inflation impact for the U.S. from an energy perspective.
Let's talk about that Fed hike. How hard will it be to get a wash Fed 2 hike at this point? How strong does the data need to be? How strong does the inflation narrative need to be to get that to happen?
Yeah, I think this is the struggle, is there is a hike price, but it's kind of seen this really long runway.
Yeah.
And, when you compare it to what you've seen for the ECB or for the Bank of England, there's quite a lot priced positively. So I think, maybe just a continuation of current trends with inflation really close to 4% is more worrying.
Skylar, thank you very much. Skylar Montgomery-Koning from the Markets Live team. That is it for this morning, for this Monday on the opening trade. The Pulse is up next. They'll continue to take you through some of these tech themes and, of course, everything out the Middle East. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
NVIDIA taking another run at the personal computer market with another chip to rival Intel's dominance. Emmanuel Macron welcomes SoftBank's Masayoshi Son to the Elysée Presidential Palace after the firm said it plans to invest up to 75 billion euros into AI data center capacity in France. And U.S. President Donald Trump says talks with Iran will, quote, work out well. even as the two countries again clash near the Strait of Hormuz. So first thing is first, happy Monday, everyone. I know it's been a pretty long month. Here we go, and here we come June. Now, markets definitely looking at stocks advancing. Again, it's really the AI trade locking in some fresh gains today, allowing global equities, I guess, to shrug off some of the rebounds that we saw in oil prices as the U.S. and Iran remain deadlocked over a peace deal. So we have the positives, that's AI. We have the negatives, everything that's happening with the price of oil. If you look at some of the other things that we're watching out for, I would also look at Japan 159.47. This is a story that we've been following pretty closely over the last couple of weeks, and then Nvidia pre-market gaining almost 2%. It's entering the PC market with a new chip aimed at loosening the stranglehold of Intel. Let's also have a look at what Intel's doing pre-market, and you can see Intel. We'll bring it up in just a second. As if by magic, there you go, Intel down 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, artificial intelligence dominating the headlines this morning and again overshadowing developments in the Middle East. SoftBank also says that France is poised to become a top European hub for AI infrastructure. Now, we discuss all of that and what it means for the macro outlook with Ozan Tarman from Deutsche Bank. But first, Jensen Huang, the Nvidia chief executive, says the company is entering the PC market with a new chip aimed at loosening the stranglehold of Intel. Now, the RTX Spark Super chip will launch in laptops and desktops from brands including Dell and Lenovo. Now, it's a fresh shot at the PC market with a new chip designed for artificial intelligence-powered computers.
This is the N1X that we built in partnership with MediaTek. This is N1X. This is a beautiful chip. This is a chip that, frankly, would take 33 years to build. And the reason for that is because 100% of NVIDIA's software stack runs here.
Well, the move pits Nvidia more directly against Intel's as it looks to expand beyond its dominant position in AI data centers. Now, joining us now is Bloomberg's Peter Elstrom, of course, in charge of technology for us. Peter, thank you for coming on. Look, we basically have a series of major announcements, and they're pretty major. Let's focus on the first processor for Windows PCs. How significant is this?
Well, NVIDIA has built their franchise in AI really by selling these graphical processor units, GPUs, for data centers. And that's been a booming business for them, tens of billions of dollars, most valuable company in the world. Their market cap now is above $5 trillion. But as you're seeing, that's not enough for Jensen Huang. He wants to expand into a few different areas. That includes now into the PC space, where he wants to compete with Intel in particular with these chips to be able to run PCs. As you mentioned, they're going to begin with Dell and Lenovo, in particular with the RT Spark Super chip, as Jensen calls it. And he's going to see whether he's going to be able to compete with Intel and AMD in that PC space right now. Now, it's a new area for them. They need to not just demonstrate that these are good chips, they're effective chips, and that they're going to be able to power the PCs in the way that consumers want them to, but also they want to show that they're good long-term partners with these companies to be able to build the relationships so that they'll trust them to be able to use those chips and then use them over the long term. So that's one of the bigger challenges for Jensen.
And Peter, Jensen Huang also said that agentic AI had arrived, but also argued that, AI won't threaten employment. What's his point here?
Well, there are a lot of concerns about how much AI is going to threaten employment, of course. So that's one of the issues that he's addressed repeatedly over the past. I don't know that the data is clear in his favor at this point, but he makes the case that AI is not going to eliminate these jobs. In fact, it's going to be useful. But he's also heralding this age of AI agents that are going to be able to help you do a bunch of more things. And we're seeing companies and individuals experiment with AI and AI agents in a whole bunch of different ways. In some cases, yes, of course, they are eliminating jobs. I think we don't know net whether that's going to be a loss or a gain.
Peter, we're also looking, of course, to France, where President Macron and Masayoshi Son are speaking at the moment. I think we have live pictures, and a major development is basically SoftBank saying that will fund data centers in France. I mean, this is one of the biggest AI infrastructure investments in Europe. That's the president of France speaking live in Paris. I mean, how does France stack up to the rest of Europe? And are we sure that this comes to fruition?
Well, this is an enormous amount of money for Europe, no question about it. We have heard Masayoshi Son and SoftBank have made a number of very big AI bets, some in Asia, but mostly in the U.S. so far. They're investing more than $60 billion into OpenAI. Beyond that, in data centers, they've said they could invest $100 billion, maybe even $500 billion in U.S. in these Stargate projects. But for Europe, 75 billion euros, to be clear, is more money than we've seen anybody promise to invest at this point. It could be an enormous boost for France in particular. Macron's been very aggressive in terms of trying to present France as the leading case for being able to build an AI infrastructure, really a foundation for AI in Europe. They not only have these data centers, if SoftBank builds them, as you say, they also have Mistral, which is really the leading AI player within Europe.
So interesting. Peter, thank you so much. Peter Elstrom there, of course, in charge of global tech for us. Now let's get more on that SoftBank 75 billion euro investment to build data centers in France. Bloomberg's Caroline Conan also joins us. So, Caroline, how important is this personally, politically for President Macron, given we also have elections next year?
Francine, as you know, we have presidential elections in less than a year from now. So this is the last edition of Choose France for President Macron. He cannot run again next year. This is something he's created back in 2017 in Versailles in order to attract foreign investments to France. So clearly, President Macron needed this year to be the biggest one, the big showcase. So he couldn't have dreamt better than this investment, or at least this commitment from SoftBank, as much as 75 billion euros in 3 sites in the north of France, which is considered as the data infrastructure belt in France, as much as 45 billion euros by 2031 for the first phase of these projects. Of course, critics have said that there's been a lot of investments announced at Choose France over the past 10 years, and many of them have been actually delayed, or some commitments have even been abandoned. So we'll see exactly how long SoftBank does take to really build all this data infrastructure in France. But this is not just business, it's also politics. In fact, Macron went to Japan at the end of March in order to prepare the G7, and he met in Japan with the SoftBank CEO Masayoshi Son, who actually was saying in the French papers this morning that he was very impressed by how much President Macron has been personally committed to France's economic success. And of course, let's not forget that you have the G7 summit in France in just 2 weeks from now. That is happening in Evian. And President Macron really wants to champion himself as the European leader, protecting sovereignty, building data infrastructure independence from the US and from China. At the time when the UK Prime Minister and the German Chancellor are actually both weakened by domestic politics. So clearly, President Macron, given he cannot run again next year, has nothing to lose here in order to make sure that France is on the map for data and for AI. And finally, of course, remember, France has a huge competitive advantage, as we're still seeing these live pictures at the Élysée Palace ahead of this summit in Versailles later today. France, as I was saying, has a huge competitive advantage given the nuclear electricity. It actually comes from nuclear for 2/3 of the electricity production in France.
Caroline, thank you so much. Caroline Conan there with the very latest, of course, on the latest announcement in France. Now, futures pointing to another all-time high for the S&P 500 at the start of June. This as equities shrug off a rebound in oil prices as the U.S. and Iran remained deadlocked over a peace deal. Well, joining us now is Ozan Taman, Global Macro Vice Chair at Deutsche Bank. Ozan, thank you so much for joining us.
Francine,
it's
always
an exciting
a pleasure.
day. It is always great to have you on TV. Look, it's a little bit of an odd day. We're at the start of June. We look at everything that's happening in the Middle East, but we also try and figure out the impact of these AI chips, stocks and investments when it comes to the global economy. What kind of macro impact could it have?
Huge impact. By the way, I usually joke that you invite me and it's Champions League day. This time, right after Champions League final, Macron has other issues to celebrate as well. And it's AI, those chips in France that we talk about, big part of the story. On one hand, there is a whole fear of war, positioning, etc., etc. But these earnings led by AI continues to power us through. There's big discussion whether we're closer to 1999, 1998, 2000, implications of when all this will stop. But I think all these hesitations have created what I keep calling empty positioning, empty boats, empty buses. There is so much skepticism, and we continue to power through as long as AI remains the key narrative. And for stocks, it is at the moment. It's not the Iran war.
I mean, does it change, the labor dynamics in the longer term? Will it take longer than we think?
Very good question. 2 days, 1 week before the Iran war, the Feb 28, the famous date, the whole obsession was to worry about labor market, the Strini research, something big is happening, Twitter page. And people feared, some key names in US and beyond feared that 50% of white-collar jobs in 12 to 18 months will be gone. Funny these things. Now pendulum swings a lot with the rally, with all this capex extension, with the 3 key IPOs coming in. Now it's more popular to say AI may actually be inflationary. My famous partners in success, both Jim Reed and George Servelos, independently argue that AI will be inflationary, at least in the short term, that we don't need to fear about losing our jobs to robots yet. I'm more balanced. I think the labor side of things, the worry will come back. I think Walsh is keeping an eye on that. But for the moment, on that too, on your question, we are on a very different narrative than we were at Feb 27.
What are you expecting from Kevin Walsh?
Again, very key. Tough hand he has, right? So at the moment, the key thing he'll try to do, I think, is to convince his fellow peers to hold, let alone a cut. My base case is this June 10 inflation is very key. If that also beats significantly higher, say 0.2 higher, then 2022 narrative will really increase. People will go for inflation expectations. It's not just a real yield sell-off. Then his hand will be very tough. If that's in line, if the next 2 inflation prints are in line, and if NFP like last 2 summers actually surprises on the downside, I think that will ease his hand a bit. We will find a balance, maybe no cuts, but none of this next move will be hike talk either. And that's the best strategic path he can take between the U.S. administration and the peers he needs to convince.
So you don't think actually there's a chance that the next move would be a hike from the Fed?
I personally do not. I think market will get more and more excited for it, and certainly at the moment market prices for it. But I think that narrative too, towards the end of summer, beginning of September, will change. No, forget the cuts. But this whole excitement about maybe him turning all the way around, convincing even President Trump, and maybe going for a hike this year, that's too much for me.
Okay, what's your take on Bank of England and also ECB? So June, ECB, we're going to get a cut? I mean, it's priced in.
Your good friend, Madame Lagarde, I think she's playing a smart game. This time around, an insurance hike, market gives it to her, so why not? That June is already in the pocket. Our chief economist, Mark Wall, expects one more in September. September is a long time, dear Francine. If finally another Godot, this deal comes one way or another, like what we've been talking about Thursday, Friday, through Bloomberg reporting as well, freeze the situation, open the Hormuz, discuss the nuclear in the next 2-3 months, that kind of deal hope, I think, will ease her hand a lot. And then I would question September. If things continue to escalate, chop, not certainty, oil doesn't do 150, but certainly doesn't do 80, 90 either, then she may take one more in September. Bank of England, toughest spot. I think he'll be very happy if he goes away with a hold. Holds on one side, those on the other side squeezing him. I think for this country, the best thing is if he holds and let the US, Hormuz, and even UK political game play out.
What do you think will happen actually to the price of oil, given that there's no really end in sight in Hormuz? I mean, we're kind of in a wait-and-see pattern.
People that I really respect 2 months before, even 1 month before, said we have 1 month left, 6 weeks left. Paper oil will go over to physical oil, it's 150s, 200s. not happening, right? So if there is some sign of deal, at least a 2-month truce, and okay, not go back to pre-war levels, but I don't see it going back up to 150 either. So slightly lower than here, which would give the market chance to go for pain trades. Francine, my key pulse to you is, as of a week ago, and a week doesn't change much, a huge majority of pods, multi-asset, fast money players were paid rates and long dollars. Long dollars more in intellectual philosophy, certainly paid rates. Now, 24 basis points rally changes your psychology a little bit, but still, pain trade is for things to calm down, for oil not to go to 120, 130, and in summer for us to come back lower. Our official view is that we will revisit the highs. Yeah. Francis Yarrett and team, 4.7 US 10-year, 3.2 Bund. My gut feel is it may be like last year. Remember last year, 464 we traded in May. Yeah. Never looked back, came back lower. 468 we traded just last Tuesday. Inshallah, it will be the same this time around.
Very quickly, yen. I mean, it seems to be defying some of the record intervention we've seen.
On that too, the more consensus, more hedge fund players are saying it may be a bit futile. It's going to sooner or later the dollar yen will go higher. I am a little bit more with Ministry of Finance and Bank of Japan. I think they're playing the patience game. Obviously, again, Francine, if come September I'm still talking to you about war, etc., then forget it. All this intervention will be just a patch. But if things calm down, certainly they delayed a big attack, and a deal would make yen strengthen and ease the hand of Bank of Japan. But the key thing is June, Takaichi, Ueda-san, will he finally gives the hike. I'm not as pessimistic as bearish yen as most of the street is.
Okay, so interesting. Ozan, thank you so much, as ever.
And congratulations on the Emmy nomination.
Oh, thank you so much, Ozan. It feels like a lifetime away, but we'll cherish it in our heart. Ozan Torman, their Global Macro Vice Chair at Deutsche Bank. Coming up, Andrew Bailey, the Bank of England Governor, warns the risks from frontier AI models are so big they require an international approach. More on that interview next. And this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Jay Powell, the former Fed chair, used his first public comment since leaving the role to warn that the central bank's credibility could be damaged if politicians are able to remove officials over policy disputes.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Bank of England Governor Andrew Bailey says British banks are still locked out of using Anthropic's powerful new AI tool Mythos. While speaking on Bloomberg, Bailey called for an international approach to fighting cybersecurity threats.
The spillovers from this sort of from cyber risk are so big that we can't just have a single sort of national approach towards dealing with the consequences and mitigating it. There's got to be an international approach to this. It's got to be in a sensible, sort of firmly based international process, because I think anybody who thought, well, I've dealt with my banks, that's okay, I'm afraid that won't work, because they're all so heavily interconnected. We've got big payment systems, big messaging systems, so that approach won't work.
Now, as chairman of the Financial Stability Board, you're obviously involved in lots of discussions around sort of global efforts on financial stability and looking for risks. And one area, again, where people are looking nervously at the US in particular is the run-up in private credit, and whether there should be more of a sort of a tougher approach to at least having more reporting requirements or other things on private credit. You've highlighted that a lot of traditional banks and institutions are now very much intertwined with private credit. Is that, I mean, are you getting a hearing on that from the US in terms of the risks of that?
Excuse me, yes. I think, look, first of all, private credit is playing an important role. I think it's a good thing. Let's come back to AI for a moment. We've got a very big investment demand going on for it to support the innovation in AI and in the tech sector more broadly, and private credit is an important part of meeting that demand, and that's a good thing. What I think we have to look very carefully at is the word private can be misleading in some ways, because it is not an island on its own. It is connected into the system, into the broader system. A lot of the underpinning liquidity will come from the banking system. It is connected into the banking system. That's not bad. That's inevitable. So it's very important that we understand those interconnections, how they work. Are there points of sort of fragility in there? That's why at the Bank of England we're doing a second system-wide exploratory scenario to follow on the one we did on hedge fund activity in major government bond markets a couple of years ago. So that's the first thing. The second thing I think is important is, and I think this is particularly true with the spread into sort of so-called retail investment, is do the investors understand the assets they've got and the characteristics of those assets? Because there are clearly, there are some signs of strains in the market. I think they're often described as idiosyncratic. Okay, every incident will have a different story attached to it. But we are seeing some increase in requests, quite a big increase in requests for outflows to take liquidity out. And I think how that plays out will depend on what investors think they, think or thought they had relative to what they sort of now think they've got.
Well, that was, of course, the Bank of England Governor Andrew Bailey speaking with our very own Stephanie Flanders. Now, the SpaceX IPO is already forcing changes across Wall Street, from index rules to investment products. Let's get more with Matthew Bloxham from Bloomberg Intelligence on today's Big Take. Matt, first of all, I love the Big Take. It's really, quite an amazing one. How consequential of an IPO will SpaceX be, and how exactly is Wall Street adapting?
Yeah, I mean, incredibly consequential. So put it in context, it's $75 billion of stock that's going to be sold, which is about twice the amount of the second largest, what will be the second largest IPO, which was Aramco a few years ago. And interestingly, maybe up to $30 billion of that will be allocated to retail tranches. So retail investors really being kind of targeted as a kind of a foundation of this IPO. And that, definitely kind of will test the professional investors in terms of how much they back this, because I guess there's a sensitive thing. Maybe because the valuation feels high, they may be feeling a little bit cautious, but then they see the retail investors pile in, that pushes the share price up. And given we've seen these shifts in the index inclusion rules going to be included an accelerated time frame as little as 15 days with NASDAQ, then potentially the professional investors really kind of get caught short if the shares go up and they're not properly exposed in their funds. So yeah, this is a big IPO for everybody.
Yeah, and we have other big IPOs coming at the forefront. So what are the consequences for everyone else if they're lined up?
Yeah, I mean, I think clearly if this goes well, then that's a great platform for the likes of OpenAI and Anthropic to come in on the coattails, and you may well see them adopt a very similar model, a relatively high retail tranche, and take advantage of these accelerated index inclusion rules. But the other flip side there too, this is a kind of feels like a relatively full valuation at IPO, and if they don't get the demand that people are anticipating, then that may force the likes of OpenAI and Anthropic to either to go back to the drawing board in terms of when they IPO, how much they offer, or even what a realistic valuation benchmark might be for them when they come.
Matt, what will you be looking for ahead of the IPOs? Is it pricing, or is it just the sheer volume and how this will be absorbed?
Yeah, I think to some degree it's pricing. I think obviously we're expecting this week for the investor roadshow to start. Normally, incremental information that comes out from the company is incredibly tightly controlled through this period. But who knows? There may well be the odd kind of snippet of information here or there that kind of comes out, which kind of helps to underpin the story. Obviously, a lot of people are really focused on the orbital data center part of it, which seems to kind of be really kind of a core part of a number of different aspects of what they're planning to do and underpinning that $2 trillion valuation.
Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence. Coming up, Iran says Israeli attacks on Lebanon are preventing a deal with the U.S. We have the latest next, and this is Bloomberg.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Happened was you were out.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. NVIDIA is taking another run at a personal computer market with a new chip to rival Intel's dominance. Emmanuel Macron welcomes SoftBank's Masayoshi Son to the Elysee presidential palace after the firm said it plans to invest up to 75 billion euros into AI data center capacity in France. And U.S. President Donald Trump says talks with Iran will, quote, work out well, even as the two countries again clash near the Strait of Hormuz. Now, staying with the Middle East, and the U.S. says it conducted strikes on Iranian radar sites over the weekend, while diplomatic exchanges continued between the two countries. Meanwhile, Israel has expanded its ground assault in Lebanon, shattering a brittle truce with its northern neighbor. Let's get more from Onur Ant, Bloomberg managing editor for the Middle East and North Africa. Onur, thank you for joining us. So the Trump administration selling a looming deal. Iran remains reticent. So who should we believe?
Well, neither side should be taken at face value. Since the war began, President Trump and others in the U.S. administration have repeatedly indicated that a possible deal with Iran has been imminent, and yet it's been 3 months since the war began and about 2 months since what was supposed to be a temporary ceasefire took hold in April, and the conflict is still raging on. As you have already pointed out, there have been skirmishes and various other hostilities in the region over the weekend, even as President Trump says that a deal is reachable, if not imminent at this point. What remains the critical point in this back and forth between the two is that Iran's demands have been pretty consistent since the war began. They want a level of control or oversight in Hormuz over vessel traffic, maintaining a nuclear program, as well as an end to all theaters of war should there be a deal with the U.S. Given what's happening in Lebanon, obviously the last bit of that is highly problematic. And the other two demands that Iran has are also kind of bordering on the red lines that Trump has maintained since the war began. So even if an extension to the current ceasefire is announced, it's really difficult to see how a lasting and sustainable peace can be arranged, can be reached, given this vast difference in terms of the main points, main demands between the two sides, Francine.
Onur, Israel's expanded its ground assault in Lebanon, so where does that leave the U.S.-Iran talks, and what's been the international response to that?
Well, the broader incursion has already met fierce criticism, including from countries in Europe as well as the UK. In addition to the incursion, we have just heard from Israeli Prime Minister Benjamin Netanyahu, who said he ordered strikes on a suburb in Beirut. That's quite significant, especially coming after the incursion that you've just mentioned, because there has been no such, at least no high-scale bombardment in Beirut since the current ceasefire in Lebanon took hold in mid-April. This makes any deal between the U.S. and Iran even more difficult than it already probably is, because, again, Tehran has made it very clear that it does not want the conflict in Lebanon to be treated in a separate diplomatic track, or to be treated as a separate conflict than what's going on between itself as well as the U.S. And Israel. So yes, the escalation in Lebanon makes it even more difficult for the U.S. and Iran to reach a deal, because Iran says that a continuation of war in Lebanon between Hezbollah and Israel simply is incompatible with any peace deal that it might sign with the U.S.
Onur, thank you so much. Onur Ant, their Bloomberg managing editor for the Middle East and North Africa. And let's get more analysis with Jasmine El-Gamal, a former Pentagon advisor and founder and chief executive of Averos Strategies. Jasmine, thank you so much for joining us. It feels like it's a little bit Groundhog Day. I know things are moving, but it does feel like, President Trump, it still tries to portray like we're close to a deal.
Yeah.
But on the ground, it's not really the sense that we get.
That's right. Thank you so much for having me. We've been talking about this for a while, and what I've been saying or trying to explain to people is that we shouldn't really be paying much attention to what President Trump is saying, to even what the Iranians are saying. A lot of what they're saying is meant to either soothe the markets or soothe their domestic populations. We should really be looking at what's happening on the ground and what the status is of the issues under contention. And if you look at that, you understand why it's taken so long to get to a deal. And you also understand that a deal is not around the corner. The best that we can hope for right now is a longer, extended cessation of hostilities, a gradual reopening of the Strait of Hormuz, a lifting of some sanctions and unfreezing of some assets on the Iranian side. But as Oner was just saying, none of the actual root causes of the conflict have been addressed, and we can talk about what I'm looking at that I'm worried about moving forward in a bit.
What are you most worried about? Is there, I mean, even if there's a kind of truce, right?
Yeah.
Then does it flare back up when the negotiation starts, or is it going to be a stop-and-start situation for months, quarters, or even years?
Yeah. So, look, if we look at the ceasefires that have been negotiated so far in the region, you have the Gaza ceasefire, you have the Lebanon ceasefire, and look at what's been happening within the context of both of those ceasefires. The Israelis have not withdrawn per the agreement from Gaza. In fact, they're taking more and more territory. Prime Minister Netanyahu now saying he wants to take up to 70%. When I look at Israeli soldiers overtaking 70% of Gaza, I think about the potential for insurgency, the potential for more conflict that will spill over to the West Bank potentially and to other places around the region. When we go to Lebanon, same thing. Hostilities continue. About 1/5 of Lebanese territory has now been turned into a so-called buffer zone, homes destroyed, 1 million people displaced. I'm also looking at the unrest that will unravel from that. And then with Iran, of course, they can't agree on core issues like Oner mentioned, the nuclear issue, the ballistic missile program, support for proxies. And so all of these issues are now being kicked down the road. And what they're trying to focus on now, which both parties do want, is that end of hostilities that I'm talking about. But for markets, for shippers, for insurers, for people looking at the medium to long term, I would say we are certainly not out of the woods anytime soon.
And Jasmine, we'll talk about the market and why it's reacting in a bit of a strange way in a second. But actually, it feels like Iran is a net winner in this because they now effectively control the passage of the Strait of Hormuz. Is it going to be impossible to get it back from them without force? What can the U.S. actually offer them?
That's a great question. And I think the short answer is things will never go back to the way they were because Iran has now realized and practiced and proven that it can control the strait at a relatively low cost compared to what is needed to undo that control. So we talk about the so-called mosquito fleet that Iran has, these fast boats, speed boats that they can throw a rocket launcher on and they can use it to intimidate or attack ships in the strait. They don't even have to actually attack ships. They just have to circle them, intimidate them, offer that threat, that looming threat that things could not go okay. And that is enough to disrupt the strait's traffic. Now, what the U.S. and international community would need to actually take that control back from Iran costs so much more and is not a cost that these countries are willing to bear. So all of the issues under negotiation now, many of them were on the negotiating table before this war started, right? And Iran has proven that it's willing to negotiate on its nuclear program because it negotiated the JCPOA. This is back when I was at the Pentagon during the Obama administration. What Iran has now, to your point, is that feeling of leverage and control and power that it didn't necessarily had proven that it had before. And that's going to make negotiations that much harder. The U.S. will have to offer more concessions, which in turn will put more domestic pressure on President Trump. And you see that going round and round now in this vicious cycle of pressure, retreat, concessions, and more pressure.
And I know I ask this every time, but how much of an understanding do we have about the strength of the Iranian regime right now? I mean, they also have to pay the royal guards. Are they stronger than before, or are they weaker and we don't realize it?
You could say they're stronger in a certain sense, in the sense that they've consolidated, they've become more hardline. The hardliners have stronger voices now. People who may have been willing to negotiate or move in a different direction have been killed. So in that sense, they're stronger. But as you mentioned, economically, they're struggling. And the one pressure point really that the U.S. has over Iran is that economic pressure point. But then it takes us back to that battle of timelines that we've talked about before. How long can Iran sustain itself within that pressure cooker of the economic sanctions and the blockade of the Strait? How long can it sustain that versus how long can the U.S. sustain what it's doing? And how long can the market sustain? And, so it's that battle of timelines that we're talking about. Iran simply needs to survive, right? It's a very low bar for them. So that's why I tend to think that the time is not on the U.S. side. It's more on Iran's side.
Jasmine, thank you so much, as ever, for joining us. Jasmine Al-Gamal, their former Pentagon advisor and founder and chief executive of Aviros Strategies. Now, Germany's top defense official says that while Europe is rushing to rearm, it also needs time and clarity from the U.S. Well, we spoke to Carsten Breuer at the Shangri-La Dialogue. He also told us that China missed a big opportunity by not sending senior military officials to Singapore.
It's my first time I've seen the Chinese delegations on big numbers and also on small numbers. It's important for me is always that the dialogue is keeping up, that we are able to talk, that we are able to communicate. The size of the Chinese delegation is very small this time, and it's also very low ranked. So I think China is missing an opportunity here to talk within the region, but also to other partners, to other militaries, to other politicians.
Let's talk about Europe. He was pretty critical of Europe. He was praising the Asian allies. I guess the numbers don't really add up because Europe has ramped up its defense spending. What else do you think Europe can do to kind of bridge the gap and perhaps reverse that relationship with the U.S.?
Well, hearing the speech from Secretary Hexet yesterday, I was probably leaning a little bit back, only a little bit, because what he offers as limits, as lines where we have to go, I must say we are fulfilling this with the German military, with the German army. So the defense spending in Germany is at this stage. We are ramping up enormously. When Secretary Hexet last year was here, he was talking about even Germany is doing this. We understood the message. We understood what we have to do, and it's not only Germany, it's also other countries.
Are you concerned about capabilities gap? We know that Europe has said that it will be able to defend itself by the end of the decade. I'm just wondering, in the meantime, where are the vulnerabilities? Where are the capabilities gaps? Some say nuclear could be an area.
For me, it's important that we are in a dialogue about this. So when we are talking about capabilities, we need a roadmap. It's clear that the U.S. is seeing their main effort now here in this region. But what we have to do is, if they're taking capabilities out, we have to mitigate those capabilities. So it has to be clear, it has to be transparent, and there has to be a roadmap in what time frame we have to do. So this is a kind of a little bit of a European dilemma. What we are facing. We have all understood that we have to take care of our security on our own, that we have to take over more responsibility, but we can't build up the needed capabilities that fast like it is necessary. So this process has to be designed, it has to be steered. And on this priority, it's ISR, which is on top of the list. It's capabilities in the airspace. It's capability in space. It's of course air defense. What is in there? It's digitalization, where we have to get much more ahead of what we are doing. So multi-domain operations comes to mind. It's deep precision strike weapons or long-range fires. So this is the top priorities, if you will. So, but I'm a little bit reluctant to talk about priorities, because priorities, when you set priorities, you probably don't look into what is necessary. So we have an underspending in defense budget over years and years. So we have to fill the gap, to build up a baseline, and then starting from there.
Well, that was Germany's Chief of Defense, Carsten Breuer, speaking with Bloomberg's Haslinda Amit. Now, oil climbing from a 6-week low as the outlook for a peace deal to end the war in Iran becomes uncertain. Once again, this as former National Security Advisor John Bolton says President Trump's push to amend the peace deal with Iran is to get gasoline prices low for the midterms.
Well, I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
Now, for more, we're joined by Bloomberg's EMEA News Director, Will Kennedy. Will, thank you for joining us. I mean, oil for me is a bit of a mystery, right? So it's a little bit elevated, but traders aren't pricing in peace yet. What does the price actually tell us of what they're looking at?
Well, I think they have priced in a lot of resolution to the conflict. As you said, prices hit a 6-week low last week, and they're up a little bit today because the deal hasn't happened yet. But it's clearly the market is positioned in a way that it expects a deal sooner or later, and that part of that deal will be some easing of the situation in the Strait of Hormuz that allows more Middle East oil and more Middle East fuel to reach global markets. So that's where we are today. There are clearly perhaps risks there in terms of if this deal takes longer than expected. But the market is, in a sense, fairly relaxed.
It is very relaxed. I mean, I think it's very relaxed, and they've been relaxed for quite some time. I mean, do we know what exactly they're looking at? Is it resolution, or they think we have enough oil?
I think there's a little bit of both. I mean, the markets have found a way to balance. You know, we've had stockpile releases. We've had a little bit of oil get out of the Persian Gulf. We've seen some demand destruction in different parts of the market. You put that together, and the market has found a place at this price, which is working. But there's no doubt, I think, that they have taken the fact that there is this diplomatic effort, that both Iran and the US have said that they are working towards a deal, as a signal that we'll get there. And of course, the political imperatives, as John Bolton said, for President Trump and his administration to reach some kind of deal are extremely strong. And I think that also plays into the market's thinking.
Meanwhile, over the weekend, we also reported that the EU is considering a temporary freeze on its Russia oil price cap over the Iran war. Are there any other options under consideration?
That's an interesting move. Clearly, the European concern is that because we have these higher oil prices, the mechanism of which currently defines what the price cap is will mean that Russia will get more from its oil because it's a function of what the market price is and a discount to that price. By freezing it, the aim will be to deny Russia the fruits of those higher oil prices. But as we've seen, Russia has been quite creative in finding ways to build structures that allow it to circumvent things like the price cap. So the question is not whether Europe will do this. I think for the European perspective it makes sense, but just how effective it will be in the current market where India especially is buying a lot of Russian oil.
Will, thank you so much, as ever, for joining us. Our EMEA News Director, Will Kennedy. Now, coming up, Bloomberg learns that the HSBC chief executive has been spending more time in Hong Kong to help revive its investment bank. Details next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology. the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Well, the conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, EasyJet is pushing back on a proposed takeover by investment firm Castlelake, labeling the move highly opportunistic as a UK budget carrier grapples with depressed stock price. The budget airline cautioned that attempting a buyout would be fraught with risk. We're joined now by Bloomberg Managing Editor for Space and Aviation, Benny Camel. Benny, good morning. So what do we know about Castlelake's possible offer? What's concrete?
So Castlelake came out on Friday evening. There was some speculation in the market in the afternoon, and then they came out in the evening saying that they are exploring a bid. This is early days, so there's no formal offer out there at this point. We have sort of the contours of what a price might look like, and we know by which time they have to make a definitive decision, which is the end of the month. So they have a couple of weeks to sort of go back and forth on this. So EasyJet came out this morning saying that they view this, as you said, as an opportunistic move. If you look at the share price, you can see where they're coming from. The stock before today had lost about a fifth in value. It's one of the worst performing aviation stocks in Europe. Obviously today the stock up quite sharply, up about 13% off the back of this idea of an offer. So why would Castlelake be attracted to EasyJet? Probably because the company does have some valuable assets. They have a modern fleet of Airbus aircraft. They have a big order book. These are aircraft that are difficult to get by. So anyone owning EasyJet would have the hand on those assets. They also have valuable slots. They fly to places like Paris, to Rome, to all sorts of popular tourist destinations. So those are two sort of major assets that might attract Castlelake.
And so is Castlelake actually an active player in the aviation industry?
They're not exactly a household name, but they are a player in this space. They did sort of emerge a couple of years ago when they partnered with Air France to buy SAS, the Scandinavian carrier. They've also done some lending to airlines. They've helped with assets and so on. So they do know the space reasonably well. What's important is, though, that they are a US company and EasyJet is a European company, and by regulatory standards, you cannot buy full control of an airline when you're from a different jurisdiction. So either Castlelake is satisfied with a minority stake, or they find a partner that they can team up with. So we don't know what sort of contours a deal might look like, but they would have to do one or the other. They can't just take control of this. And that might also be why EasyJet cautioned this morning, saying there are significant regulatory hurdles, and in some ways basically telling shareholders, hold firm, we've got this, and you're probably better off staying with us.
Benny, thank you so much. Our Bloomberg Managing Editor for Space and Aviation. He's a busy man, Benedict Camel. Now, HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. Bloomberg understands that the bank is deploying its top leadership team to win back market share as competition intensifies in Asia's biggest financial hub. Well, Bloomberg's Tom Metcalf is here with the very latest. Tom, thank you for being here. First of all, what are the real concerns or struggles that HSBC is facing?
Yeah, it's kind of a sort of, I guess, inevitable fallout from that big restructuring we've seen at the bank, where effectively they really pruned back their investment bank and moved to very Asia-focused with the idea, your US arm, your UK arm, your Europe arm is basically all about Asia-linked business. So whether Asian companies come into the US, for example, or US companies trying to access Asia. And what they're seeing is obviously with a bit less of that footprint, they sometimes miss out on those big global deals. So saw that particularly last year. And what this story points out is just the various steps they're trying to do to try and sort of, forestall that, deploying some real big guns, getting their CEO, George El-Hedary, in terms of, almost like pitch meetings and stuff like that.
That HSBC is trying. I mean, part of it is also sending management. When we spoke to the chief executive, I mean, he says also he speaks perfect Chinese.
Yeah, exactly. There's all sorts of that softer side of things, and then huge bank, right? So they've got those really compelling, sales points they can make. Like we're a massive trade finance bank. We are a global bank in many ways, and it's just that competition they might face against, say, a JP Morgan, where they are, at least from the capital market side, a much smaller investment bank in quite a specific definition.
Tom, what would you be looking out for, to actually measure success for HSBC?
Well, I think you'd be looking for a lot more listings, particularly in Hong Kong, right? That's kind of their target. And to be fair, they've definitely seen a big pickup this year. So there was only, a handful last year. Already they're at least listed on, dozens, which is clearly an improvement. And, it's always hard to unpick. Is that sort of market conditions? Is that the sort of specific moves the bank is making?
Tom, thank you so much. As ever, Tom Metcalf, they're in charge of finance for EMEA. Now, this is a picture across the board for U.S. futures. Of course, it's the AI trade that keeps on giving. The artificial intelligence trade seems to be locking in fresh gains today, allowing global equities, for example, to shrug off a rebound in oil prices as the U.S. and Iran remained deadlocked over a peace deal. I'm also looking at a couple of other things that we should be watching out for. Look, Brent headed for its first daily gain in 4 sessions. The benchmark actually rose towards $94 a barrel, as it remained unclear whether the U.S. and Iran were making progress towards an agreement on a lasting ceasefire. Nvidia then entering the PC market with a new chip aimed at loosening the stranglehold of Intel. You can see pre-market Nvidia gaining 1.7%. Intel, I think on the lower side, down 0.8%. Up next, Bloomberg Brief, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A.m. in New York City, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures pushing higher after U.S. stocks notched another fresh record high ahead of Friday's payrolls report. That's as the AI rally presses on, with NVIDIA entering the PC market to challenge Intel and others, and oil also gaining as the U.S. and Iran clash near the Strait of Hormuz, with nuclear deals still in a deadlock. Let's get a check on the markets around the world. First off, Alice French in Tokyo for the latest in Asia. Alice?
Good morning. Yes, the AI theme going strong again here today, particularly for Korea. We can see Samsung up, Kioxia as well on those memory tailwinds. Goldman raising its target prices for both of those stocks. LG as well in Korea having around a 30% gain today on news that its chairman is going to be meeting Jensen Huang later this week. And of course, we have the Computex conference kicking off in Taipei with some very bullish AI comments from NVIDIA really driving that sentiment. Here in Japan, we can see that playing out with the fact that SoftBank Group, of course, that investor in OpenAI, has overtaken Toyota's market cap for the first time since the dot-com bubble. SoftBank now worth around 48 trillion yen and Japan's biggest company, all part of the rotation into AI and away from those sort of more traditional manufacturers. And I think this is something that we'll see continuing throughout the week.
Alice, thanks very much for that. Let's get to London now for a look at Europe with Justina Lee. Good morning, Justina.
Good morning, Matt. Now, I've been away for a week, but it seems like it's the same deal or no deal intrigue here. Now, we've had a bit of a consolidation in kind of German short end bond yields, but today they're coming back up with the same concerns about oil, about whether we're going to see that deal. And that also explains some of the moves in currency here today. And we're seeing a bit of a safe haven rally all across the world. Now, what I find really interesting is that it's a completely different narrative in the stock market with the focus on the AI narrative. Now, the problem here is Europe doesn't have that many AI stocks, and that explains why, even though Asian stocks are up, U.S. futures are up, European stocks are still down a little bit today. And if we flip the board here, we're really seeing that reflected in the stock market trends all year round. I mean, European stocks here have really lagged recently because with AI still pushing stocks up recently, I mean, European stocks don't have that source of support. And that's really becoming a problem in this part of the world when it comes to equities.
All right, Justina, thanks very much for that. Let's get a look at what's going on in markets here in the U.S. Justina mentioned that futures are higher, and we see that's true on S&P futures about 0.25%. NASDAQ futures up a little bit more than 0.33% right now. Russell 2000, the small caps, little change. Taking a look at what's going on with treasuries as well as crude, those have been so important in the trade lately. 2-year yields up a little bit, just 3 basis points to 403.5. 10-year yields up about 3 basis points as well to 446, 447, and you can see the long bond just under 5 right now. In terms of crude, we do see prices rising, although much lower levels than we've been accustomed to. So NYMEX crude WTI up 3.75% to $90.63 a barrel. Brent crude also gaining right now a little bit more than 3% to $94 a barrel as the price of gold comes down a little at $4,498 a troy ounce. For some of the individual stocks that we're watching, let's get back out to London and Chloe Melee. Chloe?
Good morning, Matt. Wise shares are tumbling this morning after the Bureau of Investigative Journalism reported the company was facing a money laundering investigation with concerns that the money transfer services from Wise were used to launder proceeds from drug trafficking, fraud and corruption. And so as we await more details on this from Wise, we are seeing this really weigh on the stock this morning, down more than 16%. Moving on to Revolution Medicine, which is up this morning very strongly, about 10% after some positive trial data for its pancreatic drug, which nearly doubled the survival rate and also delayed symptoms for months. So this is a big breakthrough for the company, and we are seeing that reflected in this big surge in the shares this morning. And finally, EasyJet is also in the green after receiving takeover interest from the investment firm Castle Lake. And EasyJet said that it hasn't had any talks yet with the company, and that it was confident in its strategy, its standalone strategy moving forward. But it seems that investors are actually quite keen on the prospect of a deal, and we're seeing that reflected in those shares up more than 10% in London this morning.
All right, Chloe, thanks for that. Chloe Melee there in London with a look at some of the individual stock stories that we're watching. Coming up this hour, more on the AI rally with Keith Lerner of Truist, and Pascal Cagney, Ambassador for International Investment at Business France, joins us as President Macron scores over $100 billion in foreign investments, including SoftBank and Salesforce. SoftBank now the largest company in Japan after overtaking Tokyo. But first, NVIDIA is breaking into the PC market.
Introducing RTX Spark. Everything we've learned over 33 years distilled into one chip, and in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, so that little clip there, I guess, made it seem kind of commercial and chintzy. But this is really a huge move, isn't it? Because NVIDIA hasn't been dabbling in the PC market for almost a decade.
Yeah, that's right. It's a very significant move, and I guess it just demonstrates that a number of these historically separate markets are starting to collide. You know, we've heard that Intel is getting very much into the GPU market, and NVIDIA is going back the other way. So there's going to be a lot more competition across all parts of the technology landscape going forward. And yeah, this is kind of potentially really shake up the PC market. I think initially this is very much positioned at the premium end of the market. So, you know, the volumes might not be that big, but clearly from what Jetson Wang was saying today, that the expectation is that over time they'll be creating new versions of this chip, and it will be expanding into a much broader part of the PC market.
What have PC sales been like, Matt? I mean, for the consumer, you don't really need a PC anymore because your phone can do everything that your laptop or desktop could have done 10 years ago. I guess the business market is the only source of growth?
Well, yeah, I mean, yeah, the PC market generally has been pretty muted. You know, similar to what we're actually seeing with the smartphone market too. You know, that these are heavily penetrated markets, so you're kind of really, to some degree, relying on the replacement cycle. But the expectation is that AI is kind of instigating a new and faster replacement cycle, because, you know, as AI becomes the de facto way that we do everything, people are going to increasingly realize that actually, you know, the 2 or 3 year old PC or smartphone or tablet they've got doesn't have the processing capability to do what they need it to do, or what expect it to do with this new software. So I think that's part of the expectation, is we're going to see a new upgrade cycle for PCs.
By the way, SoftBank, we've been talking about a lot today because of the fact that they overtook Toyota as the largest company in Japan, but also together with Salesforce making big investments in France. What do we know?
Yeah, that's right. 2 separate investments, but obviously France in the limelight. So with the SoftBank potentially investing up to 75 billion euros to deploy 5 gigawatts of data center capacity across the region, supporting kind of various different initiatives. That actually, it's a big number, but it actually seems like fairly good value to money based on the kind of pricing we see for gigawatt hyperscaler data centers in the US, which can typically cost maybe $40 to $50 billion. And separately, we've heard from Salesforce that they will make Paris their AI center of excellence, potentially committing, I think, as much as $2 billion to that. So, you know, I think historically Paris has been a very strong platform for the data center market, and it's got a very healthy tech innovation environment, you know, kind of a bit like Silicon Valley or silicon roundabout we have here in London. And so I think, to some degree, it kind of plays off the back of that, that there is a really thriving technology hub in Paris and France in general. And, that's definitely going to get a boost again from the investments. So I guess probably well played the French government for convincing these big firms to invest in France over other European countries.
Matt, thanks so much for your time. Matthew Bloxham there of Bloomberg Intelligence. We'll have more on those tech investments in France a little bit later on with Pascal Cagney, Business France Ambassador for International Investment, later this hour. Over in the Middle East, progress on a deal to extend the U.S.-Iran ceasefire at a standstill. Iran saying it won't back down from new regulations to control ship passage through the Strait of Hormuz, as the U.S. stands firm on insisting free passage for vessels through the waterway. Bloomberg's Oner Ant joins us now out of Dubai with the latest. So, Oner, what do we know about this deal that always seems to be imminent, always a few days away, and never comes?
That's correct, and there's a reason for it, Matt. It seems that the main red lines or main areas of disagreement between the U.S. and Iran remain almost unchanged. We are kind of going through the same cycle over and over again since the ceasefire between the two took hold in mid-April. As things stand now, Iran maintains that it wants to maintain a level of control over Hormuz, and it wants to maintain a nuclear program as well as an end to the fighting in Lebanon, where Hezbollah, Iran-backed group Hezbollah, and Israel are fighting against each other in a parallel war. And it looks like, but all these three issues remain key areas of disagreements between the two sides, which is why we have yet to see a breakthrough in these talks that are taking place over an alleged memorandum of understanding that could extend the ceasefire by another 2 months, allowing the sides to basically negotiate over these key issues that remain unresolved.
Yeah, Iranian media also reporting that the Iranians expect at least $12 billion in their assets to be unfrozen. What do we know about that and the demands for more money in terms of reparations?
That's a key part of the Iranian negotiating position since the beginning of these negotiations, of these talks with the U.S. But it's difficult to say whether it's a red line. It's one of the key. It is definitely a key demand, but it's difficult to say whether that is one of the sort of areas where Iran does not want to even negotiate. It has kept saying that it wants war reparations, and unfreezing of those funds could be a part of that. But it could also be handled in a different way, because Iran wants to obviously toll ships going through the Hormuz once the conflict comes to an end, and it also has indicated that it sees that also as part of a war reparation mechanism. Now, whether or not more will be, or any of that money will be released, obviously remains to be seen. It's up to President Trump, and that's a key sort of point of leverage that he is holding to sort of encourage the other side to come to terms with, come to terms on some of his key demands, such as the nuclear enrichment issue. But again, as I said, there is no final decision that has been made on this particular issue of unfreezing Iranian funds by the U.S. administration.
Oner, thanks very much. Bloomberg's Oner Ant talking to us about the latest in terms of an extension to the ceasefire. Crude bouncing back from a 6-week low on uncertainties over that deal. You can see that although we're up 4% on WTI and 3 1/3 on Brent, we're still at levels much lower than we've become used to over the past weeks and months. 94.15, the price for Brent. Let's get more with Bloomberg's Will Kennedy. So, Will, these prices seem fairly subdued. Is the market betting that this deal will come soon?
I think the market has been pricing in a resolution, some kind of agreement for some time now. As you said, Matt, prices are low by the standards of what we've seen during this conflict. And I think the thinking is that both sides are working towards a deal, that the president probably needs a deal to get gas prices under control in the run-up to the midterm elections. And so rightly or wrongly, the market is taking a view that it will happen. And that's where we are this morning.
So if we do get an agreement to extend the ceasefire, how much further does the market expect crude to fall?
Well, that's very difficult to say Matt, clearly what's critical to the market is the flow of ships through Hormuz and the rate at which that oil can get out, the rate at which tankers can get in to start loading the oil that's backed up in storage, the rate at which countries like Kuwait and Iraq can restart oil production that's been shut in during the conflict. And traders will be watching that very, very closely to see how quickly things get back to normal. It will be a slow process. It will take weeks and months to unwind the impacts, but that will start to happen quite quickly.
I get it. Obviously, the price is difficult to call out, but that was what I was wondering about, Will. You know, if we get a reopening of the Strait of Hormuz, how quickly will prices come down? And I guess that's also a question to which very few people know the answer, if anyone. Will Kennedy is Bloomberg EMEA News Director. Thanks very much for joining us. Let's get on to the other top stories trending on the terminal this morning. Former Fed Chair Jerome Powell says the U.S. Central Bank would lose credibility if any president dismissed Fed officials over policy disagreements. Powell says if one administration starts firing Fed officials, future administrations would do the same, leading to distrust that would hurt the economy. He made those remarks as he accepted the John F. Kennedy Profile in Courage Award in Boston on Sunday for defending the Federal Reserve's independence. Goldman Sachs says hedge funds last week bought U.S. equities at the fastest pace in 6 months. Trading flows were driven by long buys and short covering in a combination of index and exchange-traded fund products. And Hungary plans to amend its constitution to remove President Tamás Szolyak. Viktor Orban loyalist Szolyak refused to resign after Orban's loss. Prime Minister Peter Magyar's Tisza party won a two-thirds majority, enabling it to change the constitution. The ruling party has already filed an amendment to limit the term of prime ministers to 2 4-year mandates. Coming up, the first major acquisition for Greg Abel as Berkshire CEO. We'll discuss his big bet on the housing market and consolidation of the companies under the Berkshire umbrella next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Berkshire Hathaway is set to acquire Taylor Morrison in an all-cash $6.8 billion deal, the first major purchase under new CEO Greg Abel. In a statement, he writes, quote, "Over time, we expect to unify our site-built home building operations into a combined platform, enabling us to deliver the dream of homeownership to more Americans." Joining us now is Manuel Bagori to talk about this. And Manuel, the first interesting thing that I see here is not really the acquisition, but the fact that they're going to combine these assets. Normally, Berkshire allows companies they buy to continue running as separate entities, right?
Indeed, that also caught my eye. That was very interesting, quite remarkable. I think investors are quite intrigued by the fact of this potential departure from Berkshire's traditional strategy of allowing businesses that acquires to run independently. So the fact that Abel may combine the different businesses in home building across the portfolio could potentially also set out a path for other sectors and businesses across the different portfolio to also be combined, which is quite interesting. I agree with that. But also it's interesting because it's Abel's first significant acquisition, in fact, since taking over the reins from Buffett. So I think investors were quite keen to see what would be the best significant acquisition for Abel, and also how he decides to put the huge amount of cash that they have, right? So it's almost $400 billion at the end of the first quarter. So that's a huge pile of cash, and it'll be interesting to see how they deploy that capital going forward.
Yeah, it's a massive amount of cash. It bears restating, $400 billion. I mean, this acquisition looks tiny compared to that cash pile. What kind of target could they possibly acquire with that?
Well, Matt, Berkshire is well known for acquiring all sorts of businesses, particularly has an eye for those kind of more traditional, very stable, cash flow generative businesses across industrials and everything that ranges into financial services, as we've seen, and technology and so on and so forth. So it could be really anything globally. But obviously, this is a significant one, the biggest seen the transaction, almost $10 billion for Oxychem, just completed in January. So it's definitely a good one to set up for Abel.
Got it. Manuel, thanks so much for joining us. Bloomberg's Manuel Bagori. This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up on the Wall Street Journal, questions surrounding the results of President Trump's physical exam. The Journal says the White House memo lacks detail on tests assessing his cardiovascular health. Next up, the New York Times is reporting that President Trump's upheaval of the government has led to an exodus of more than 10,000 lawyers since the beginning of 2025. The Times says many of those looking for work have gone to offices of Democratic state attorneys and nonprofits challenging Trump administration's policies in court. And finally, the Financial Times reporting that economists don't expect the Iran war-driven inflation shock to be as severe as it was during the 2022 energy crisis. FT analysis shows that inflation projections have increased by 0.8% on average since the conflict began, far below the 2.3% average in the months following Russia's invasion of Ukraine. This is Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon ahma ta chuara panga ko ahma le pa manjang le ngai kon mama nya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
When news breaks.
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day. Bloomberg.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures pushing higher after U.S. stocks notched another fresh record high ahead of Friday's payrolls report. That's as the AI rally presses on, with NVIDIA entering the PC market to challenge Intel, and oil also gains as the U.S. and Iran clash near the Strait of Hormuz, with the nuclear deal still in deadlock, though the prices on oil are much lower than we've become accustomed to. Take a look at the futures picture first in terms of S&P futures and NASDAQ futures, looking at gains of 0.2% again after record highs and 9 consecutive weeks of equity indexes rising. Treasuries are adding a couple basis points to yields right now, but still far below what we saw at the beginning of last week. So for spot 0.35 on the 2-year, the 10-year at 4.47 essentially, and the 30-year just under 5%. Remember, a couple weeks ago, the 10-year was over 4.65. Take a look at oil. We had become used to $100 plus prices, and now $91 on NYMEX crude is a gain of 369. Brent up 324, but only to 94.36. Gold coming down a bit at just under $4,500 per troy ounce. Let's get a look at some of the individual stock stories we're following for you this morning. For that, we go to London and Chloe Mealy. Good morning, Chloe.
Good morning, Matt. We've seen Taylor Morrison shares soaring this morning after getting bought by Berkshire Hathaway in this $6.8 billion deal. So this is the first big purchase under the new Berkshire CEO, and it's seen as really a vote of confidence in the U.S. housing market. And so we are seeing shares up more than 21% this morning. So big mover there. Another big mover is Revolution Medicines, which has some positive trial results for its pancreatic cancer drug. And so the drug delayed symptoms for months and was also able to double the rate of survival. So this is a big breakthrough for patients, of course, a big breakthrough for the company itself. And we're seeing that reflected in those shares this morning, up almost 8% for the pharma company. And finally, EasyJet is also in the green after receiving some takeover interest from the investment firm Castlelake. And EasyJet has said it has not engaged yet in any talks with the company. It is confident in its own strategy. But it seems, as we can see from the share price, that investors are potentially quite keen on the deal happening, especially given the weakness recently in the EasyJet share price and the fact that some analysts are saying that Castlelake is actually quite a credible potential suitor. So definitely a saga to keep an eye on as we move forward.
All right, Chloe, thanks very much. Chloe Mealy there with a look at some of the individual stock stories we're following for you. Futures, as we just showed you, pointing higher. The S&P 500 posted 11 record closes in May. That's as investors await the next jobs report this Friday. Joining us now is Keith Lerner, CIO and Chief Market Strategist at Truist. And Keith, as I was saying, 9 consecutive weeks of gains. The path has been simply up, up, up. What could stop this?
Yeah, well, great to start the week with you, Matt. All in all, we still think the bull market deserves the benefit of the doubt. Is it going to be as a straight line as it has been recently? Obviously, probably not. But I will give you an interesting stat to start the week, since you mentioned the 9-week winning streak. We looked back since 1950 and looked at how often has this occurred. And there's been 10 other times since 1950. And when you look a year later, 8 out of 10 times the market has been up with low double-digit gains as the average. I will say, though, when you look at the next week, you've only been up 3 out of 10 times. So, the odds are actually against the market a little bit this week. But overall, when you see underlying momentum like this, especially as it's supported by earnings, I think as we look out as an investor over the next year, it's still a good underlying sign.
Yeah, I mean, I would think that major concerns are higher rates and higher oil prices, but those, as we just showed you, look really subdued right now.
Yeah, listen, the market has, at this point, it's come to grips with the belief of the outcome is around the Middle East. And, the market is certainly expecting some type of agreement. I will say, as we step back, you noted this early in the program, Matt, it's all about AI. And, we often talk about that every bull market cycle has a dominant theme. And we know this one is AI. That's been something we've talked about the last couple of years. But I don't know that people understand how much this AI is dominating kind of global markets. So in the U.S., we're just doing a study right now, 70% of the gains in the S&P is related to the tech sector. If you go to emerging markets, that's over 95%. And even something that's probably under the radar, small cap returns, almost 40% of small cap returns in the U.S. are related to the tech sector specifically, because in small cap tech, it's up 50% this year.
How broad, though, has this rally been? I saw a stat a few weeks ago that 7 out of the 11 industry groups on the S&P had expanded margins. Of course, earnings season has been pretty spectacular with double-digit gains, but there's a lot of concern that that's concentrated. How do you look at it?
It is concentrated because of that tech factor that I just mentioned. But I will say, as we sit here this morning, and we look at markets, we see, the S&P at record highs, emerging markets at record highs, small caps, mid caps, the equal weight index at record highs as well. And then as we look under the hood and say what's happening there, we are seeing forward earning estimates for each of those indices that I just mentioned also at record highs. So I will say within the S&P, you only have about 60% of stocks up this year in the index. So there's definitely some bifurcation underneath the surface, especially some of the areas that are getting hit, like retail underneath the surface. But all in all, I think it's maybe a little bit broader than people give it credit for, given what I just mentioned as how many of these indices are at record highs.
I notice you have a modest U.S. equity bias. Last year, the outperformance of indexes abroad was pretty striking. Is that an anomaly?
Well, I think on the margin, I think you have somewhat better activity for global markets in general. But we've been Team USA for a long time. That's where we still see the strongest earnings momentum in the globe. One thing we did earlier this year was we did upgrade emerging markets because after a decade of almost doing nothing, it finally broke out on an absolute and a relative basis. And the earning trends, at least on a short-term basis, are actually even stronger there. We all know the reasons why because of the semiconductor stocks there. But I would say the way we're approaching it is still lean with the U.S., a little bit more favorable on emerging markets. I think developed markets is where we're seeing a little bit more of challenges related to this, this higher oil prices and somewhat weaker growth at the same time. Central banks are looking to actually increase rates.
Yeah, I mean, we're going to talk in a moment about France and Europe as SoftBank invests in the AI economy there. But I wonder how much of a problem the lack of energy sources is for a lot of the EU bloc.
Yeah, well, one, as I mentioned, the GDP estimates are starting to come down since this Middle East tensions broke out. And again, the mandate over there is for central banks is focused on inflation as opposed to the U.S., which has that dual mandate. So I think that's somewhat of a constraint. The other thing, going back to this AI theme, and you also mentioned this before, that same study that we're looking at, tech has actually done pretty well in Europe and internationally. The problem is it's not a big enough part of the index. So that's why partly why we're seeing those indices somewhat underperform. I mean, Japan's acting somewhat better here recently, but all in all, I think the U.S. and even emerging markets are still a better place on a relative basis. You're really going to need economic growth to really pick up to see Europe and some of these other areas outperform, which are more cyclically based, less technology focused.
All right, Keith, great to spend some time with you this morning. Thank you so much for joining us so early. Keith Lerner, the CIO and Chief Market Strategist over at Truist. Let's get to some of the other top stories trending on the Bloomberg terminal this morning. President Trump says talks with Iran over an interim deal will work out well. In a Truth Social post, he said constant speculation over whether he'll agree to a deal, should agree to a deal or not, isn't helping. Berkshire Hathaway will buy Taylor Morrison Home for $6.8 billion, and it's an all-cash deal, and it is Berkshire's largest since it bought Oxy's petrochemical business in January. It's the first major acquisition under the CEO, Greg Abel. SoftBank is now Japan's most valuable company, overtaking Toyota. Shares jumped 14% Monday. The AI boom has pushed SoftBank shares up 90% this year, while pressure on automakers has caused Toyota shares to fall 10% in the same period. Coming up, President Macron scores over $100 billion in foreign investment pledges with a heavy emphasis on AI. We'll speak to Pascal Cagny, French ambassador for international investment at Business France, next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Introducing RTX Spark. Everything we've learned over 33 years, distilled into one chip, and in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
NVIDIA is taking on the PC market, ready to compete with Intel and AMD by modernizing laptops for the AI era. Let's bring in Bloomberg's Mark Bergen for more. Mark?
Yeah, this is NVIDIA's second attempt. You know, they tried this a decade ago. As we wrote, it kind of fizzled out. Obviously, they're an incredibly different company coming in this kind of post-ChatGPT era, and they are dominant in the data center business. I think for the investors, this is a diversification that they're really excited about. They're really looking, concerned. The chief concern for NVIDIA here is that some of their biggest customers, like Google and Amazon, are working on direct competitors to their AI accelerators and data centers. So this shows if they can successfully expand in the PC market, that gives them a lot of strengths in case that Google and Amazon continue on their tail.
Hey, Mark, SoftBank and Salesforce both making big investments in France. What do we know about that?
Yeah, I mean, SoftBank is huge. I think the number we saw was close to 87 billion US dollars. This is Masayoshi Son, the chairman, has made this a priority. I think the devil's in the details here. You know, these that we're talking about from the announcement over the weekend is data centers with, I think, 5 gigawatts of capacity. That is huge. Something approaching what we have in the U.S. with the Stargate project with OpenAI and SoftBank there. Big opportunity for France, leaning in on its nuclear energy. Macron has been pushing this idea that France does have an advantage around energy pricing to develop these, basically become the infrastructure leader across Europe. And these projects would make France by far much bigger than anywhere else across the continent.
All right, Mark, thanks very much. Bloomberg's Mark Bergen reporting out of London. Let's talk more about what's going on in France now to bring in more AI investments. Pascal Cagny of Business France joins us. He's French ambassador for international investment, appointed by President Emmanuel Macron. He is also the president of C4 Industries. So, Pascal, thank you for your time this morning. It's a huge investment in what's been called, I guess, the Silicon Valley of Europe. Tell us about what you expect this to bring to France and to the EU.
You need to understand this is actually the 8th consecutive year that we have the Choose France Summit here in Versailles. And really, it's a real fireworks of announcement in the sense that we've got in excess of 93 billions of investments. We're counting only 45 billions for the SoftBank announcement on the 3 gigabyte and not the 5 gigabyte that you were mentioning. It's huge for us because we have also, aside of the data centers, many of other investments which are validating the whole strategy of pro-business that France has been demonstrating. We've got, as this mentioned, the Salesforce, the Oracle, the Databricks, all investing here together with the MGX of this world. So we're very, very pleased, welcoming 200 CEOs of the Fortune 500 here, in excess of 400 meetings with our ministers. So this is something that we've been doing extremely well. And remember that SoftBank announcement is really by a long shot the biggest ever announcement in Europe. So we can only be pleased.
Pascal, here in the U.S., we're continually reminded that demand is still much higher than supply. In data centers, we're rushing to build them around the country to meet the incredible demand that we've seen for AI. Is it the same in France? Is it the same in Europe that consumers and businesses are using this technology at a pace we couldn't have imagined?
The truth of the matter, the adoption rate has been never seen. We are most likely slightly behind the US, as it has been for the last 2 or 3 decades. But the fact that you need to really get is that France is exporting 19 terabytes of energy, of electricity. And that gives us an amazing, compelling advantage to attract and continue to attract all of these data centers. And it's not only about data centers. We're also trying basically to get the whole stack of the value chain into the AI, with having our local champion Mistral, with EMI Labs, but as well having new processors, new motherboards, the ability to build all of that and to do all of that into a concept which is carbon neutral, which is very, very important. So we are using our USP, our nuclear energy. 95% of our total energy is renewable, right? To basically try to create a lead and attract Sun and SoftBank, but many others.
We have had in the U.S. serious social concerns about the price of energy being driven higher by data centers, local residents around those areas being forced to pay much bigger bills. How do you deal with that in France?
Remember, because we have a real excess of energy, 90 terawatt of data that we're exporting, that's not going to happen. We've got also a mechanism to guarantee continuous energy, both to the business and to the residentials. So this is not something which has hurt at all the mindset of the people. The social unrest that we can expect, if anything, will be about the consequences of AI that no one is really able to tell about. For the time being, we're very satisfied by what we're offering. We've got also the large names like Salesforce, Oracle, Databricks, which are putting the AI centers into Paris, which is really becoming the continental hub for AI. So this plus other announcement in more traditional industry is making these Choose France editions in Versailles an absolute success.
Can this kind of investment be large enough to affect the growth trajectory of France? Do you expect AI to help boost growth? Because that's been a problem that market watchers have noted. For example, we just spoke with Keith Lerner, and he said growth is slower in Europe, and you may have to raise rates at the ECB as well.
You're absolutely right. The growth has been lower. We haven't embraced the previous revolution, being the PC, the internet, the mobile, the same way we should have done. This is our chance to go back in the race. And President Macron has been playing a critical role in explaining that to my fellow citizens, but also at a European level, which is now why we believe that AI could extract a massive productivity gain from the 24% of the industrial throughput that Europe represents on a worldwide basis. If we're able to do that, we'll be able to bear the cost of a social welfare, the cost also of maybe too much bureaucratic or tax-based mindsets. But again, it's a big bet that we're doing. Right now, it seems to work. The adoption is strong. We attract talents. We're able to fix on the territory these data centers and all the value chains. The future will tell us. For the time being, let's take stock of what we've been doing and achieving to date, which is huge, right? This is 93 billions. You understand this is more than the 7 previous editions of the Choose France Forum. So let's celebrate.
Can I ask an economic question of you, Pascal? Because although you have cheap renewable energy to help power this kind of growth, and you've got an incredible investment announcement to talk about today, Isabel Schnabel of the European Central Bank has brought up inflation concerns, and to those, the French are not immune. Right? A lot of this stemming from the closure of the Strait of Hormuz after the U.S. invaded Iran. Are you concerned about inflation? Can you feel it in France, and could it become unanchored?
We felt it, but like in the past, at the time of the Ukraine war and the explosions of the energy price, we have been, if not immune, somewhat protected from the peak of inflation seen in the US or in the United Kingdom, for example, is linked to the fact that our energy prices are actually competitive. Once this is said, we've got too much of high inflations with a GDP growth which has not been satisfying. Remember, we've got Hormuz, we've got Ukraine, we've got an overall trade concern with the tariff kicking in finally after a year and a half being implemented. So I'm not going to tell you that the horizons is totally immune of concerns, but all in all, when it's related to the ability of a given country of 75 million inhabitants to basically embrace the AI revolutions, to also take full benefit of the new space, to also really take benefit of what's happening in the health areas where we got in excess of 15 announcements during these shows, I think we do part of the job. So let's not be overly optimistic. Let's realize that inflation is essentially present. That's why we need to have a resolution to Hormuz Strait basically challenger.
Pascal, great to get some time with you. Thank you so much for joining us. Pascal Cagny there of Business France, talking about a massive investment, SoftBank and others putting in more than $100 billion, 93 billion euros of AI investment into France. Coming up, we're going to get you set up for your trading week. This is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead this week. First up, JOLTS data is coming out on Tuesday. We'll be watching that closely ahead of non-farm payrolls. Then earnings from Broadcom, importantly, as well as Macy's on Wednesday. We wrap up the week with that non-farm payrolls report, the May jobs report coming out on Friday. We'll be watching it very closely as well. In terms of what's going on in the markets this morning, NVIDIA, after launching a chip for the PC market, up 1.7%. Because it's a more than $5 billion stock, that is going to move the market on its own higher. We have Berkshire Hathaway buying Taylor Morrison for $6.8 billion. That's a 24% premium to Friday's closing price, so you're going to see likely that kind of gain today. And Hewlett-Packard Enterprise higher ahead of earnings today. They come out, though, after the market closes, so watch for them at 4 p.m. with Romaine and Katie. That's it for me. Surveillance is up next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend in the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
The equity market has been super optimistic. Earnings have been quite strong.
Investors have never been richer and more miserable.
We're in a high-risk bull market.
The big issue is positioning. So positioning overall still is pretty subdued.
Just stay involved and look how your equities have done.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, looking to build on a 9-week winning streak. The global AI trade powering equities to fresh all-time highs as the White House is keeping investors on U.S.-Iran deal watch. Former Fed Chair Jay Powell has a warning for the central bank. The Fed is facing a credibility test.
We heard for the first time from Governor Powell. I can't even say governor. Governor Chair Powell, Jerome Powell, in his first commentary since becoming governor, talking about how it would be a real devastation to the Fed's credibility and independence if a president were to fire anybody on the Fed, because it would set a precedent for any future president to come in and fire another Fed official. Is this about Lisa Cook? Is that what he's waiting for? I mean, people could talk about that. It does highlight, though, how fraught this moment is for them, given their dual mandate, very much in conflict with a lot of job winning from the president.
He doesn't say the president's name, but clearly this is a message to President Donald Trump. Quote, like many other institutions, the Fed has been undergoing a stress test. And now, when it comes to who's going to be picking up that potential stress test, it goes on to the incoming Fed chair, Kevin Warsh.
None of this helps Kevin Warsh, none of it at all. The noise around the incoming Fed chair is getting louder and louder, but ultimately we are only here because of the ill-advised attacks from the president on the institution, and without them, we wouldn't be here, and the noise would be dialed a whole lot lower for the new Fed chair.
I hate this story. I'm not going to lie.
I despise it too.
I hate it because it doesn't leave us with any insight into policy that is going to be crucial in understanding the moment that we're in. We are in economic transformation when it comes to both the AI situation as well as the labor market dynamic that's going to be very much in focus this week. You put the overlay of Fed independence over it, it just becomes incredibly complicated and just an intangible story, and you could feel the market kind of grappling with
Would Jay Powell even be getting this award if it wasn't for the president jawboning him for years? He received an award for the John F. Kennedy Profile in Courage. He only has that because many perceive what he did was standing up to the White House with these unauthorized and, your point, ill-advised attacks.
We need to talk about policy and the prospect of changing policy. The Federal Reserve, of course, in focus, dropping the easing bias. Check out the ECB and the commentary coming from Isabel Schnabel as we wake up this morning. The risk of de-anchoring inflation expectations is rising. A more hawkish member of the ECB. We can no longer look through this shock. There are many on the ECB positioning now for a real rate hike this month, in the next few weeks.
It's 89% priced in when you look at market expectations. So if they didn't hike rates, it would be a pretty big shock. You start looking at the economic outlook for Europe versus the United States. You can see it's much lower over in Europe. In the U.S., do the U.S. Central bankers have the luxury of doing the same thing or potentially taking a step back? What is the risk for runaway inflation? Is it just hinged to what's happening in the Middle East?
They should just sit back and relax. It will all work out well in the end. The words of the president overnight. Crude with a bounce, up 4% this morning. WTI at 90, Brent crude at 94. Up across the board, up by 3 percentage points on Brent crude, if you can get those prices up for us in the control room. You see that pick up off a 6-week low on Brent and WTI. More strikes as well over the weekend. We've seen a period of this now building up over a week.
More clashes over the weekend. What did we hear Friday from the Chevron CEO, Mike Wirth? There's actually been more clashes than have been reported when it comes to the Strait of Hormuz. Remember 1 week ago, Sunday evening, Axios had this report that we were imminent, very close to a deal of a 60-day ceasefire extension. Well, a week has passed. Now, the president is saying that most people know and understand that it's, quote, much tougher for me to properly do my job and negotiate when political hacks keep negatively chirping. He is leaning into the fact and insinuating that it has become harder because individuals are pointing out that gas prices are going to be higher and the energy space is going to become a lot more challenging for him.
You have the president, you have Kevin Hassett coming out and saying that oil prices are going to be lower. You have the heads of the major oil companies in this country saying we could run out of fuel very shortly. You have Iran saying whatever they're saying, and the market's left wondering, who do we believe? And that has been the scenario that we've been in for quite a while.
AI by the Kospi. Every single morning, you want to check in on the AI trade, the Kospi, South Korea. Here stateside, that's the first thing I'm looking at. How is the South Korean equity market performing? Up 4% overnight. Up by, I think, more than 20% last month and up by more than 100% so far this year. Just an unbelievable rally so far this year.
So what's the pain trade? It going down or it going up further? Because right now an increasing number of people are saying it's going up further, given the fact that everyone's saying, okay, 102% so far this year, that's enough. You can back it up. It's maybe a little bit overplayed. We're talking about 1999 type behavior. And other people are saying, but this is different. You got to go in. And that ultimately could be the riskiest trade of all that some people could see as the pain trade.
We'll spend some time on this a little bit later. I saw a story on the Bloomberg terminal this morning about a tech fund interested in buying SK Hynix. And I was sitting here thinking, you're a tech fund and you don't own SK Hynix? Like, you've been sitting this out? There's more still to go? So I don't know which side the pain trade is right now, but certainly if you haven't owned that this year, it's been painful.
I agree. There are different ways to look at that because that fund has actually outperformed. So you could say, on one hand, oh, they're just chasing the rally. On the other hand, you could say they could be the strong ones or sort of the bold ones to go in, chasing gains that look implausible to really put on a repeat performance.
Nasdaq futures this morning up by 0.2%. Coming up this hour, we'll catch up with Aaron Cannon of Clear Harbor, with Wall Street chasing fresh highs into June. Sarah Kunz of Clio Capital as Nvidia jumps into the PC market, and Torsten Slock of Apollo on how the AI boom could fuel payroll gains. We begin this out with tech driving stocks to new all-time highs. Aaron Cannon of Clear Harbor Asset Management writing, markets are behaving as though investors believe that economic growth and AI-driven productivity gains are overwhelming geopolitical concerns. Aaron joins us now for more. Aaron, good morning.
Good morning.
Are markets misbehaving?
Good question. I mean, I think, clearly there's a lot of exuberance on the tech side, Jonathan. But there's also, the elephant in the room, and we talk about it almost every day, which is AI. And it sort of transcends both the economic picture, the earnings picture, as well as the Fed picture. How is Fed Chair Warsh going to deal with that elephant? He has the inflation mandate, he has the employment mandate. But then he also, I think, suspects that, or at least the market does, that long-term AI will prove to be disinflationary, that the employment picture could actually worsen as a result of this AI trend. But on the flip side, we see greater productivity and greater growth. We ultimately think that that's probably an easing bias on the part of the Fed, and that this market still has momentum, that the memory component of technology, which has really driven so much of this exuberance, has some legs, that maybe memory chips are more of a disposable concept, a consumable concept, that we can see greater growth, that we're not in the 8th or 9th inning, but perhaps we're in the 2nd or 3rd. So it's really an interesting time. We have massive bifurcation also in valuation within the AI tech sector.
You think they stick with the easing bias?
I do. I mean, I think Warsh is looking at both of these things. I think it's challenging because we have inflationary pressures in the short term with AI. And so I think Warsh probably will have a tendency to sort of pause, wait, and observe, with his view, I suspect, that AI in the longer term will prove to be disinflationary. This whole concept of median inflation, adjusted inflation that he's looking at sort of speaks to this element.
If they maintain their easing bias, my bias would be to buy stocks and sell bonds. What's yours?
Yeah, I think you're right, Lisa. And, the stock market trading at 21.5 times multiple here in the U.S. Is not particularly expensive when you look at the 26% earnings growth. I mean, I think that there is a challenge on the part of the Fed and the Treasury. When you look at the steepness of the yield curve and the general rise in nominal rates, you have, the long bond at 5%, 10s are almost at 4.50, 2s are at 4%, and you have the Fed funds rate at 3.75. So the market's sort of saying, oh, there's a greater likelihood maybe that the Fed raises rates here if you look at 2-year Treasury yields rather than reduces rates. But my sense is that Warsh is going to probably want to lean towards the longer-term effects of this AI elephant.
So this would be counter to a popular idea, which is the reason why you're saying and pointing out that in markets you are seeing people price in rate hikes, not necessarily rate cuts, which leaves us with the question, what's the pain trade, higher or lower? And ultimately, we've seen hedge funds covering shorts as quickly as they can, the fastest pace in 6 months. You've seen people kind of rushing in. SK Hynix, suddenly a buy by a tech fund. I mean, is this sort of chasing things higher because ultimately that is the pain trade?
Well, it sure feels that way. When your bonuses at these hedge funds and these long-only asset management firms are predicated on performance relative to a given benchmark over a 12-month period that starts, on Jan 1 and ends December 31st, this is a challenging time to sort of say, well, we want to be cautious, we want to be patient, we want to be prudent, we're focusing on fundamentals. With that said, the memory sector, which is driven, SK Hynix, Samsung, Micron, they're trading the mid to high single digits. Now, I know you can look back and sort of at previous semi-cycles and say, well, when they look cheap, that's the time to sell. When they look expensive, that's the time to buy because the E is moving around. But, this may be a much more pronounced period for the AI trade, for the semiconductor build-out. When you look at the fact that semiconductors are playing such a substantial role in the lives of all of us here and people around the world, to what extent is that cycle going to be longer, and perhaps the peak of that cycle could be significantly higher than in the past?
Aaron, I know that oil prices are under $100 a barrel for both Brent and WTI, but we had warnings last week, not just from Chevron on this show, but Exxon also was talking about inventories reaching dangerously low levels. They're seeing north of $150 a barrel. Could you keep the easing buys at the Federal Reserve if we see oil prices spike?
Well, unlike the ECB, our mandate in the U.S. is the employment picture as well as the price pressure. And I think history would argue that rising energy prices haven't been a triggering mechanism for raising rates in the U.S. And so I would be surprised if that ends up sort of nudging Warsh and the entire FOMC to take a much more hawkish bias here going forward.
But what if it bleeds through the rest of the supply chain?
Yeah, no, for sure. I mean, certainly consumer confidence is being hit. We saw the data last week, it's the worst since mid of 2020. So, consumers are on their heels. We have mortgage rates at 6.75%. And we have, of course, gasoline prices that have risen. I think there's also another element here, too, where the consumer has their job, but they're worried about what's around the corner with AI. That is altering the behavior, perhaps, of the consumer going forward. I still have my job. The checks are coming in each month. But what happens next quarter and next year? And that could start to negatively impact consumption.
I think also it would depend on other variables. I'd be very interested to see, if that happened, how certain policymakers would respond. Would they try and offset it fiscally? Then I'd really worry at the central bank. Or would they allow it to rip and create the demand destruction that would ultimately mean the Federal Reserve could look through some of this? This middle ground is what gets people nervous. Matt Lazzetti of Deutsche Bank was talking to us last week about that. This middle ground where you're sort of muddling through, energy's elevated, it's not creating demand destruction just yet. I'm talking about the United States here. So they're looking at growth that's still robust, driven by AI capex, and they're looking at inflation that's at multi-year highs. It makes it very difficult to know what to do in this moment.
Yeah, people find it really annoying that gas is so expensive, and they'll complain about the fact that it costs $70, $80, $90 a barrel, $90 to fill up their tanks, but they're still driving. They haven't curtailed any of their behavior, and that's the difficult part for the Federal Reserve.
Aaron, good to see you. It always is. Thanks. Thanks, buddy. Thanks for being here. Aaron Cannon there of Clear Harbor Asset Management. Equity futures right now in the S&P up by 0.25%. We are on a 9-week winning streak on the S&P 500. So what happens if we make it week 10? I've checked this stat a million times just to make sure it's right. If you make it week 10, it's the longest weekly run we've seen going back 40+ years in market history. Just incredible. Have not had a weekly decline since March
If we make it week 10, as you've pointed out, we'd have to go back to 1985 for a similar type of streak. It's only happened a handful of times in history. Again, this goes to the anxiety people have. Is this too good to be true, especially because it's driven by a number of stocks, not necessarily the entire market?
Futures up by 0.25% this morning with an update on stories worldwide. With your Bloomberg Brief, joining us this morning is Isabel Lee. Hey, Isabel.
Hi, John. President Donald Trump says talks with Iran will, quote, work out well. That's despite clashes between the two nations near the Strait of Hormuz. The president reportedly requesting several amendments to the most recent deal. The European Union is considering a temporary freeze to the price cap on Russian oil. Sources telling us here at Bloomberg the current price threshold is around $44 per barrel and is due for review in July. And SoftBank overtaking Toyota as Japan's most valuable company. Shares of SoftBank climbing 14% in Tokyo trading, pushing its market cap past Toyota's for the first time in more than 2 decades. That's your Bloomberg Brief. John.
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the program, a long road to a deal.
I think Trump is getting what he wants, but this is not a deal that really ends the war in a satisfactory way for the United States.
They're still waiting for a deal. Henry Trace of Vader Partners joins us next. Live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Massive week for jobs data. Check it out. Coming up tomorrow, the JOLTS report, Wednesday ADP, Thursday claims, Friday. The big one, the headline act, is the payrolls report. The estimate in our survey, a really punchy, quite decent 89K. Wide range, it's always wide these days. The high is 125, the low is 50. But anything above 50, most economists will tell you, in this economy, that's okay.
Yeah, and you add to it potential revisions. If you do have a solidification of the relatively robust number that we got the prior read, how much does this create a problem for the Fed? You were talking about the dual mandate before in terms of inflation and the labor market. If the labor market shows signs of strength, how much does that drumbeat increase to potentially hike rates?
Looking ahead to the main economic data points of the week ahead of us. Equity futures look like this. All-time highs coming into Monday. Record highs coming into June. Up by 0.25% on the S&P. On the Nasdaq, up by 0.27. In the bond market, you'll notice yields climbing just a little bit this morning. 2s out to 30s, up 3 basis points on 10s, just sub 450. This move in crude setting the tone this morning. Just a bit of a bounce. WTI and Brent up by more than 3%. Under Savannah's this morning, a long road to a deal.
I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
So here's the latest this morning. The president saying an interim peace deal with Iran will, quote, work out well. Traffic through the Strait of Hormuz remains a key sticking point, with Iran doubling down on plans to control the waterway. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, the U.S. and Iran did continue diplomatic efforts over the weekend as President Trump is now urging patience. He went on in that post on Truth Social to say that constant speculation is not helping and that everyone should, quote, sit back and relax. We did hear from some Iranian officials over the weekend who confirmed that the two sides continue to trade proposed amendments on the potential agreement, but they say ultimately the talks could still collapse. And that appears to be partly because there are still these huge sticking points between the two sides, as Iranian state media reported over the weekend that the current draft agreement would give Iran the, quote, exclusive authority to control which vessels transit through the Strait of Hormuz, something we know is a non-starter for the U.S. And in fact, we heard from CENTCOM over the weekend saying that they are bolstering those efforts and that they are sharing information with vessels to help them transit through the strait, though at this point they're not going to deploy military assets to serve as escorts. And this has actually helped to bolster, according to sources telling Bloomberg News, ship owners' optimism when it comes to the uptick in traffic in the strait, though of course it is still well below the pre-conflict levels, as data analyzed by Bloomberg News shows at least a quarter of non-Iranian tankers have made their way through. Though, John, we know that the risks still remain and that tensions are incredibly elevated, as we've now seen a series of strikes exchanged in recent days. Just overnight, John, CENTCOM did confirm that the U.S. hit Iranian radar and drone sites, with the IRGC saying that it retaliated, and Kuwait reported that ballistic missiles entered into its airspace.
Tyler Kendall with the latest in Washington. Tyler, you too should, quote, sit back and relax. Should you be relaxed about this situation? This headline just crossed on the Bloomberg terminal moments ago. The drip feed about what is in and what is not in this particular draft deal continues to pour through.
Right. So Iran is saying that the uranium transfer or disposal is not in the U.S.-Iran draft agreement, which means it does not meet the critical red line this president has talked about when it comes to why he even began strikes in Iran.
Henrietta Trays of Veda Partners has this to say: investors should not count on Congress reining in the president on the war, particularly with gas prices now down to a fairly inconceivable $4.35 per gallon on average. Henrietta, I'm right there with you. The idea the strait's been all but shut, largely shut for the last 3 months, and we're at $4.35 is quite impressive. Your thoughts on this deal? What's holding things back from getting the sign-off from the president?
It's still the tax policy. Obviously, the nuclear issue is a problem. The physical blockade, the mining, the drones, the mosquito boats, all those issues are real. But it's always the tax policy, as we've been saying from the jump. And it's the reality that if the IRGC controls the strait, then you need to work with them. And they are a state sponsor of terror. So we've been in this ceasefire for, 2 months now, Operation Economic Fury, with Secretary Bessent going back and forth, imposing some of the largest sanctions we've ever seen, offering sanctions waivers at the same time, has created this confusion around whether or not we can work with a state sponsor of terror and then ultimately allow them to tax an area that they now have military control over. It's a tax problem, and those issues take months. I mean, just think about how long it took us to write the One Big Beautiful Bill, or the 1986 tax reform, or the Tax Cuts and Jobs Act. This stuff takes forever. And I think for the investment community, the most important question is, what are we going to do about gas prices if we're concerned about consumers? And the reason I say it's inconceivable that we see rates this low is because we're still under that $5 threshold. And as long as we're under $5, Congress is not going to go out of their way to pass a gas tax holiday. You know, the good news is they also won't do an export control ban. Hopefully the administration won't do that. But we're not in that urgent place, and that's very unexpected, not what I would have anticipated.
Henrietta, when you speak to lawmakers on Capitol Hill, do they tell you that that $5 a gallon mark is when potentially we could see legislation to help ease consumer pressures?
That's exactly it, Emery. And that goes all the way back to, I would say, the very beginning of the war. I think the first time I heard that was up on the Hill with some very solid Republicans who were hearing more about the president personally. We were dealing with that, Christ the healer. If you remember that Instagram post or the Twitter post, it really was $5 gas and June. So what's interesting here is those were the two variables that lawmakers and their staff would tell me were most important. We haven't hit $5, but we did get to 456, and now we're down to 433, but we're in June. So they're in this stalemate where we expected both of those things to cross at once, and only one of them has. Only time has gone by. So I was talking to a House Republican staffer yesterday, one of my favorite people in the world, and she said, be mindful that there's only 18 legislative days until the August recess. That's really what you need to know.
When it comes to the Strait of Hormuz, the president once said the U.S. and Iran could actually manage it in a JV, a joint venture. Can you see Congress passing on that?
No way. And more importantly, it's not just America that's involved here. I mean, I talked to a lot of other nations and their trade council and their trade negotiators as well. And they do not have any interest in normalizing relations with a state sponsor of terror. You know, they see the IRGC as an entity that they don't want to work with. They don't support the fact that the president got us into this mess. And they're really slow walking their response because they do not want to communicate with them. These are Western banking nations, Western banking corporations, Western banking shipping, and they don't want to violate the OFAC laws. They want to continue to perpetuate the Western banking system. And they're also a huge holdup. Their meeting that I think is most important is going to be in Ankara, July 7th and 8th, and we'll see if there's any movement. But they don't want to pay the toll, and that's really important.
This market has been so humbling over the last 3 months, that's for sure. Henrietta, thank you. Henrietta Trades there of Vader Partners. Humbling for us all. Sitting there at the start of March, worried about a prolonged conflict with Iran and the Strait not reopening for several weeks. And here we are 3 months later with equities up by more than 20% on the Nasdaq, up 10% on the S&P, and high-yield credit spreads tighter by more than 30 basis points over that period.
It's mind-numbing, and it's the reason why the pain trade's been higher, because it runs counter to what you would assume when you take a look at oil prices and what you see on the ground. The question that a lot of people are asking is, are oil prices subdued because of jawboning from the central bank of President Trump? Or are oil prices subdued because there is leakage? There are oil tankers that are getting out, and actually the supplies are much greater than people expected. The answer to that is actually really important and inconclusive at this point.
I think it's a little bit of both, though. At least in the paper market, you see it whipsaw the second you have a truth from the president. Sometimes in the past few months, it's been gaps that we've seen an entire year. But the physicality of this, you have to think. Some of it is lower because we already know ADNOC is getting some of their material out.
The jawbone has been pretty impressive, the effect it's had, but also the inventory drawdown has been a lot more effective than maybe some people in the commodity market expected it to be. Up next, Sarah Kunz, Clio Capital, as NVIDIA introduces a new PC chip.
wanted to say. Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What a winning run on the S&P 500 on a daily basis, 7 days on a weekly basis, make it week 9. Equity futures this morning, setting things up in the right way for week 10 maybe. Long way to go. Up by 0.25% on the S&P, on the Nasdaq up by 0.3. In the bond market, focus on the front end of the curve. Just pick out twos. We'll isolate that point of the yield curve. Twos last week, the biggest weekly decline in yield terms that we've seen through the year so far. And the first weekly decline that we've actually seen come back to April. Yields this morning a little bit higher, up by 2 or 3 basis points. Setting the tone for that move lower was crude last month and last week, down by more than 10%. Crude this morning setting the tone for the move higher. Crude bouncing by more than 3%. Brent back at 94. WTI back in the 90s. More strikes over the weekend and no deal. Promise of a deal, but no deal.
Yeah, even CENTCOM coming out this morning saying it conducted self-defense strikes on Iranian radar and command control sites for drones. So giving you a sense that kinetic activity very much is still continuing in the region despite the ongoing ceasefire, at least in name only. A question going forward is going to be how much will the inflationary backdrop be dictated by oil prices and how much will it be driven by the underlying strength in the economy? And that's what the labor market data this week is going to be really important.
Payrolls this coming Friday. Crude right now 93.99. Counting you down to the open about 3 hours away with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with NVIDIA. Those shares are moving higher in the pre-market, up more than 2% after the chip giant unveiled a new AI-focused processor for Windows laptops, expanding NVIDIA's reach beyond data centers and into everyday consumer devices, just as the next generation of AI-powered laptops rolls out. And for that reason, you are seeing AMD shares and Intel under pressure, some 5% as NVIDIA encroaches on one of their most important businesses. Turning to some deal news, we are seeing Taylor Morrison shares shooting up 22% in the pre-market after Berkshire Hathaway agreed to buy the home builder in a $6.8 billion cash deal. What's notable is, of course, this is coming during a tough time for the home builders, of course, due to affordability issues. So it's interesting that Greg Abel has chosen this area as his first major acquisition under as CEO of Berkshire Hathaway. And we end on shares of Wise. This is a payments and money transfer company. Shares are plunging nearly 17% in the pre-market after the company confirms it's responding to questions from prosecutors in Belgium as authorities there investigate whether Wise accounts may have been used to launder money tied to fraud, corruption, and drug trafficking. John.
Yahara, thank you. Thanks for the update. Berkshire buying a home builder gets your attention. Interesting moment to do just that.
Especially because it is the first big move by Greg Abel. And guess what? They're looking to buy affordable homes. They're talking about the affordability issue. This comes ahead of what a lot of people think will be subsidies. So how much do they try to get ahead of some of those subsidies and get in on a tax advantage strategy? And how much can they merge with their Berkshire Hathaway realty sides that you see everywhere? You know, how much do they unite those efforts?
A major policy push could be on the horizon here going into the 28 general election, which is not too far away. On our radar this morning, the US and Iran trading fresh strikes near the Strait of Hormuz. Both countries confirming talks for a potential deal still underway. The president posting, quote, "Sit back and relax. It will all work out in the end." Elsewhere, the former Fed chair, Jay Powell, addressing the risks of public pressure from the White House on the central bank.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The Fed's credibility would be lost.
The remarks coming as the Supreme Court weighs the future of Fed Governor Lisa Kirk, who President Trump has pushed to remove. And finally, Nvidia, making a push into the PC market, the world's largest company, introducing a new chip aimed at competing with Intel.
The developers are so excited about it. This is an incredible computer. All of the acceleration, all the software capabilities associated with it, working with every developer to make it incredible for all of you.
The chip set to debut in laptops and desktops from leading PC brands later this year.
Welcome RTX Spark Superchip, which is going to debut soon in computers that will probably be outside of your price point because these are going to be very high-end computers, at least at first. The first question could be, why are they doing this? They already own the data center outcropping. Why do they need to dominate the likes of Intel and AMD's landscape? And the answer could be because the way that we're all going to consume some of these AI tools will be on our personal computers. Is this going to be the democratization of some of the large language models, and how much are they trying to make sure that they did what Apple did, which was create an ecosystem impenetrable to other competitors, saying if you want to run our chips with respect to data centers and large language models, you need to have our chips for our PCs.
And it's a heavily penetrated market already. So the first question is, why are they going back into this? They tried to do this a decade ago, but it's because of AI. And everyone's going to have this new, faster replacement cycle. And NVIDIA wants to be a part of that. I find it interesting because they're going to be taking market share likely away from Intel. The U.S. government has a stake in Intel. And I would love to know what they think about this move from Jensen Huang, you know, one of the president's so-called best friends.
He won't be happy with that move. Intel in the pre-market down 5%.
It's pretty logical if you think about that was the one moat that they had, that NVIDIA is coming after their lunch. At the same time, if they create something that is internationally competitive, does that go to the national champion type strategy that the president has tried to issue?
Sarah Kunz, the Clio Capital, writing the following. Here's the quote from her. If the data center play cools off, this is something NVIDIA can point to as part of their continued ability to dominate. Jensen remains the king of the deal optics. Sarah joins us now for more. Sarah, just picking up on that last point of that quote, and welcome to the program. Do you believe this is just optics, or is there some real substance here?
I mean, it's real. There will be real chips. Jensen does what he says he's going to do. That being said, I don't think we've heard a lot about the financials. It is unlikely to be transformative to their status as the world's biggest company. I think it's a nice to have and a little bit of a flex.
Flex for what purpose? Is this a flex to try to say to Intel, AMD, hey, remember who's boss? Or is it a flex when it comes to the way that we all absorb chips normally, which is in our phones and in our personal computing devices?
I think it's a reminder to the street that whatever direction AI takes, because we do know that on-device inference has gotten a lot of funding, a lot of attention from venture capital investors. It sort of helps take some of the pressure off of the backlash against data centers. And so I think that Jensen just wants to remind everybody that he is going to be everywhere that AI goes.
NVIDIA's shares are only up about 13% so far this year. And I say only because you're looking at the likes of SK Hynix up some million%. I mean, if you start looking at the zeros and trying to calculate it, it becomes mind-numbing. How much is this Jensen Huang trying to say, you guys are looking past us for meteoric growth, but we have more meteoric growth ahead of us?
Absolutely. I mean, it is really hard to anniversary the kinds of years they've been having. I think we see something similar sometimes with Alphabet as well, where they are, in my mind, the clear undisputed leaders in AI. But because they're already doing so well, it can be hard to sort of get the market to continue to be as excited about them when they can go look at something like SK Hynix and say, oh, we can take this from a somewhat undervalued Asian market competitor to a borderline overvalued, right, U.S. stock that everybody wants to buy into. And so the price action gets more muted as your company sort of just goes from strength to strength versus starting from behind and really kind of going up and to the right.
Sarah, what do you think this does for Intel? How much does this hurt them?
I'm not sure it'll hurt them. I think that the reality is that these are different businesses in terms of where their core businesses are. If anything, I think that it could actually help people pull back and say, wait, are we properly valuing the Intels of the world? Because we've sort of put them a little bit to the side and said their chips aren't as high tech. This isn't where the future is. It's kind of NVIDIA or bust. And so if anything, I think that longer term, that chart could actually start going back up.
You mentioned in your original note the 90s are back in this summer. Well, Intel was king in the 90s. PCs were king in the 90s. Do you see this market, people saying NVIDIA is getting into this because potentially people are going to have to upgrade because of AI? Are people going to be using PCs in the future?
Yeah, I mean, day to day, right? We maybe aren't using PCs all the time. I'm talking to you from a laptop right now, right? We don't necessarily use the sort of big desktops that we grew up with, but a lot of enterprise does, and we saw that with the Mac Mini kind of surge because people wanted to get their hands on them for Claude. And so, while we don't think of this as kind of a consumer play, I think that certainly in enterprise, yes. And then the other thing about these inference chips is they have a big play in phones as well, and that's something we certainly all use all the time.
Hit pause on the freak out with that Intel move of 5%, just out the corner of my eye, just looking at this chart of Intel, up by more than 210% on the year so far.
Yeah, I'm not
phenomenal.
Yeah. It's not exactly going to kill the people who've been in Intel from the beginning of the year. And if anything, to Sarah's point, it gives it new cachet. It's such a hot market, even though it's an old market, that even Jensen Huang wants to get into it. Well, you know, we got to go where the cool kids are going.
Sarah, can I just finish on something a little bit more juvenile? The dancing. The dancing reminds people of Microsoft and Barmer and others too. Is that kind of thing indicative of anything about where we are in this point of the cycle?
You know, I think that we are at the hero worship stage. The reality is that Jensen, whoever helps him sort of craft his image, they are masters at it. He is the Michael Jordan of tech CEOs. He really, truly tends to not miss. And so if he is dancing, I suspect that culturally, that is something that is going to be well received.
Sarah Kunz of Clio Capital. Sarah, thank you. Appreciate it. Unlike Barmer, most people, even at the time, thought that didn't look cool. Right? Whereas Jensen seems like he's having a genuinely good time. And it's hard to say that Jensen doesn't look pretty cool when he's doing these things.
He's not trying to look cool. He's like...
He's having fun.
This is not exactly somebody who's like trying to get slick moves. Would you rather that, or would you rather the article that came out about Bill Gates having a Mr. Rogers look that everybody was talking about to try to make sure that he was as vanilla as possible and unthreatening? I mean, Jensen Huang, it seems like, is kind of owning himself. I don't know. That's just
Jensen on a food tour. He's having a good time.
I mean, yeah.
Credit to his wife and his daughter, who apparently I've heard him in interviews talk about they're behind his look. So they were the ones that I think said, you know, try this leather jacket look.
You can't make that up.
I mean, he's the guy at the party actually enjoying himself.
Yeah, and, and it kind of goes to where he was as a young entrepreneur. That's kind of who he was as well.
I'm never the guy at the party actually enjoying themselves. I'm looking forward to leaving without anybody noticing.
But
really
you
early.
never pretend.
Go and say
You're not
hello.
even at the party.
But yeah, I was about to say, like,
Lucky
you're not
if I turn
up.
Let's get you an update on news elsewhere this morning with your Bloomberg brief. It's the hours, Isabel. It's the hours. Isabel Lee has more.
Hi, John. Celebrity lawyer Abelardo de la Espriella unexpectedly winning the first round of Colombia's presidential election with almost 44% of votes. The results put the conservative outsider in a strong position to become the nation's next president. Asia's largest low-cost carrier, Indigo, reporting an unexpected quarterly loss. That's amid disruptions linked to the Iran war. The net loss was around $267 million, compared with analyst expectations for a profit of $197 million. Goldman Sachs sees two-sided risks for oil as weaker demand competes with supply losses tied to the Iran war. The firm says April sales data in China and Western Europe imply about 2 million barrels a day of downside risk to demand, which could knock roughly $10 a barrel off its $90 4Q Brent forecast. That's your Bloomberg Brief. John?
Isabel, thank you. More from Isabel Lee in about 30 minutes' time. Up next on the programme, AI's labour reckoning.
People talk about AI reducing jobs. Complete nonsense. Because the output is so incredible, people want to hire more. This is going to show up in our economy somehow soon.
Torsten Slok of Apollo agrees. He joins us next, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks adding to gains, all-time highs on Friday, record highs to start June. We look like they're up by 0.25% on the S&P, up by 1/3 on the Nasdaq 100. Under surveillance this morning, AI's labor reckoning.
People talk about AI reducing jobs, complete nonsense. It's causing more software engineers to be hired because the output is so incredible. People want to hire more software engineers. This is going to show up in our economy somehow soon. And so the first thing is useful AI has arrived.
So here's the latest this morning. The NVIDIA boss, Jensen Huang, saying concerns around AI's impact on the workforce are overblown. Torsten Slok of Apollo agrees, writing there is zero evidence of job losses because of AI. Non-farm payrolls for May could come in significantly higher than the around 90K expected. Torsten joins us for more. Torsten, good morning. Good to see you. What are people getting wrong?
Well, I think what people are getting wrong is this whole notion that it's not only about individual companies, it's what's happening at the macro level. And at the macro level, it's become much easier to open a business. You see this in the surveys from the census of how many businesses are created every week is exploding higher. You're also seeing data from Stripe showing you the number of solo founders of new businesses is also exploding higher. So there's a lot of new businesses that are created. Yes, some of them will probably only be one employer, namely the founder, but a lot of these businesses will ultimately result in a lot more jobs. So it's not only about the displacement that there might come on some micro levels, it's much more about the aggregate where we have a significant increase in the number of new businesses that are formed.
It doesn't help, as you know, that some of the individuals at the frontier of this massive push are talking about a white-collar washout when it comes to the labour force. What's your message to them?
Well, yeah, this has started actually already in the spring of last year, where there was a lot of people beginning to talk about, well, within 1 year's time, we will already have layoffs and we'll already have entry-level jobs that may no longer exist. But here we are with ADP on a weekly basis for the last 8 weeks, producing 30, 40,000 jobs every week, jobless claims still being low. ISM today, over the last 6 months, ISM has gone up. We're above 50. ISM is likely going to be also high today. And now we have some very strong tailwinds, not only from the AI spending boom, but also from the One Big Beautiful Bill. This economy really is on fire in the sense that we both have strong growth and we also have upward pressures on inflation. And now we also have, of course, the ultimate risk that if AI does result in more job growth, it will be really the miracle drug that both creates higher productivity and also creates higher job growth.
That can be true at the same time that John's assertion can be true, which is that white-collar jobs can decline as a proportion of overall jobs. If you look at the job growth and where it's come from, it's construction, it's manufacturing, it's in healthcare, it's in education, it's not in finance, it's not in media and media services. So how do you square those two ideas?
Well, if you look at also the unemployment rate, so now we'll get more data on Friday. If you look at the unemployment rate for people that are between 20 and 24 years old, That has exactly gone down in the last 6 months, also telling you that it's not the case that young people can't find a job. There's some issues around what type of job they can get, and yes, maybe they may not be getting initially the job that they wanted. There may be something also about expectations for young people when it goes into that discussion. But the bottom line still really here is that at the end of the day, young people are actually doing really well because the unemployment rate for young people is actually lower than where it was 6 months ago.
Okay, to build on that, the conversation yesterday among some of the people who might be entering the workforce in a not so distant future, plumbing. A discussion around becoming a plumber because you're going to make a lot of money in plumbing, but you're not necessarily going to make a lot of money going into white-collar workforce. So at what point is that the type of work that is going to be the future of a lot of the job creation? Is that what we're seeing right now in some of the data?
Yeah, but I'm also critical of this whole idea that white-collar workers are just going to say, oh, I got fired, I'm just going home in my basement and sitting here rolling my thumbs. Of course, those white-collar workers are going to say, hey, maybe we should open a business, maybe I have some friends, maybe I have some connections from my last job. And I think that that's exactly what's going to make it a lot easier with large language models, with agents, to build a new model. And that's exactly why business formation is going up. That's why the number of solo founders has also been going up. And that business formation will ultimately also result in a lot more job growth.
Could we touch on something you said about that might be about expectations of those entering the workforce? Are you saying that potential younger generations, if they don't like some of the characteristics of a job, they are going to not go into the workforce and potentially maybe start their own business or do something else?
Well, there is certainly a lot of course, discussion around, well, is it because young people can't find a job? They can certainly find a job. But then why are we having this discussion? Maybe exactly to your point, Anne-Marie, maybe we are actually hearing more young people just not having met their expectations of where they could get a job. In other words, maybe they didn't get the job that they thought that they could get. So yes, maybe there is something also when it comes to the expectations of younger households and younger people when they enter the labor force.
What you're describing me sounds like entitlement, but we'll leave it there. I want to ask you another question. Do you think the Federal Reserve has been, quote, undergoing a stress test?
Well, I saw Jay Powell, of course, yesterday. He did say at the last press conference he was going to keep a low profile, but this obviously is generating some attention here today. So I do think that it is clear that, of course, we'll have new leadership. That leadership is, in my view, absolutely going to be completely doing all the right things and moving in the right direction. But it is a little bit noteworthy that the outgoing chair here does bring up issues just in the, not in the 11th hour, but a few minutes after midnight, exactly this discussion around, well, okay, let's now give the new Fed chair a chance and he can then run with it, which he will do in a very good way.
Kevin Walsh, I think, was hopeful that we'd see the disinflationary impact of this massive push towards this technology and they'd be able to have easier monetary policy. Where do you stand on that, Torsten?
Well, we probably have to wait a little while for that because initially the AI boom will certainly be inflationary. It's very clear when you look at semiconductor prices, when you look at energy prices, when you look at labor, meaning what is the price of constructing a data center. And it also, of course, when you look at the broader equipment prices, it is also very clear that this is going to be inflationary. On top of the upward pressure on inflation coming from the lagged effects of tariffs and, of course, also higher energy prices. So initially, in the initial phase of the build-out, we should actually expect the AI data center build-out to be inflationary rather than disinflationary.
Can we finish on the price of AI? There were some CEOs, not all, but some CEOs excited about the prospects for agentic AI and replacing the human labour force with that. When they start to realise the actual cost of this, will they have second thoughts on replacement?
Well, this is also a huge discussion around token demand and token usage. And at the end of the day, token usage is not necessarily the same thing as creating higher productivity. So that's why businesses, as we speak, are exactly trying to figure out how much token demand do we have and do we ultimately need? And will it pay off? And will the price of that token demand also be worth it relative to the cost of labor? So it really is a transition where we will need to figure out over time exactly what does the end point look like. Are we going to get to a point where we'll be much more productive? And will we, in my view, probably need more labor and not less labor, especially in the aggregate from the macro perspective?
You're pointing to a very much inflationary backdrop, and this comes ahead of the labor market report that we get on Friday that could be hotter than expected if we see the same kind of trend continue as we saw last month. What do you think the Fed's response will ultimately be, given the fact that no one has the appetite to raise rates?
Well, this is, of course, the challenge that the expectations for a long time in the dot plot has been that rates are going down and the Fed is going to cut. And now markets and Fed fund futures are slowly beginning to say, well, maybe there could be a hike coming. And we all know that if there's a hike coming, then it doesn't come alone. Hiking cycles are never just one hike and that's it. It will always be 3 or 4 hikes or more. So that's why the market is debating with itself in rates. Well, if there is a rate hike cycle beginning because of these factors that we both have, a low unemployment rate, and at the same time we also have upward pressure on inflation, then all those things would certainly argue for the risk to the upside, namely that rates are going to stay higher for longer.
The picture that you're painting of both an inflationary build-out of AI plus a labor market that's poised for expansion, not contraction, due to the extra economic activity, is one that could call for a rate hiking cycle. What could you potentially see? I mean, what is increasingly your base case going into 2027?
Yeah, because this is the Fed's dual mandate. The Fed has two goals, exactly as you're saying, Lisa, namely the unemployment rate, and that's been going down and is likely to, according to the consensus, continue to go down. And inflation by the end of the year is still, according to the consensus, 3%. So if you're 3% inflation and a very strong labor market, that indeed opens up a much higher likelihood that we will see a stronger economy. Also because of the tailwind, let's not forget, it's not only the AI boom, but it's also the one big beautiful bill. And both these things are not sensitive to interest rates. It's really unique. Those factors that are sensitive to interest rates in GDP, namely housing and autos, they are slowing down. But the factors that are driving growth at the moment, the AI boom and the one big beautiful bill, it doesn't matter what the Fed funds rate is doing. We will have an AI boom. It doesn't matter what the Fed funds rate is doing. The one big beautiful bill will continue to support GDP for the next several quarters.
Torsten, it's good to see you. It always is. Thank you. Torsten Slok there of Apollo. That last point, an important point for this Federal Reserve. Yes, it's a problem if inflation is running above target. It's a bigger problem if it's been running above target for a number of years. But it's certainly a major problem for this institution if the kind of things that are driving inflation to multi-year highs are out of their control. And if they choose to hike interest rates, you're just beating down the sectors of the economy that aren't generating inflation, the sectors of the economy right now that are really struggling.
Ultimately, you've perfectly articulated why we've heard from all these Fed officials their unwillingness to raise rates. They will talk about how they want to move the easing bias, how the risks are two-sided, increasingly to the inflation side of things. They aren't talking up their rate hikes, and they're not pricing it into their SEPs. So at a certain point, how high does the bar have to ultimately be?
The only thing you can do is attempt to, and I think they're trying to, attempt to anchor inflation expectations. Up next on the programme, Sarah Hunt of Alpine Saxon Woods will catch up with Sharon Miller of Bank of America. Ed Ahusseini of Columbia Threadneedle joining us as well. The second hour of Bloomberg Surveillance is just around the corner.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Inflation is actually benign and fine right now.
Then what are we really left with? Where's this so-called inflation?
There's just an embedded narrative that inflation is not a problem.
We think that we're going to see a slowdown in the back half.
If we come through this, there is some risk of a broader-based economic acceleration.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. How many times have we said it? Coming into Monday at all-time highs. Equity futures up another third of 1% following a 7-day winning streak. On the NASDAQ, up by a third. In the bond market, you'll notice yields this morning across the curve, 2s, 10s and 30s bleeding a little bit higher, up 3 basis points at the front end of the curve, taking a bite out of last week's move. With this move here in crude this morning, WTI and Brent up by more than 3%. Brent crude just short of 94, WTI back in the 90s. Going into this week, the week ahead looks like this, full of economic data through the week. Jolts tomorrow, ADP on Wednesday, claims on Thursday, payrolls this coming Friday.
And that's where the proof is going to be. Ultimately, if you have higher input costs, higher commodity prices, that becomes a headwind if you don't have the growth to continue with it. If you have the growth and you have the job creation, well, suddenly you have an inflation problem, and that's where the issue comes for the Federal Reserve. On Friday, if we see the unemployment rate drop, and you start to see wages paid increase at the same time with a headline number that comes in strong, these sounds will be resounding, not just to remove the easing bias, which remarkably they still have, but to potentially jawbone a little bit more hawkishly going forward.
Imagine if they still kept it. Is it June 17th?
Aaron Kennan.
Imagine if they still kept
Aaron Kennan thought that they keep the easing bias because ultimately that is the path of travel. Maybe it ultimately is, but without pain, you start to see where is the rationale right now.
The guess for Friday, 89K is the median estimate in our survey. The range is 125 at the high end, 50K at the low. That's a decent set of forecasts for payrolls this coming Friday.
Absolutely, and that would be welcomed by this White House, especially when you have an unemployment rate that's still close to 4%. But the issue is not right now for the jobs market for them. The issue right now is, of course, what is going on with inflation and the concern with gasoline prices. And based off the president's Truth Social post at 1:03 a.m., it does look like he's looking for more time, for more of leeway, roadmap, breathing space from Congress and some people that he says are, quote, chirping about the deal, because he's saying to sit back and relax, it'll all work out in the end. Well, we've been here how many times before, and we're still not at the end.
And yet here we are, and crude's at 90. It's not at 110, 120, 130, 140, 150. It's not at 200, which is a number that was thrown out there by some people in this commodity market 3 months ago.
Tripping, yipping. I just like sitting here thinking, like, what other adjectives are we going to have going forward? This is, to me, ultimately one of the conundrums for the market. Is the reason for oil prices not being higher because of the job owning, because people listen and they're like, oh, okay, it's we're all getting to a resolution, or is it because inventories have done the heavy lifting, to your point, the fact that there was more crude on the water and that there are some ships getting through, and that is ultimately what a lot of people keep pointing to, despite some of the physical shortage warnings that we keep hearing.
It's been a managed shortage.
Yeah.
Big time, and that's helped out without a doubt. There's a big fat cushion there supporting things. Help ensure that people get supply. It's not to say that we haven't had shortages in certain places in the world. We have in Asia. Certainly haven't experienced them here stateside. What's been phenomenal, really, is that we haven't seen the price shock in a bigger way in America either. because of this massive inventory drawdown?
Well, we have the Strategic Petroleum Reserve. We have the inventories being drawn down. The issue is what happens when we get to very low levels. And you hear from the oil companies, and they're saying June is going to be a critical month. But to Lisa's point, how much can you quantify what is getting through the Strait of Hormuz right now? You just saw from the IRGC this morning that about 15 ships they allowed through. You heard the New York Times reporting that CENTCOM over the weekend talked about their reporting 70 ships they got through. We have reporting that ADNOC is getting some of their products out. It's hard to quantify exactly how much is shut in when it comes to Strait of Hormuz.
Equities aren't blinking. Crude's up again. Futures still positive by 0.25%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods with stocks adding to all-time highs. We'll catch up with Sharon Miller of Bank of America on how small businesses are spending big on tech, and Ed Al-Husseini of Columbia Threadneedle on the growing odds of a rate hike later this year. We begin this hour with stocks kicking off a new trading month at fresh record highs. Sarah Hunt of Alpine Saxon Woods writing, there is plenty of enthusiasm out there, but without earnings, it would be hard for markets to look through some of the clouds on the horizon. Sarah joins us now for more. Sarah, good morning.
Good morning.
What are those clouds on the horizon?
Oh, we just talked about some of them. I mean, you look at where energy prices are right now, and I'm amazed too, because when we sat here in April and we discussed this, it didn't seem like this was going to be the case if we got to June and we were still in this problem. I think what's interesting is how much, people adapt and you get crude moving in different ways. But I also think there are it's a very narrow market. The earnings are being driven very, very small slice. That's a very exciting slice, and everybody's really excited about it, but it's not quite as broad. And if you don't get inflation to back down, you could start seeing some issues into earnings for that reason.
It's certainly keeping financial conditions easier than they otherwise would be. Equities are at record highs, high yield credit spreads are tight. How supportive is that for growth here?
I think it's very supportive. I mean, I think that's one of the things that we always look for when we think that things might be getting a little worse from the economic standpoint, is you look at credit spreads, you look at, and you see where things are. Those are so tight. Corporations are raising money. This AI boom is being fueled by a combination of cash and debt, and they're able to raise that debt without too much of a problem. That is very supportive for what's going on. It's the underneath things that are somewhat problematic that could be an issue as we go forward. So far, it hasn't been as bad as I think we all expected it to be.
Julian Emanuel of Evercore ISI put out a note this weekend where he wrote this: record weight in a handful of names is creating a market of stocks, not a stock market. Is that a feature or is that a bug?
At the moment right now, it's a feature, especially if you own those stocks, right? But it's a bug for longer term because you don't necessarily want the index to be so highly weighted in just a handful of names that's all that drives what's going on. And I think right now there are plenty of places where earnings are growing that are part of the giant ancillary build out, but you still have places where you see a lot of potential spending issues and inflation issues as you move along. It's very difficult to not think from a transportation side that doesn't get built into prices. And that's a problem, except for the fact that the larger cohort of spending is from people for whom it's not as much of a problem, but it still ultimately does get there.
One of the big challenges that some people have raised is that we aren't seeing the broadening out, that we aren't seeing sort of the beneficial ramifications in some of the economic data and some of the other sectors that could participate. On Friday, we get the labor market report. What do you think is the sweet spot that would give people confidence that the rest of the economy is starting to see that broadening out and not necessarily experiencing such heat that would put the Fed still in focus?
I think from a broader perspective, a higher number is going to give people more confidence because it means that companies are still hiring, right? And I think that's an issue, especially since some of the larger AI companies went on a little bit of an anti-hiring boom. And in fact, they were firing people for a while. But I think, going forward, so far, it's been remarkable how much spending has held up. Even though the soft data has been weak, the actual data has not been nearly as weak as the sentiment surveys would suggest. So I think that's more of a concern about what's happening. But on the ground, people are still spending a lot of money.
When you look at the hiring market, of course, and we've been talking about this a lot on this show, what the Standard Chartered CEO had to say. But do you think AI is truly replacing jobs? Or is that just right now the easiest excuse for a lot of firms to turn to?
I think it's both. I think it's an excuse for people to get rid of people. But I also think that you're going to have an and, where it's going to be people and AI. Software was looked at as a situation that was going to be a disaster, and then all of a sudden people are starting to realize that you need people to look at the code that the code is creating for itself. So I don't think it's as destructive in the near term, but I think for the companies that are spending a lot of money, they're looking through their looking through their payrolls and going, maybe we don't need all the people that we need. And I think that's the problem. It's not so much that it's going to take over the world, but that extra hiring, that extra people that you need right now, they don't need it. And to Torsten's point earlier, you've got this inflationary boom before you maybe get some of the deflationary effect that people are hoping it'll bring.
Software just had a massive month, up by more than 20% on IGV last month. What's behind the bounce?
Well, I think that it was devastated so terribly that it's not a huge issue to see that it's actually not going out of business, that there are a lot of companies within the IGV that are going to be fine, that for a lot of companies it's going to be about growth on the margin and the companies that grow by seat, right? That's going to be more of an issue. But for a lot of other companies, you are integrating that AI with software. The software is not going away because the AI is there. You need both of those things. And I think that's the realization is that it's not as devastating as people thought originally, or at least this pass doesn't look so devastating.
Year to date, we're only down by 3 to 4% now. It was catastrophic a few months back for that particular part of technology stocks.
You've had winners, though, and losers, right? Snowflake has been a huge boom in terms of their partnership with Amazon. And on the other side, Salesforce hasn't done as well. So it hasn't necessarily been everybody gaining back what they lost. I do want to issue up a correction. We were talking about plumbers and other people who might benefit. And someone said, why always plumbers? Are electricians, carpenters, and painters chopped liver? No, they are not. I also will recommend to my son electrician and carpenter work, because potentially that could also be lucrative.
This is why you always get a shortage and then you get a glut. I hear the same conversations with the labour market repeatedly. How many plumbers do you think we're going to have in 15 years? Based on this particular push in the last 12 months.
Well, based on the current availability, I mean, I welcome it right now because it's certainly a shortage. But you're right. The idea of technical prowess becoming the next trading zone until robots get up and running, and then all of a sudden we have the same issue.
You mentioned the winners and losers in software. Let's pick up on that. Microsoft's still down on the year by 7%. Not all hyperscalers are created equally. Alphabet's flying and has been over the last 12 months. What's holding back that name? What's holding back Microsoft?
I think it's concerns about whether or not they are growing in the right ways at the right time. Is there something that's going to happen to the software side? I don't know that it's actually. I think that's more of a reaction to the combination of their businesses than it is about anything specifically Microsoft is doing. And I actually think that's one place where you could see some further recovery.
Oh, you'd go into that name?
Well, I think that it's not. Yeah, I don't think that there's anything wrong with Microsoft here. I think actually because it's been a laggard, there are reasons to think that that going forward, I don't think you're going to be a year from now sitting here going, Microsoft was a terrible investment.
Well, 12 months ago, we could have said the same thing about Alphabet, and here we are. Is it too early to pick the winners and losers in technology?
I think it is. I mean, I think that's part of the problem, and that's where there's a scramble, and you keep getting these rotations because people think that this is definitely going to win, this is definitely going to lose, and a couple months later you're like, oh, maybe I was wrong about that. We've got to reverse some of that, or we went too far in that trade. So I think that some of the volatility is definitely on a rotational basis.
Sarah, always good to see you. You're going to stick with us. Sarah Hunt of Alpine Saxton Woods. Microsoft's still down on the year, but up 10% last month, up 10% the month before. Software starting to have a bounce.
Part of the reason why people aren't necessarily being able to pinpoint winners and losers so easily, first of all, it's always difficult when you're in the early innings of some sort of technological revolution. I was talking to one banker recently, and I said, how is this similar or different to 2000 and other tech booms? And he said, you don't have a sense of what the ultimate future will look like or what the goal is or exactly how it's going to be used. You don't know when you even are going to reach it. There is a level of uncertainty about the ultimate endpoint that I think is very different than in the past.
Futures this morning on the S&P positive by 0.25%, adding some weight to the rally with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Israel expanding its ground assault in Lebanon as Hezbollah steps up attacks on Israel's north. Sources telling us here at Bloomberg, the new U.S. proposed ceasefire with Iran would involve Hezbollah stopping attacks on Israel and Israel refraining from escalation in Beirut. The Janus Henderson Global Technology Fund is adding SK Hynix to its portfolio. The fund's co-manager is saying SK Hynix dominance means it may enjoy, quote, a bit more outside earnings growth next year. Shares have already risen 1,000% in the past year. And Anthropic is set to give the EU cybersecurity agency access to Mythos. This is the highly advanced AI model. Access to Mythos has been limited since it was first previewed, due to fears it could fall into the hands of cyber criminals. That's your Bloomberg brief. John?
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the programme, keeping credibility at the Fed.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The Fed's credibility would be lost.
Governor Powell keeping a not-so-low profile. More on that up next with Tyler Kendall, live from New York City this morning. Good morning.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Nine-week winning streak on the S&P 500. We haven't had a weekly decline since March, and since the lows of March, a 20% move off the bottom on the S&P 500. On the S&P this morning, up again here in June by 0.25%. On the Nasdaq, up by 0.2. In the bond market, yields with a bit of a bounce across 2s, 10s and 30s. Yields up by 3 basis points on the front end to 4.03%. With this happening in crude, just a build up again, a bounce. WTI and Brent crude up by 3%. Last month, the biggest monthly decline we've seen since spring of 2020, down by almost 20%. That's your bounce this morning of just 3% at $94 a barrel.
It's not going to make people cry in terms of this idea that suddenly commodity prices are going to cause demand destruction. It is going to create discomfort, though, for the Federal Reserve. You have to wonder, are yields rising for the right reason or the wrong reason? Is it because there's so much strength in the economy that we can absorb higher prices and it leads to inflation? And ultimately, the answer to that will be on Friday, as well as, of course, JOLTS data that comes out tomorrow. Do we have that labor market impulse that can allow that to continue?
But how much more challenging might this picture be when it comes to energy prices, when it comes to how this infiltrates down to gasoline prices? I'm not seeing anything Tehran and Washington agree upon on this moment, besides maybe allowing more vessels to the Strait of Hormuz, which is very helpful for the energy price. But Iran this morning, you have a press report saying that uranium transfer disposal not in the latest U.S. draft pact. I saw another report that they will not entertain the idea of curbing down their ballistic missile program. So when it comes to all the president's red lines, they're not meeting any of them.
I noticed that John Bolton was criticizing a deal that hasn't been signed yet.
There's
Do you
no
notice
deal.
that too? John Bolton was getting ready to criticize something that hasn't happened yet. Market was sitting here thinking, I wish this was done and dusted.
That's the chirping, and he doesn't like the chirping, and that's what we're hearing.
Right? Do you think that's what he was talking about? Maybe.
I mean,
Maybe.
He's not alone. There's a lot of it going around.
Lots of chirping. I think he's talking about Senator Lindsey Graham, that the second he's close to maybe having some sort of, not the end deal on nuclear, but a deal about the Strait of Hormuz, someone says, do not do this. Then you have other individuals, Democrats, that are saying all of this has been a complete mess. He's talking about all the chirping, I think.
You can see why Bolton's upset about anything anyway, given Iran has basically threatened his life.
Yes, as well as threatened the president's life, as well as that a number of individuals that were there from Trump 1, like Brian Hook, individuals after they went after Qasem Soleimani. You still have the IRGC saying they want to have revenge for Trump 1 when it comes to Qasem Soleimani. And this administration, I think John Bolton would say that the regime is intact. This administration would say the regime has changed, but John Bolton would say it's still the same regime, just under different management.
Crude up by 3% this morning. Makes the Federal Reserve sound like child's play. Under surveillance this morning, keeping credibility at the Fed.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost.
So here's the latest this morning. The former Federal Reserve Chair, Jay Powell, saying the central bank has a duty to safeguard credibility, noting straightforward legal protections for the Fed in his first public remarks since he was succeeded by Kevin Warsh. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John. Good morning. Well, as you mentioned, these are those first public remarks that we've gotten from Fed Chair Jerome Powell since he was succeeded as Fed Chair, giving us perhaps a little bit more insight here into why he decided not to leave public life, despite departing Fed chairs traditionally doing so. But his comments come with this added weight, considering that we are waiting imminently for the Supreme Court to rule on a case related to Fed Governor Lisa Cook and President Trump's attempts to oust her. Jerome Powell mentioned legal protections. We know that Section 10 of the Federal Reserve Act of 1913 shields any Fed official from being fired without what's known as sufficient cause, though not historically defined. It's typically been meant to be referred to as malfeasance or neglect of duties related to the job, which is why we've seen Cook's lawyers argue that these allegations of mortgage fraud against her are related to a time before she was Fed governor and don't meet that very high legal bar. Now, Jerome Powell's comments didn't name names, though, as you heard, he said it's all about policy disagreements when it comes to administration stance against the central bank. And this administration has been very forthright with its comments and its criticism, though officials have often defended President Trump's decisions to lobby them against the Fed chair. Now, John, we won't get too wonky here. What the Supreme Court is actually deciding is whether or not Lisa Cook can keep her seat for now, while the lower courts decide the actual merits of the case. But really, they're really closely intertwined. We could hear as soon as this Thursday, though court watchers say that it will likely come near the later end of the term, which is later this month.
Tyler Kendall with the latest down in Washington. Tyler, thank you. I think you can sit here this morning and say that is not keeping a low profile. You can question whether you should be making those comments just a few weeks ahead of Kevin Warsh's first meeting. But at the same time, it's difficult to criticise the guy because he wouldn't be receiving this reward if it wasn't for the president's attacks on the institution, and the former chair wouldn't be even on the board if it wasn't for the attacks of the president on this institution.
And Kevin Warsh would be a completely uncontroversial pick to come in and lead this institution, given the fact that he had support by plenty of establishment figures. At a certain point, this is a controversy of the president's own making based on his accusations. On the flip side, does it ultimately matter? Right now, we're looking at break-even rates. We're not seeing inflation expectations skyrocket. So is that the question around the independence of the Federal Reserve? There are deeper questions for the Fed that we should be discussing. Like when the deficit gets to a certain level, does that compromise the Fed's independence just naturally? Because ultimately, their policy will set the interest rate that the rest of us have to pay.
That actually will be more important to the market because, as you and Jonathan have made the point consistently, the market does not view the Fed as not being independent right now when it comes to the president's attack. They believe in the institution, but all this might be wrapped up this month because obviously this is the final month for the Supreme Court's term. And as Tyler was talking about there, this really a lot has to do with, he didn't mention Trump, but this has to do with what is going on with Trump pressuring Lisa Cook and trying to oust her from her job. My question is, when the Supreme Court rules on this, what is Jay Powell going to do?
Depends what they ruled.
Is it time for him to step aside?
If they rule with her, then he will. And if not, let's see.
Sarah Hunt of Alpine Saxon was still with us. Sarah, let's talk about the schedule. Payrolls on Friday, following week CPI on Wednesday, following Wednesday, Fed decision. How are things lining up for you?
I think that let's go backwards. From a Fed decision standpoint, I think the odds of doing nothing are extremely high. And it's really going to be a question of what the tone is. And to your point earlier, whether or not we still keep a slight easing bias or a neutral bias or a slight hawkish bias, the market is going to be looking at that very carefully because interest rates, while they don't actually matter for the spend, there is a relationship that happens with higher rates in the equity markets and technology that don't always accrue well to investors, right? So we don't want to see an enormous That would be problematic for markets where they sit right here. I think that the payroll numbers on Friday are going to look pretty good, and I think that we're still in that question of what is a good number versus a bad number, what is growth versus what we were used to seeing with a different immigration picture. So there's a lot of ways to look at that data, and probably you can find good things and bad things in it. CPI is going to be really important, right? Because it's going to be how much is this translating, not just through the energy picture, but into transportation, into higher prices, and that's going to be something that I think is going to be the most limiting right now on the Fed than anything else.
You're right to draw a distinction between preparing to change how you communicate policy and changing policy. They're clearly not preparing to change policy anytime soon, based on communication we've had so far. How consequential will a change in communicating policy be at the June meeting? Is that consequential, just slipping into neutral in a moment like this?
I think it depends on how far it would go, right? Because if it sounded extremely hawkish, then people would say that's a really big change. It's going to be incremental. How incremental is that change? And is that something that we have to be adding to the list of things that we might be worried about going down the pike, right? So it's going to be a question of degree and tone. And if it's not that wildly of a swing, then I think it's less consequential. But if it's a big swing, I think that becomes more of an issue.
Does Governor Powell go before year end?
I have no idea.
Does it matter?
I'm not sure it matters so much in terms of how the Fed is going to operate, but I think from an optics and a clashing standpoint, it's noisy.
It's really noisy.
Yeah.
I agree with you. Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. It's getting noisier, not quieter, going into this meeting in a few weeks' time.
Yeah, not to mention just the economic backdrop, but also, of course, the political one. The market's moved on. I don't feel like the market really cares about the personal drama and the interpersonal play, because they view Kevin Warsh as a viable option to be Fed chair. They see Governor Powell as under attack, so they don't see it as a consequence to policy. I will say it will be a consequence to policy, though. If you have a jobs figure that comes in hot, you have inflation that comes in hot, and this Fed still is reluctant to signal a rate hike, that will become consequential.
So I don't think the market ever cared, to be honest with you. I don't think it had to move on. It was never on it. That's my issue with this back and forth and the noise around it. I don't want there to be a dependency issue with Powell and this institution, that somehow if he leaves, we've got this massive problem. And the way he communicates around the issue could introduce that, I think.
Maybe. Let's see. I mean, ultimately, that's going to be the question. At what point does the market start caring? Right now, I was looking at Fed funds futures, really quiet, not necessarily suggesting some sort of complete increase at the long end.
Couldn't agree more. The market's just not there on the issue at all. Futures this morning up 0.25%. Sharon Miller of Bank of America joins us next.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Live from New York City this morning. Good morning to you all. Here's your price action. Equity futures on the S&P 500. Just about positive by a third of 1%. If you find this screen boring, Bramo can tell you more about how she did some plumbing over the weekend.
I did. I installed some new toilet fixture.
Okay.
I was really impressed with it.
What was
thinking
the
to
fixture?
myself, it was like the pump and sort of how you like flush the toilet. And
oh, so you did some some legit plumbing.
Some legit plumbing where you have to like unscrew the bottom. I was like, if everyone's talking about this plumbing, I can do it too. And YouTube really helps.
Supported by YouTube, not Gemini.
Well, I mean, I could go to Gemini if you want to send me your thing. But no, YouTube has a lot of really helpful videos to if you want to do your plumbing yourself.
Okay, good to know, Bramo.
But you could talk about
just the flavour of the very serious conversations that Bramo's having in some of the commercial breaks here. Let's turn to the bond market. Yields look like this. A bit of a bounce. 2s, 10s and 30s up by 2 basis points at the front end, 4.03%. Bit of a bounce on crude as well. You'll notice it on Brent and WTI this morning. Still no deal. I've forgotten how many times we've had a deal. I've lost count. I can go back to maybe April 17th when the president told us the Strait of Hormuz was reopening, and then it didn't. And it hasn't since over the last several months.
And remember, last weekend, the president did miss his son's wedding and said that he was dealing with Iran. And there was tons of reports coming out. And Sunday night, Axios had this report that there was going to be, at minimum, an extension for 60 days. And the Strait of Hormuz would be open, the blockade would lift, and then potentially they would work on the harder issues. Well, we are a week into that, and nothing has actually changed. There is one thing. You are seeing more reports, even from Iran itself, saying they're allowing some vessels to go through. The issue is, of course, is we can't quantify exactly what's on that cargo and how much that is. And that is why it's hard to time when potentially, especially definitely some parts of the world, are going to come to a place where they are just really running out of those physical barrels.
Equity futures this morning firmer by a third of 1%, even with that move in crude. As we count you down to the open, about 2 hours away, let's get you some morning movers, some single names. Yahira has more. Hey, Yahira.
Hi, John. We are seeing NVIDIA shares up 2.3% in the pre-market after it unveiled a new processor focused for Windows laptops, expanding NVIDIA's reach beyond data centers and into everyday consumer devices. But this will be on the high end, so think thin laptops outfitted with AI capabilities. And we are also seeing Microsoft shares rallying nearly 5% in the pre-market because the new chips are being built for the Microsoft's Windows ecosystem. Also on some bullish comments on software from CEO Jensen Huang, which we'll get to in a moment. But also important to note that Microsoft and NVIDIA are the only Mag 7 stocks in positive territory this morning. On the flip side, that NVIDIA news is causing pressure for these names, starting with Intel and AMD. The NVIDIA's new chips, of course, takes direct aim at the PC market, an area they've long dominated, and Qualcomm is not escaping the pressure either. Those shares down 10% since AI-powered PCs is an area that Qualcomm has been betting heavily on for future growth. And CEO Jensen Huang is not done moving markets. Because of him, we are also seeing a rally in the software stocks after arguing overnight in Taipei that AI agents will need more software tools and not fewer. So that is sending shares of ServiceNow and Salesforce higher in the pre-market.
Moving equity markets more than the central bankers are at the moment. Yahara, thank you. Seems to be the way, right? Jensen overnight. It's got a lot of weight in this stock market.
The market's moved on from the Fed. They're saying you're following us, and in the meantime, we're going to follow the dancing queen.
Look at it doing this.
Yeah, exactly.
Very 60s, 70s.
Yeah.
Okay, very cool. We've all lost it this morning, haven't we? All right. You having fun?
No,
I know you was.
Literally what Jensen did.
I have literally seen the video.
Yeah.
I literally know.
And yes,
thank you.
We're having fun.
Good. I'm pleased you are. Literally. All right. On a radar this morning, President Donald Trump insisting that talks with Iran over an interim peace deal will, quote, work out well. He's urging Americans to just sit back and relax. Trump's comments come as both sides continue clashing near the Strait of Hormuz. Elsewhere, NVIDIA revealing that Anthropic, OpenAI and SpaceX will be among the first to use its new Vera chip. Vera will go into full production in the third quarter. It's NVIDIA's first standalone data center microprocessor. And finally, shares of SK Hynix surging 1,000% over the past year. And the Janus Henderson Global Technology Fund is planning to buy shares, betting that a worsening chip shortage will boost profits even further.
You could say that this is just chasing the rally, number one, be skeptical of this. Or you could say that this means that even though the rally has already been more than 1,000%, there still could be more to go, which highlights the pain trade of things going higher despite some of the skepticism. Just to sort of some context here, this is an $8.3 billion fund that has outperformed 96% of its peers. So it's not exactly coming from a point of weakness when it comes to performance.
It is interesting, though, that they didn't already own so much of this, given the fact that they have Micron, given the fact they have SanDisk. I do think it's interesting is when you hear from the co-manager of the Leaders Fund, the customers are so willing to sign these contracts on what you think are fairly draconian terms. I want to know more about some of these draconian terms that some of these chip makers are signing with some of these customers, because it seems like it is so dire and they're just desperate to get their hands on it.
The move in that stock ever since the start of this year just hasn't looked back. I keep returning to the MSCI Emerging Market Index to get an updated weighting on things. SK Hynix is almost 7% of that index now. Samsung is close to 8% of it. Taiwan Semi close to 15%. So you're looking at like a quarter of the index in 3 names. I know I've repeated that a few times, but when people say they want to buy EM, buying EM today means something very different to what it meant 10 years ago.
That's the reason why the South Korean Kospi is up 102% so far this year.
Crazy. At the halfway point of the year, just unreal. The impact of AI on the workforce remaining front and centre ahead of Friday's payrolls report.
People talk about AI reducing jobs, complete nonsense. And the reason for that is very simple. Because the output is so incredible, people want to hire more. This is going to show up in our economy somehow soon.
Bank of America's latest business owner report finding small businesses are increasing spending on tech services, including AI. The team writing the following: we view this as a productivity play. Businesses are using these tools to improve employee efficiency and add growth. Sharon Miller, the president and co-head of business banking at Bank of America, joins us now for more. Sharon, good morning.
Good morning.
It's good to see you. Thanks for being here and sharing this report with us. I've got one question about this report. Where are they getting the money to make these investments? Are they cutting costs elsewhere? Where's it coming from?
Well, we are seeing an investment in AI, and as we look at, and technology, and when we look at what's happening in the overall experience for small businesses, their spending is up 14% year over year in technology and AI. So they are repositioning some of those funds to invest more into technology, AI, where that can help them with either their productivity gains or with, marketing, all different sorts of things we're hearing from clients.
Does that mean cutting staff when you're repositioning money?
I'm not hearing cutting staff. What I am hearing is people are holding off on perhaps adding another person. So this is about retaining their employees that they have today, reskilling them. We talked about that a bit at the break, learning some skilled labor, plumbing.
Yeah.
That was good. And I think that, at the end of the day, what I'm hearing from our clients is that they're just waiting to see what types of productivity gains they can have and what more capacity can they create for their employees.
I hate asking this question because it sounds very lightweight, but it's actually important. How do they feel?
How do business owners feel today? I would say cautiously optimistic. And as a small business, and we bank 3.5 million small and mid-sized companies at our bank. And when I talk to clients, when I'm in the marketplace, we're hearing there's certainly concerns. And I hear you guys talk about that gasoline prices, by the way. When we had our April report, gasoline per small business client on average was up 31% when you look at that spend. So talk about eating into some of the profits, and inflationary pressures. But as a whole, what we're seeing is that ingenuity and repositioning of funds to invest in technology, AI capability, so that they can do more and be more productive.
This runs counter to the narrative that we hear from a lot of big box stores and analysts who cover them, who say that they are monopolizing the entirety of the business, that they're gaining share. And you see that with respect to just some of the numbers coming in. They have negotiating power when it comes to their suppliers. They have economies of scale when it comes to deploying AI. How does what you see differ from that narrative that we hear increasingly from the Walmarts and Costco's, et cetera, of the world?
Well, I would say that, look, small businesses and medium-sized businesses, they do benefit from some of the downstream impact as well, from big companies investing into communities. There is competitive advantages when it comes to being a smaller company, less than 500 employees. You're going to have the ability to pivot a lot quicker than some of these large companies. Plus, I think it's about the communities. And when I'm out shopping, I do think about how can I connect with my community, help small businesses, and that really helps the economy. When you look at what is really happening in the U.S., small business, that is the backbone of our U.S. economy, creating 43% of jobs in the U.S. and just everything that's happening within our communities. It's really important that we are supporting them.
When you look at some of the pressures, you mentioned gasoline, and across the United States, it's very different. We're under $5 a gallon here on the East Coast, but you look at Nevada, Washington State, California, they are north of $5 a gallon. Are you seeing different risks and pressures to businesses depending on where they are across the continental
Yeah, and then
US?
Also what they do, right? So if you're in transportation, if you're moving goods, agricultural, you're going to have more pricing pressure when it comes to gasoline. I was in California just a week ago. It was over $7 a gallon when you're looking at the price. So, it does differ depending on what area you're in and what industry you're in. But yes, there's inflationary pressures, no doubt, and people are looking for ways to control those costs.
Are you seeing inflationary pressures, though, outside of that energy need?
You're seeing some inflationary, wages, right? Wage growth, when you think about wage growth in the U.S. And we were talking a little bit earlier around, are they hiring more? No, I wouldn't say that they're hiring more than what they have today. But what I would say on average is that we're seeing wages go up, and that's pressure on business.
Just for the record, with regards to California, Newsom blamed Chevron. Chevron blamed Newsom on this program just on Friday. Hopefully we cleared that up now, right?
There is something everyone can just do themselves. And the California Department of Energy has it out on their website when they take a gallon of gasoline and they show you how much you're paying for. And so much of that is taxes and regulation that is self-induced by the California legislature.
Similar problem right across the continent. In Europe. Sharon, we had Torsten Slok of Apollo on the programme a little bit earlier, and he was talking about the amount of people that are starting new businesses in this country. Are you seeing that in sign-ups at the bank as well? Are you seeing a pickup in business activity?
We are. We are seeing, we're acquiring new clients. We're continuing to grow market share, and business formation is up. So we do see that, and above really pre-pandemic levels. So
is it sector specific? What's driving it in your mind?
Well, I think, look, there are many businesses that are being formed that won't have payroll, so to speak. So just individual solopreneurs. When you look at larger businesses, we're seeing those being formed as well that are planning to hire employees. But I do think that business creation, formation, that is not down. In fact, it has increased. And so people are out there, whether it be they have stopped working in the corporate world, looking at entrepreneurship. But when you think about entrepreneurship and what's happening with wealth in the U.S., 30% of all of the wealth is really held with these entrepreneurs, small and mid-sized businesses. And that's over $22 trillion as you think about what's happening. And over the next few years, we expect at least 5 million of those businesses to either sell or transfer to the next generation. So there's a lot going on in the community, not just because of formation, but because of succession planning as well.
Just real quick, if the Fed were to hike rates, would that curtail some of that activity?
You know, I mean, look, we're at a historical low rate environment today. We have seen, you know, credit and our loan book increase throughout the past. We've been the #1 lender to small businesses in the U.S. for 19 consecutive quarters. We've grown our balance sheet every single quarter, and we continue to invest in the communities.
Sharon, it's good to see you. As always, thanks for being here. Thank you. Sharon Miller there of Bank of America on small businesses and business formation in this country. Didn't hate your question about feelings, by the way.
Oh, thanks.
I think right now sentiment is in focus. It's going to shape policies and actions in a number of ways. And you can see sentiment on the consumer side of things is at rock bottom. So something we all need to follow.
Well, I actually think that small business sentiment is incredibly important because it dictates whether they hire, whether they invest, whether they expand, whether they create new businesses. So feelings do matter.
Feelings always matter, Bramwell. How do you feel?
I feel great.
Feel good? You feel good? We feel good?
Is working
good,
well.
OK. Good. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Defense Secretary Pete Hegseth avoided mentioning Taiwan during a speech at the Shangri-La Dialogue, seeking to convince U.S. allies that staying quiet on Taiwan is the best way to project American strength. Intel is going after NVIDIA. The Financial Times reporting the company plans to ship a new AI chip by the end of this year. The chip will use cheaper memory and cooling technology than its rivals. And the New York Knicks will meet the San Antonio Spurs in the NBA Finals, a rematch of 1999. The Spurs are looking to return to the title for the 6th time, while the Knicks are seeking their first championship in 53 years. Game 1 is Wednesday in Texas. That's your Bloomberg brief. John?
Isabel, thank you. I've sat here repeatedly and said, not a great product when it comes to the NBA. That is a great product.
It's going to be amazing.
That is going to get
Especially
a lot of eyeballs
when
on a lot of TVs.
Yeah, it only costs, you know, $5,600 for a nosebleed seat.
It's cheaper if you go to San Antonio.
I'm not talking about seats. I'm talking about as
base
media content.
Yes, I'm glad that you have come around. I'm glad that it took a championship.
I'm just saying that this is like, in an ideal world for the NBA.
This is
the final they wanted.
Exactly.
Without a doubt. Up next on the programme, shifting the narrative.
It is entirely appropriate for Fed officials to be thinking about raising rates. I think you need to have a shift in the narrative from the Fed that needs to take place.
Up next, we'll catch up with Ed Al-Husseini of Columbia Threadneedle, live from New York City. This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Equity futures right now in the S&P up by 0.25%, up by a quarter as well on the Nasdaq 100. In the bond market, yields with a bit of a bounce, following a bounce in crude as well. 2-year yields high by 3 basis points. Under surveillance this morning, shifting the narrative.
It is entirely appropriate for Fed officials to be thinking about raising rates. Our view is that the Fed is on hold, that they are roughly at neutral. I think you need to have a shift in the narrative from the Fed that needs to take place. They need to downweight the idea that this is about temporary forces. They need to downweight the idea that the labor market is not a source of inflationary pressures.
Here's the latest this morning. Bond traders looking for strength in Friday's payrolls report to confirm bets on future interest rate hikes. Ed Al-Husseini of Columbia Threadneedle writing, markets have now repriced the Fed's terminal rate by a bit under 100 basis points over the past 2 months, from around 2.5 cuts at the end of February to around a hike today. Seems fair to me. Ed joins us now for more. Ed, good morning.
Good morning.
You're sort of endorsing market pricing, but as a base case, do you expect them to hike anytime soon?
No, I think the bar for that is still pretty high, but it's important for them to create the permission structure for markets to price in these hikes.
What kind of steps do you think they take in June to create that permission structure?
Well, the obvious one is removing that language around the easing bias. I think that's fully digested by markets at this point. That's been well front run. But I think starting the conversation around what do they see in the inflation story that's concerning. There are elements that have to do with the tariff pass-through, maybe peaking. There are elements that have to do with the AI demand that maybe just be starting. And then there are elements that are legacy from demand over the course of the past several years showing up in services. What of these parts of the inflation basket concerns them at this point?
To cite the current Fed chair, inflation's a choice. What part of that story, the inflationary mix right now, is a choice? What do they have control over?
I think ultimately, if you take a step back, you have to have a theory of change for inflation. What's driving it? And the Fed, I think correctly, has put the labor market at the center of that story. So to the extent that they've tightened policy in the course of the past 5 years, they've cooled the labor market, they've brought down wage growth. That's the key transmission mechanism here. And so when they look at the inflation story today, one of the good elements in the background is that there isn't a lot of heat in the labor market. There aren't a lot of factors to accelerate the inflation push that we're seeing at the moment.
At the same time, you could argue that there is a financial markets input that is pretty strong into the inflation rate, particularly because it's coming from the higher end and because it's coming from the wealth effect. People feel richer. They might feel miserable, but it's a good time for shopping therapy. So at what point does the Fed want to hike rates to curtail some of the enthusiasm if they're seeing that enthusiasm in markets trickle into inflation?
That's a really good point. I think one of the key debates, and we've had folks like, Goolsbee start to surface it, is how much is the anticipation of higher productivity bringing forward demand? Because if it's significant and we anticipate this productivity in the future, that's a positive demand shock that the Fed should start to offset. That's equivalent to the late 90s, is kind of the cleanest analog. On the other hand, if productivity does not materialize, if we're still in the early stages of anticipating this productivity, then the demand shock is relatively weak. That's something we can look through.
At this point, based on the backdrop of a Fed that probably is going to be pretty reluctant to hike rates, even if there is a pretty strong labor market and you do have inflation that continues to run hotter, and the fact that globally you're seeing investment pretty substantially coming from governments in a whole host of different metrics, how much do you hate long-end bonds?
I think long-end bonds have repriced. It's really interesting if you again, zoom out. 30-year yields at 5%, maybe a shade above. There are two questions to ask. To what extent is the Fed going to protect the inflation risk premium further out of the curve? And I think they've started to move in the direction of offering investors that protection, tightening policy in the front end. Again, the result here is the yield curve has started to flatten quite materially. If you look at those spreads between 5-year yields and 30-year yields, they're now the lowest level in about a year. That's a meaningful signal.
ओके गाइस, ये नेचुरल गैस में यहाँ पर चाहो तो प्रॉफिट बुक कर सकते हो। नीचे एक सपोर्ट है, देखते हैं सपोर्ट से बाइंग कितना जल्दी इनिशिएट होती है। डे हाई पहला रेजिस्टेंस रहेगा, उसके ऊपर निकलता है तो फिर 331। अगर 310 के नीचे सस्टेन किया तो हो सकता है कंटिन्यूएशन में चला जाए। तो फर्स्ट मेजर सपोर्ट यही है, इंट्राडे का कह सकते हो। कल से इसी रेजिस्टेंस पर रुका हुआ है, अब ऊपर गया तो फिर ये भी वीक हो जाएगा। तो फिर यहाँ से ये लेवल होल्ड होना 320-25 का मुश्किल है। सो दीज आर द टू लेवल्स नाउ फाइटिंग। तो इस एरिया के आसपास बाइंग करना है। थोड़ा हो सकता है वॉलेटाइल रहे, जरूरी नहीं है एग्जैक्टली 310 पे हिट करे, 12 पे भी जा सकता है, 10 के नीचे थोड़ा भी जा सकता है। ऊपर कोई रेजिस्टेंस और है नहीं, 331 ही एक मेजर रेजिस्टेंस है फिलहाल के लिए। क्रूड ऑयल में कुछ नहीं चल रहा है, मॉर्निंग से बाइंग में ही है। रेजिस्टेंस थोड़ा सा दूर है। फॉरेक्स में देखोगे अराउंड $93 के अराउंड है। MCX में तो $9,000 पे दिखा रहा है। मुझे लग रहा है शायद अगर थोड़ा सा फॉरेक्स करेक्ट होता है तो इस एरिया के आसपास कहीं रेजिस्टेंस भी देखने के लिए मिल सकता है, डिपेंड अपॉन द फॉरेक्स चार्ट, बिकॉज अपना थोड़ा सा चार्ट अलग ही चल रहा है MCX में। ठीक है, करंट लेवल से अगर देखें फॉरेक्स में तो अप्रॉक्सीमेटली 2.70 से 3% की डिस्टेंस और है अभी भी। हाँ, तो वही 8,860-70 के अराउंड। पॉसिबिलिटी है वहां से एक सेलिंग आ जाए। लेट्स सी, देखते हैं। 5:30 होने वाला है, न्यूयॉर्क सेशन जस्ट गोइंग टू ओपन। 7 PM यूएस मार्केट, 7:30 मैन्युफैक्चरिंग PMI का डेटा रहेगा। इंडिया का तो आया है, अच्छा डेटा रहा है इंडिया का। मैन्युफैक्चरिंग PMI लास्ट मंथ से इंक्रीज होके आई है। लेट्स सी, देखते हैं यूएस में भी थोड़ा सा इंक्रीज होने के चांसेस है, होती है या फिर नहीं। कई सारे स्टेटमेंट आ रहे हैं फ्रॉम ईरान एंड यूएस। ईरान ने कहा है कि कोई नेगोशिएशन चल ही नहीं रही है, देयर इज नो नेगोशिएशन बिटवीन ईरान एंड यूएस। प्रेसिडेंट ट्रम्प कह रहे हैं कि नहीं, हमारे बीच नेगोशिएशन चल रही है। तो नीड टू सी।
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The equity market has been super optimistic. Earnings have been quite strong.
Investors have never been richer and more miserable.
We're in a high-risk bull market.
The big issue is positioning. So positioning overall still is pretty subdued.
Just stay involved and look how your equities have done.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. And your scores look like this. Record highs coming into Monday. Once more, equities adding some weight to the rally, up by 0.25% on the S&P 500. On the Nasdaq, up by 0.2. Bit of weakness on small caps, maybe off the back of this move in the bond market. Yields creeping a little bit higher at the front end of the curve by 3 basis points this morning. Off the back of this move in energy, Brent and WTI bouncing following further strikes over the weekend at the absence of a deal, up by 3% this morning on Brent, just short of 94, going into a week ahead full of economic data. The headline act later this week is Friday. It's the payrolls report.
This is an incredibly important payroll report. First of all, it is the last payrolls report ahead of the first meeting for Fed Chair Kevin Warsh, which is going to be instrumental in setting policy, given the fact that we've had inflation above target for more than 5 years, inflecting in the wrong direction. People are saying, well, it's because of oil prices, and that's transitory, that dreaded T word coming back into play. If you have a hot labor market, that becomes less transitory. And suddenly, if people are looking at wages that are growing at a little bit faster clip, everyone's asking for a raise, taking Jonathan Farrow's advice. Yes. All of a sudden, you have a little bit of an issue that the Warsh Fed has to deal with.
This is going to be a very important labor market report, not just for the Federal Reserve, but also the administration, which is trying to go into, we're just really peak election season ahead of the midterm elections this summer. And they're trying to really jawbone the market. And the president, Kevin Hassett, Scott Bessent, the Treasury Secretary, constantly say that oil prices are going to drop. And they're not right now. They're rising across the continental United States. And until they get a deal, potentially we are going to hit very low inventory levels, and we can see skyrocket of energy prices. The one thing that they do have, though, is a low unemployment rate, and that is why it's so important.
Back yourself. Don't let your employer have the leverage. Believe in yourself.
So
ask for that raise.
Fed officials, Kevin Warsh, you can call up Jonathan Farrow and tell him what you think of that.
Economists are the only people on the planet worried about higher wages, right?
Yeah. Okay.
Name
we
another
want to see people.
Group of individuals that are worried about higher wages.
Exactly. At the same, yes.
Employers maybe have to give them out.
As for a raise, it's just a question about how much you're going to get taxed on the other end of it.
Economists should be the ones that take wage deductions every year. They started this.
Economists have mentioned over the weekend in the different various trips that they all take, they don't think that they're going to be made obsolete.
Have you noticed that?
Because of artificial
of course,
intelligence.
Yeah.
John
in
Williams.
Reykjavik, Iceland.
Or in, Serbia or wherever they were.
What are Fed officials doing in Reykjavik, Iceland?
I think that this one was in Croatia.
Oh, this was in Dubrovnik?
Yeah, this is the Dubrovnik seminar that John Williams was talking about how
what are Fed officials doing in Dubrovnik?
It's actually beautiful, especially if you like Game of Thrones. They have some beautiful.
Do they?
I think that a lot of it. No, but I've seen. That's where
looked into it.
Yeah, that's where a lot of it was filmed.
I'm going this summer.
There you go. You see, you're both bullish your jobs as you should be. Coming up, Peter Cheer of Academy Securities with stocks eyeing an 8th straight day of gains. Kristen Caligus-Rowland of JP Morgan on investing in the next generation of AI winners. And Noah Weisberger of BCA, research on how AI is rewarding reinvestment over returns. We begin this out with stocks building on record highs and crude rebounding from 6-week lows. Peter Cheer of Academy writing the higher for longer theme for energy prices will sink in and start to price itself into markets even more. Pete joins us now for more. Pete, good morning.
Morning.
Price itself in what way? Into growth expectations or even more into inflation expectations?
I think into inflation expectations, pushing bond yields higher. And again, I think you've been pointing out, right, the stock markets are at all-time highs. If you strip away the AI story, stocks haven't. So they've already been pricing in some of this. So I think that affordability risk is there a little bit in stocks. You have to look through to the various subcomponents to see it. I think that continues. And unfortunately, I think it gets worse because unlike what they're saying, I keep looking at the January futures contract for oil. It's, right around 80. It has not dropped much at all. So all of a sudden, this whole kind of concept that we had 2 months ago where by the end of August things would be normalizing, I don't think we're normalizing anytime soon. And this is still hasn't fit the economy fully.
Straight shut for 3 months. We've had a bit of leakage, but all but closed for 3 months. We've had a move of about 60 basis points at the front end of the curve. So 2-year yields have been higher. What more do we need to do on the rate side?
I think we are probably going to see 5 on 10s before we see 4% on 10s. I think you're just going to see global bond yields under pressure. Everyone has to spend on defense. Everyone has to build out their industrial base. Everyone's got to build out electricity and energy prices. People are feeling that pinch. So I think global bond yields are going higher. We're going to face that. And I think we're at the point, if we get too much dovish talk out of the Fed, they will lose some control over the long end of the yield curve. That was not my view back in February before we started the invasion, but now everything that's going on tells me that if we try and, jawbone about rate cuts, we're going to lose a little bit of control at the long end.
I was reading your note and I was a little bit pessimistic, and we'll get into horses and whether we're the horse in just a second. But actually, it's making me really optimistic to hear you say this, because you still think that growth will surprise to the upside. Ed Al-Husseini was on, and he thought that actually the bigger risk right now was growth surprising to the downside and the possibility that bonds would actually be a buy here. Why do you disagree with that?
One is I think people underestimate the data center and AI, just the amount of jobs that are being created to build this out, right? The chip industry is, going like gangbusters. The construction business going extremely well. The electricity generation business going phenomenally well. So I think ultimately it's somewhat weird is I think you create a lot more jobs to build out the data centers. Then once the data centers are up and running, those particular places don't have that much employment. But to get there, this build out, I think it's been very good. It's been very good for logistics. It's very good for, the cats, the deers of the world to provide things for them.
Yeah, and this is the reason why you are seeing some job growth in places like construction and manufacturing, as well as in other related areas. Torsten Slok of Apollo was on earlier saying that he saw job growth actually expanding across different types of sectors as a result of artificial intelligence. Let's get to the horses. You think that if you create an analogy to the horse and buggy, it's unclear whether horse and buggy or automobile to human is the right analogy, or whether it's automobile to horse. Are we the horses?
That's my concern. I think, you start any business class, they always go through the buggy whip and what happened to buggy whip manufacturers who all had great jobs until the automobile. But the automobile was great for the country, right? It was great for everyone. There was huge efficiencies. The automobile industry. I'm looking like, are we the horses, though? Are they actually trying to replace humans this time? There were 25 million horses before the automobile. There's about 7 million. Now, when you read about it, the horses today have a much better life. They don't do any hard work. They sit there and, they graze. People ride them here and there. But so, maybe we all need UBI. But again, I'm not as convinced at this point that this is going to be great for jobs. I can see that argument, but I also see, this is the first time I've really seen a technology, I think, that's going after all our jobs in a different way.
But there is also a counter-argument to this. Before Uber was coming into a lot of cities, there was people protesting, people were saying we need more regulation because it's going to mean that basically in New York City, taxi drivers will be obsolete. But now what you have in New York City today is more drivers than ever. Uber, Lyft, plus the taxi drivers. Isn't that counterintuitive?
I think one thing I've certainly noticed, the price has gone way up, right? There was a price cutting where everything went down, and now I pull up my Uber app, I'm like, oh man, I better take the train home. I can't afford to take the Uber home. So,
but the point is,
some
Uber
of that
didn't
too.
kill driving or taxis in New York City.
No,
it changed it.
It changed it, and again, I think all the taxis have adapted to an Uber-like sort of thing. So it's grown, it's good. But again, that's one job, and again, it didn't feel like it was revolutionizing anything. It was still how you get your taxi. Instead of sticking up your hand, you used an app. There were things that allowed people to take advantage of that. The other part of this is, I think everyone's talking about, people are trying to create jobs. I'm not sure becoming an Uber driver, things like that, is the same sort of job level as when someone starts a bakery or something where they're going to employ 3 to 5 people. So I'm a little bit skeptical. Birth-death model, once again this year, is a big part of job growth. And for the last 3 years, birth-death model has played a role, and then they wiped down the jobs by 750,000 to 1 million because these aren't the same sort of, new company formation that we had in the past.
UBI, how costly is this going to be? Where's the money coming from?
It was some of those things. I've really tried to avoid thinking about universal basic income. It kind of just gets me wrong. And then all of a sudden, 2 weeks ago, I better start writing about this at least a little bit. South Korea seems to be the first ones that are kind of pushing that direction, right? Their economy is so bipolar, right? It's like you've got this memory and the chips just crushing, absolutely crushing it. The rest of the economy, I don't know, they're benefiting, but clearly there's some degree of willingness to share these profits. I feel like the biggest threat right now in the U.S. to AI data center story, it's not the use, it's not corporations not wanting it, it's politicians trying to latch on to some of this negative sentiment, either about the electricity generation, the electricity usage, or the jobs. And I feel this is going to be a political risk more than anything. Maybe that's why I kind of mentioned UBI.
Who's got the appetite to raise corporate taxes?
Well,
could that become a bipartisan issue?
Who thought we'd have a mayor in New York that on many times seems, very socialist, to say the least. So, yeah, I could see something.
That's what I'm watching for. Just if the Republican Party starts to get along with the idea that that's the next step of populism, that you have to do something about corporate taxes.
Or maybe it's the Democrats. I feel like there's something bubbling below this that is, there's something unfair about what's going on with AI and electricity. I don't think it is at all. It fits our exact theme that we need to be good at data centers. We need to be good at AI chips, building out electricity. I think we're seeing a reindustrialization. I think it's great for the heartland of America where you're seeing this growth between the Appalachians and the Rockies. But politicians do seem to be trying to latch onto something. And just the sentiment 2 weeks ago when all we were talking about was every commencement speech where someone mentioned AI was almost booed off the stage. Maybe that's a bit extreme, but there is something bubbling, and it feels like the sort of thing some politician could latch onto. And this UBI seems popular with some people. So that, to me, would be the derailment, is this becomes a big election issue.
Well, there's massive backlash, and you have the extreme right and the extreme left want to do things like taxing Bernie Sanders and Steve Bannon. So this is going to be not just a midterm election issue, but 2028. To John's point, what happens if you see policy that's directed at these companies?
Then again, I think you're going to see a little bit which countries across the globe rush to take this in. Again, the Saudis and other countries in the Middle East want to become the data center caps of the world. That's kind of been derailed a little bit, certainly since the fighting. Depends what sort of peace agreement you wind up with. If you have a peace agreement where Iran still has the ability to have a lot of missiles and can threaten the Middle East, it probably doesn't grow there. If not, maybe they invite this. So I think there's going to be a lot of political wrangling. And some of this is even good. As Canadian, when they all say we're having some interesting conversations, and Canada actually gets a do-over. And we kind of screwed up LNG in Canada. 15 years ago, it could have been us or the U.S. The U.S. has been phenomenal at it, right? It's grown out. Canada kind of got mired in regulation. But all of a sudden, with demand from Europe and other places who want to maybe avoid Middle East. So there are these huge opportunities. And again, I think it's all around this electricity generation, the reindustrialization, the data centers and AI. And you're going to see, I think, even in the U.S., state by state, who rolls out the red carpet or who keeps the red tape. And that's going to determine the winners or losers for the next 10 years.
Do you think Prime Minister Mark Carney's figured that out?
I doubt it. Though he has made some improvements. I think he's seeing some of it. I think you're...
Okay.
Again, I'll go back to, the president says lots of things. The one thing that I kind of remember in the last few months is when he chastised the leader of Scotland and said, you buy North Sea oil from Norway, you buy turbines from China, you have your own North Sea oil that you don't use. That seems idiotic. So I keep coming back. I think they're going to unleash the petroleum and energy companies in Europe. We're probably still months away, but even there, I was just in London, the concept of a changing view of ESG to be much more true sustainability and resilience, it's developing. It's not there, but it's coming.
It's interesting to track the politics of the left on this issue and how things are shifting pretty quickly.
It's out of necessity. It's out of the reality of the moment. I will just say, when you talk about UBI and some of these populist measures, the U.S. isn't going to be the first place. I was speaking to the Thailand and the Turkish finance ministers. They're talking actively and verbally about some sort of universal...
You got breaking news, Bramo?
No, I'm not saying I've got breaking news. This is a couple of months ago, but there is that discussion happening around the world, and there are a number of countries that don't see the benefits as much as the potential pernicious impacts on their economies, and those might be some of the first movers.
I just hate the idea, and I hope this is not the world we're going to, but I hate the idea of having this centralised power down in the nation's capital who gets to decide what everybody earns because there are no jobs. That sounds like a terrible future to me. If you take aspiration out of society and wanting to climb the ladder out of American culture, is that the world we want to go into in the next 20 years? Do you remember that line from Reagan where he said the scariest words in the world were, I'm from the government, I'm here to help? Yeah. I'm a tech bro, trust me. They're the words that are scaring me right now.
Yeah, the idea of work as purpose is something that's really been at the underpinning of the nation. So the idea that we'll just give a payment to everybody and that's going to fly, right. It doesn't have the same kind of palatability as it does in other places that are more, perhaps, amenable to that kind of idea. That's why I say look outside the U.S. for that kind of mover, that type of first mover. That said, we're a long way from getting there. Even the fear of that's going to drive policy before we get there, and that, I think, is what people are looking for right now.
Pete, it's good to see you. It always is. Thank you, sir. Peter Chair of Academy Securities. Thought Bramo was breaking news on Turkey just a moment ago.
No, I'm just saying that there was an entertaining of that idea much more than U.S. officials currently.
Just in case you're in Turkey.
It was not breaking. Please do not, no.
Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Isabel Lee has more. Hey, Isabel.
Hey, John. Iranian officials addressing the status of peace talks, claiming that, quote, transfer or disposal of its nuclear material is no longer in the latest U.S. draft. Tehran also saying the ceasefire is in effect on all fronts, including in Lebanon, and that the U.S. and Israel are responsible for any violations. In his first public comment since being succeeded by Kevin Warsh, former Fed Chair Jerome Powell highlighted the importance of central bank independence. Powell said the Fed would lose credibility if any president were free to dismiss Fed officials over policy disagreements. And NVIDIA unveiling Vera, a new CPU aimed at energy-efficient data processing. CEO Jensen Huang shared that Anthropic, OpenAI, and SpaceX are among some of the first biggest users of the new microprocessor. The new product will go into full production later this year. That's your Bloomberg Brief. John?
Isabel, thank you. Anne-Marie's still dancing. Still.
I like his dance.
Look, I said he looked pretty cool.
He did.
Not in a traditional kind of way, just the fact that he's enjoying himself at the party.
Yeah, he was enjoying himself. He was at the party enjoying himself.
Have you got the mug ready?
Took the leather jacket off. Yeah, we're waiting for the bum shot.
AMH positions the mug so it gets the shot
We need good
in the commercial break.
We need good,
And partners with the cameraman to make sure it gets picked up.
I was trying to do it without anyone noticing, and John picked up.
Yeah, of course. Up next, your morning calls plus Kristen Caligas-Rowland of JP Morgan Private Bank on finding the next generation of AI winners from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Initially, the AI boom will certainly be inflationary. It's very clear when you look at semiconductor prices, when you look at energy prices, when you look at labor. Also, of course, when you look at the broader equipment prices, it is also very clear that this is going to be inflationary. On top of the upward pressure on inflation coming from the lagged effects of tariffs, and of course also higher energy prices.
Torsten Slok of Apollo on the programme a little bit earlier on this morning. If you're just joining us, good morning to you. The price action, the score is shaping up as follows. Futures on the S&P 500 adding some weight to the rally, up by 0.2% this morning, following a 7-day winning run on the S&P, a 9-week winning streak on the S&P 500. One of the longest streaks we've seen going back to the mid-80s if we make it week 10. On the Nasdaq 100 this morning, just about positive. With this move in the bond market, yields higher across the curve, particularly at the front end, up by close to 3 basis points, 4.03% on a 2-year note this morning. Off the back of this move in crude, WTI and Brent higher this morning by close to 3%. Brent crude at 93.63. That's the price action. Let's get you some morning calls. First up, Barclays initiating coverage on IBM with an overweight rating, seeing a stable growth engine around its very defensible software portfolio. Your second call from Mizuho, raising its price target on AMD to 615 from 515, saying agentic AI should drive demand higher. And your third and final call from the team at Morgan Stanley, upgrading Dow to equal weight, saying the company is maintaining the semi-supply chain shortage better than its peers. Bit late on that one.
Especially since those shares have been higher than a lot of people. But it highlights how there still is upside that people are seeing right now, despite the rallies.
Not to throw shade. I know that was throwing shade. But all these analysts, many of them have struggled to keep up with the earnings momentum of many of these stories, which is unusual, to say the least.
And why a lot of people are still bullish, even though the gains have been eye-popping, to say the least.
I should get more sleep. That stock is up by more than 1%. Investors eyeing the next leg of the AI trade as the focus shifts to the physical build-out. Kristen Calagus-Rowland of JP Morgan Private Bank writing, power is the bottleneck and private infrastructure is central. Major value creation of next-gen AI winners is happening before the IPO. Kristen joins us now for more. Kristen, good morning. Good to see you.
Thanks for having me.
That last line is so important. I'm going to talk about SpaceX. You don't have to. SpaceX founded 24 years ago. So much value creation has already happened for so many of these names. Is that beyond just the 3 big IPOs people are expecting this year?
I do think that the shift in the private markets and the ability to build these companies is something that can't be done in the public markets, which is why within the world of artificial intelligence, when we have these tectonic shifts, everyone's trying to figure out what's the best way to access that. And I think a couple years ago, most folks looked at the Mag 7 and others and thought that was a easy and efficient way to access. And I think some of these now platform companies are making us rethink, given that the S-curve is happening pre-IPO, that maybe the attention should be shifting to private markets. So especially in a world of AI where there's platforms being created, I think people are looking at the private markets and saying maybe there are other things that we should be thinking about as these builds keep happening.
How crowded is that trade already, given the fact that this has been going on for quite a while?
It's a good question. I mean, I think in private markets, you would say everyone used to talk about the unicorns, companies that were worth more than $1 billion. Now people are talking about the decacorns, because when you look at the unicorns, there are $4 trillion of them. Interestingly, though, if you look at where the concentration happens, almost 80% of unicorns are in platform companies, about 24 of them. So think of the SpaceXs of the world. And so I think there's still a lot taking place where it might take 24 years for a SpaceX to get to where they are today. But I do think AI is accelerating that shift in a lot of these places where there is the bottleneck of what happens to the future of AI. So
one of the risks in private markets has always been that for every SpaceX or OpenAI or Anthropic, there are about 150 different companies that have failed and lost everyone's money. And at what point do you see that kind of risk increasing, given the uncertainty of the destination and what's going to ultimately work?
Yeah, I mean, I think the reality is in the private markets, everyone thinks that it's hard to be, disciplined around risk. And the reality is now people are raising so often. The CapEx needs for AI are so huge that when you go to raise that next round, it's not happening a couple years later. It's happening 6 months later or 9 months later. So if you don't hit those marks, the reality are you don't get that next funding round. So I do think the opportunity set is huge. I think the dollars at work is large as well. But I do think the people that are, the working versus not working, how quickly that's taking place and being caught is actually happening faster than I would have thought.
I know you're also focused on fragmentation around the world and
Yeah.
the price of security.
Totally.
Is that also where you're seeing a lot of money being spent?
Well, it's interesting because if you think about AI, one of those next layers when you think about the move into physical AI and the need for security and resiliency, I mean, the reality is that global fragmentation is providing more opportunity sets in the private markets because you have Europe that needs to increase defense spending. That's happening probably 2 to 3 times as to what they've done. You have the US that trade policies are changing, durable realignment to figure out where that's going to, provide opportunities. And then you have China that's trying to figure out how to become, energy and resource independent. So all of those things, I think, are creating a world. The world is becoming more globally fragmented, and so are the private markets because people are trying to find solutions in every pocket of this, which is pretty fascinating to watch.
Is that a world that's getting more expensive?
Is what? Say it again.
Is that a world that's getting more expensive, that shift from globalization to fragmentation?
Likely, and I think it's one where a lot of our clients are concerned about things like inflation and what that's going to mean in the portfolios and figuring out, am I positioned appropriately for it? I think when we look at even our own client base, 20% of our assets under supervision are still held in cash. And I think people need to think about what is the impact of inflation. And I also think a lot of folks look at things like infrastructure and recognize the ability for that to provide some inflation protection. But the reality is 80% of our largest families still have no allocation to infrastructure. So there's a lot of conversations that we're having right now to say, what are the impacts? Where can the private markets provide those opportunity sets? But how are you actually positioning your portfolios? And we'll see how that plays out over the coming months as people understand more of the implications of AI.
Kristen, this was smart. Bit of a clinic. Appreciate it. Thank you.
Appreciate you.
Thank you. Kristen Canagas-Rowland there of JP Morgan Private Bank. Whenever we talk about that, I always think about the bond piece of the portfolio.
Well, my main question was the same one to Sharon Miller, which is all this enthusiasm, is any of it going to change if the Fed were to hike rates, right? Because ultimately, if you end up with a more inflationary backdrop and this need, an existential need for capital, does a rate hike change anything in this? And the answer is no, at least not for Sharon Miller. And it seems similar in this case. And so you just have to wonder, what's the obstacle? I don't know. This is a fascinating morning.
It's not going to reshape the CapEx intentions of an Alphabet or a Microsoft anytime soon.
Or an entire country or continent.
To that point too, by extension. Coming up, Nancy Lazar, Piper Sandler, on whether inflation has peaked in the United States. Plus, Shahara's got some morning movers for you. NVIDIA unveiling a new chip for PCs. That stock is up at the pre-market by more than 2%.
ओए गाइस, एक कैंडल का ध्यान रखना, ओपन इक्वल टू हाई कैंडल है। हो सकता है किसी न्यूज़ की वजह से गिरी हो। लास्ट 2 कैंडल दोनों के दोनों ओपन इक्वल टू हाई हैं, अगर रिटर्न कर जाती है इसके चांसेस कम ही हैं, 2 मिनट रह गए हैं। दो पॉसिबिलिटी, अगर इसकी नेक्स्ट कैंडल भी इसके नीचे क्लोज हो गई तो ये तो ब्रेक डाउन है कम्प्लीटली। अगर ये फेक ब्रेक डाउन है क्योंकि कैंडल ही ओपन इक्वल टू हाई है, रिटर्न करता है तो एंट्री हो जाएगी। याद रखना ओपन इक्वल टू हाई में डायरेक्टली एंट्री नहीं होती है। तो वेट करते हैं, देखते हैं नेक्स्ट कैंडल इसके नीचे क्लोज करती है या फिर रिटर्न करती है। ये तो वापस नहीं आने वाली, खैर चांसेस आर वेरी लेस। सडनली ओपन इक्वल टू हाई बनी है इन द सेंस ऑफ डेफिनेटली देयर इज अ न्यूज़। रिमेंबर फॉरेक्स में ओपन इक्वल टू हाई नहीं है, सिर्फ एमसीएक्स में ही ओपन इक्वल टू हाई है। कैंडल नॉर्मल है, ठीक है। लेट्स सी, कोई न्यूज़ तो नहीं है। ठीक है, न्यूयॉर्क सेशन ऑलरेडी ओपन है। लगभग 5%, ऑलरेडी 2.72% डाउन। रिमेंबर दिस कैंडल इज ओपन इक्वल टू हाई, सेल मत कर देना वापस से, सपोर्ट ब्रेक नहीं हुआ है अभी। दो पॉसिबिलिटी है जैसे सेड अर्लियर, या तो नेक्स्ट कैंडल इसके नीचे क्लोज कर दे तब तो ये ब्रेक डाउन है कंफर्म। अगर ऐसा नहीं होता है, नेक्स्ट कैंडल वापस रिटर्न कर जाती है तो फिर ये एक डब्ल्यू पैटर्न में जाएगा वापस। सो बोथ द पॉसिबिलिटीज इज देयर। Sweden is turning the Baltic island of Gotland into a NATO stronghold, boosting troops, air defense, and base infrastructure. Missile launch directed from Lebanon towards northern Israel. ये कैंडल भी ओपन इक्वल टू हाई बनी है, बट लेट्स सी रिकवर आता है नहीं। 10 मिनट है कैंडल क्लोज होने में फॉरेक्स में। ये कैंडल फॉरेक्स में ओपन इक्वल टू हाई है, एमसीएक्स में नेक्स्ट कैंडल जिसने ब्रेक डाउन किया है। ठीक है, अगर ये कैंडल इसके नीचे क्लोज नहीं करती है, ब्रेक करते अलग बात है, क्लोजिंग नहीं आती है तो मेरे अकॉर्डिंग रिवर्स करना चाहिए। वापस आएगा अगर। कैनेडियन 12.5 के ऊपर, ये ऊपर वाली ब्लू कलर की लाइन के ऊपर अगर ये वापस आ जाता है तो एक डब्ल्यू में फिर से बाई करेंगे। ठीक है, ओपन इक्वल टू हाई है, लगता नहीं इसका तो हाई ब्रेक होगा इजीली, कैंडल भी क्लोज हो चुकी है ऑलरेडी। सपोर्ट अभी भी इंटैक्ट ही है, बट अब कंफर्मेशन चाहिए, क्लोज ना हो तो बेटर है। US Central Command has announced that 2 Iranian ballistic missiles were fired at US forces in Kuwait. last night at 11 p.m. Eastern Time, the incoming missile were defeated and there were no injuries to US personnels. ठीक है, एज एक्सपेक्टेड मुझे लग रहा है पुल बैक आने के चांसेस हैं। देखो लेने को यहाँ से भी ले सकते हैं, देखा जाए तो एसएल गया नहीं है अभी, बट फिर वही है ना, अगर नीचे क्लोज हो गई तो ब्रेक डाउन ही हो जाएगा, बड़ा एसएल चला जाएगा। रिकवरी भी आनी पूरी ज़रूरी है लेवल के ऊपर, अगर ये फेक ब्रेक डाउन है इन केस, क्योंकि एग्जैक्टली कैंडल ही सपोर्ट पे बनी है ओपन इक्वल टू हाई। आइदर देयर वाज अ न्यूज़ आइदर जस्ट फॉर सेलर्स ट्रैप, कि बायर को भी निकाल दें और फ्रेश सेलर एंटर करके फिर रिटर्न कर जाएं लेवल के ऊपर। न्यूज़ स्पेसिफिकली फॉर नेचुरल गैस आई कांट सी एनीथिंग, क्योंकि अगर कोई बड़ी न्यूज़ होती तो क्रूड ऑयल भी मूव करता, ऐसा कुछ हुआ नहीं है। तो मोस्टली इट इज़ ट्रैपिंग। सपोर्ट है, लग रहा है ब्रेक डाउन जैसा किया है, अभी भी हुआ नहीं है ब्रेक डाउन, तो किसी ने अगर डायरेक्ट बाय किया होगा उसके एसएल गए, फिर सेलर एंटर हुएंगे रिटर्न करेगा उनके एसएल चले जाएंगे, तो मोस्टली इट इज़ अ ट्रैपिंग। तो ये कैंडल बड़ी इंपॉर्टेंट होती है सपोर्ट रेजिस्टेंस पे, ओपन इक्वल टू लो not for seller at resistance, and open equal to high not for buying at support. लें तो ऐसा और कितना रहेगा नीचे, काफ़ी चला जाएगा, एक पुल बैक आ जाए ना उसके बाद देखते हैं। ठीक है, याद रखना अगर इस लास्ट कैंडल के नीचे ही कैंडल क्लोज हो गई तो ब्रेक डाउन हो जाएगा पूरा नेचुरल गैस के सपोर्ट का ही। वहाँ पर उस लेवल पे भी क्लोज हो गया आई थिंक, फॉरेक्स चार्ट। कि फॉरेक्स में देखोगे, फॉरेक्स में कैंडल क्लोज नहीं हुई है, फॉरेक्स में अभी कैंडल क्लोज नहीं हुई है। ये जो कैंडल हमारे एमसीएक्स में यहाँ क्लोज हो गई ना इस लेवल के नीचे, न्यूयॉर्क मर्सल्टाइज एक्सचेंज में देखोगे नेचुरल गैस के चार्ट में, वहाँ पर ये कैंडल क्लोज नहीं हुई है, विक बनाई है 310 के नीचे बट क्लोज नहीं हुई है कैंडल। एंड बाय द वे वो ओपन इक्वल टू हाई भी नहीं है, नॉर्मल कैंडल है। तो फॉरेक्स में देखोगे इट इज स्टिल ऑन सपोर्ट, फॉरेक्स चार्ट नेचुरल गैस इट इज स्टिल ऑन सपोर्ट। एमसीएक्स में इस लेवल के नीचे क्लोज हो गया, फॉरेक्स में सपोर्ट पर ही है। विक नीचे जरूर बनाई है, क्लोज नहीं हुआ है। 3.225 $3.225 का लेवल है नेचुरल गैस में। यहीं से कर लेंगे पाए। ठीक है, एमसीएक्स में इसने कुछ नहीं किया है, बस थोड़ा सा एक्सटेंड ले लिया है, ये थोड़ा सा डिफरेंस रहता है। मैं अगर वहां पर फॉरेक्स चार्ट में यूएसडी हटा के आईएनआर कर दूंगा तो वहां पर भी सेम जैसा भी यहाँ पर एमसीएक्स में शो हो रहा है वैसा ही शो हो रहा है। वहां पर लेवल थोड़ा सा अलग है, 308 दिखा रहा है, 308 के नीचे क्लोज किया है उसने, मतलब लेवल के नीचे क्लोज किया, बट फॉरेक्स में नहीं किया है। मैं फॉरेक्स नॉर्मल फॉरेक्स ब्रोकर के चार्ट की बात नहीं कर रहा हूँ, आई एम टॉकिंग अबाउट न्यूयॉर्क मर्सल्टाइज एक्सचेंज, जहाँ पर नेचुरल गैस प्राइस डिस्कवरी एक्चुअली में होती है। वैसे फॉरेक्स नेचुरल गैस के काफ़ी और भी चार्ट होते हैं फॉरेक्स ब्रोकर्स के, बट दोज आर जस्ट अ कॉपी। ओरिजिनल चार्ट अगर आपको देखना है तो आपको NYMEX फ्यूचर ही देखना पड़ेगा, वहीं से ओरिजिनल प्राइस डिस्कवरी होती है। तो यूएस डॉलर में देयर इज नो ब्रेकडाउन, देयर स्टिल ऑन सपोर्ट। एमसीएक्स में ब्रेकडाउन हुआ है डेफिनेटली। दो ऑप्शन है हमारे पास, या तो फॉरेक्स के अकॉर्डिंग चले, अब एमसीएक्स में चार्ट लगा रखा है तो एमसीएक्स के अकॉर्डिंग ही चल सकते हैं। तो उसके लिए रिकवरी बहुत ज़रूरी है, प्राइस लेवल के ऊपर वापस आए तभी बाई कर पाएंगे। फॉरेक्स में भी देखेंगे 3.250 के ऊपर अगर जाता है तो फिर री एंट्री का सोचेंगे। फॉरेक्स में स्टिल ऑन सपोर्ट, यहाँ पर कितना है। तो अगर फॉरेक्स चार्ट यूज़ कर रहे हो तो ध्यान रखना, फॉरेक्स में भी जैसा मैंने बताया NYMEX फ्यूचर न्यूयॉर्क मर्सल्टाइन एक्सचेंज, जहाँ पर एक कॉमोडिटी ट्रेड होती है एक्चुअली में। प्राइस बाय द वे 10 मिनट लेट चलता है अगर आपके पास पेड वर्जन नहीं है ट्रेडिंग व्यू का पेड वर्जन है कोई भी, तो वहाँ पर फिर वो NYMX का लेट चार्ज नहीं दिखेगा आपको, चार्ट विल बी अप टू डेट। अदरवाइज 10 मिनट डिले चलता है अगर ट्रेडिंग व्यू के फ्री वर्जन में देखोगे। भी ओपन इक्वल टू हाई है क्या? 307.4, 307.5 नहीं। 30 मिनट लेफ्ट, यूएस मार्केट जस्ट ओपन ही होने वाला है। इंपॉर्टेंट रहेगा मैन्युफैक्चरिंग पीएमआई का डेटा एज वेल। क्रूड ऑयल वापस डे लो पर ही आ गया है। सॉरी, क्रूड ऑयल में देखोगे लास्ट कैंडल ओपन इक्वल टू हाई बनी थी, लास्ट की लास्ट कैंडल कंटिन्यूएशन भी मिला है। ये कैंडल नॉर्मली है, लास्ट कैंडल ओपन इक्वल टू हाई। ऐसा ना हो यहाँ पर ये साइडवेज चला जाए आज और फिर कल गैप अप ही दिखे हमें सीधा, अगर आज के दिन मोमेंटम नहीं आया बाइंग साइड पे। बेस्ट केस सिनेरियो या तो ब्रेक डाउन होकर डाउन जाए या फिर फटाफट रिकवर कर जाए। साइडवेज गया तो फिर कल ट्रेड मिलना मुश्किल हो जाएगा, बिकॉज डेफिनेटली वेरी हाई चांसेस केस में गैप अप या गैप डाउन ही होगा। नॉर्मली ऐसा ही देखने के लिए मिलता है जब भी सपोर्ट रेजिस्टेंस पे क्लोजिंग आती है, इवन दो अभी टाइम है काफ़ी। ये फॉरेक्स चार्ट नेचुरल गैस स्टिल एट सपोर्ट अभी भी होल्ड कर रहा है, नेचुरल गैस क्रूड ऑयल ठीक है, अभी भी रिकवरी चाहिए, देखो वापस रिटर्न करना है तो क्रूड ऑयल में सडन मूव फिर से आया है। काफी देर के बाद ऐसा लग रहा है मोमेंटम हुआ है क्रूड में। देखना पड़ेगा नॉर्मल मूव है या फिर कोई न्यूज़ आई है। कुछ दिखा नहीं रहा अपडेट अभी भी न्यूज़ का रिगार्डिंग। यूएस मार्केट भी ओपन नहीं हुआ है। क्रूड ऑयल की कैंडल तो हो गई, सॉरी नेचुरल गैस की कैंडल क्लोज हो गई, ये ब्रेक डाउन ही कर दिया इसने सपोर्ट का. इट माइट कंटिन्यू फॉल नाउ. फॉरेक्स में भी ब्रेक डाउन कैंडल क्लोज हो गई है नीचे. ये मूव बड़ा सडन आया है एंड दिस मूव इज नॉट इन बिगिनिंग टू एंडिंग लेवल. ऐसा नहीं हुआ कि ओपन होते ही ऊपर चला गया था. 10 मिनट तक मार्केट में कुछ नहीं हुआ था इस कैंडल पे. 10 मिनट भी नहीं, ऑलमोस्ट 12 या 13 मिनट तक कुछ नहीं हुआ था. लास्ट के 2-3 मिनट में बड़ा मूव आया है इस कैंडल पे एंड इट इज कंटिन्यू नाउ. नेचुरल गैस में यहाँ से पुल बैक का प्लान करते हैं. ऊपर सपोर्ट तो ब्रेक हो गया, मोस्ट प्रोबब्ली रिटेस्ट करेगा प्राइस. Okay, it is just for pullback. US market just open हो चुका है. Let's see the US market opening.
Fixed income.
We are moments away from the start of trading on this Monday, the 1st of June. I'm Matt Miller. This is Bloomberg Open Interest. You can see that futures have turned lower now, about 0.2% on the S&P, about 0.25% on the NASDAQ. This after we closed at 78.50 on the S&P Friday. 9 consecutive weeks of gains. We haven't seen that kind of winning streak since 2023. Ringing the opening bell at the New York Stock Exchange, you've got FedEx Freight, a little bit of a spin-off there from the global packaging company. You see Lynn Martin there, president of the NYSE, joining them on the, is it a podium? It's kind of like a balcony there at the NYSE. And then down at the NASDAQ market site, you've got a bunch of employees from Blackline, one with pink hair, which is pretty cool. A lot of them with yellow handkerchiefs, which is not. Ringing the opening bell to celebrate their 25th year anniversary. I guess since their founding, I was looking on the comp function, though, and they've lost 71% of their market value in the last 5 years.
Okay.
So that's not great.
That's not great.
No.
Definitely don't want to celebrate that. Anyway, what I'm looking at this morning, yes, the overall market is down. It was up before we got the latest headlines on Iran ceasing all talks with the U.S., but we were up because of what's happening with NVIDIA, up 3%. It's now making chips for PCs and laptops. They are taking on explicitly Intel and AMD on this. Its RTX Spark Superchip is going to be debuting in computers this fall, Matt.
All right. I'm looking forward to seeing how much that matters. Definitely, it's helping today. You can see NVIDIA up 3%. Software stocks also extending gains after NVIDIA CEO Jensen Huang said AI will create more use cases for software. So fighting the narrative that AI is going to eat software's lunch, you can see that's helped ServiceNow shares up more than 6%, Salesforce up 5%, and Microsoft gaining almost 3.5%. Let's bring back Citi head of U.S. equity trading strategy, Stuart Kaiser. So AI continues to power this rally. That's no surprise. How broad is it? Because you know, this market keeps looking for bottlenecks and keeps bidding up other parts of the market. A lot of companies that we never would have thought of as AI, like Caterpillar or Ford, become AI plays. How much can that spread out?
Well, I think to your point, like or sort of more industrial AI is a huge broadening trade. I think that's one of the bigger consensus trades now is you're going to have a global industrial production cycle as these data centers have to get built on, on a global basis in Europe and China and Latin America.
And they'll need energy, and we'll need software to play with AI, and we need laptops from Dell. I mean, it's going to spread.
And you need aluminum, and you need copper, and you need memory, and you need analog chips, and you need construction. So I think I think people assume this is a narrow Mag 7 trade, but our sort of AI portfolio has almost 130 stocks in it, just to give you a sense of it. So it is much broader than just 5 or 10 stocks, and that's why the market has been able to power higher, even as people rotate out of those Mag 7s a little bit into these other parts of the market.
Well, part of the attractiveness, again, of these stocks is their terminal value, of just how much opportunity they have to come. And I was talking with a banking executive in the last week who said the flip side of that is software stocks, because you can say, look, they're still doing good now, and they'll probably be okay for the next 4 or 5 years, but year 6 and onwards, how do you price in what they're actually going to look like? Isn't there some degree to which the losers necessarily need to stay with depressed valuations because you just don't know what the future is going to hold for them?
Well, look, I think, as Matt brought up before, what does NVIDIA look like 5 years out? You're talking about how high can that terminal value get. In software, there's a debate about, do I have some terminal zero stocks? Look, that has been a little bit on the back burner now, but even if you've all highlighted a few of the software stocks that have rallied, there's more than a few stocks in that software sector that are actually down pretty considerably. And that's good news, bad news. I think it's good news that people are identifying certain software stocks that are going to be winners out of this and that do have a really strong business case. And then you have some that, whether it's terminal value zero or just much lower value here, and those companies ultimately get acquired or rolled up, we'll have to see. But yeah, I mean, it's much healthier to be talking about what is terminal for Micron or NVIDIA than it is to be talking about what is terminal value for, one of these software stocks. But it's an ongoing debate, and, right now it's net positive. I think we can agree on that.
I think everyone pretty much agrees on that. You say there's value in S&P calls, but I wonder at what price or at what strike? How much further can we go from here?
Look, you could talk yourself very easily into 8,500 on the S&P in the next 3 to 6 months, and it wouldn't be too Herculean to get there, right? I mean, you're adding $12 to $13 of EPS each quarter, right? On a 20 times multiple, that's 250 index points each quarter, just simply on the chronological roll of earnings. And the PE, as you mentioned earlier, has actually contracted almost 5% this year. So it's not too crazy to think, hey, could 2027 EPS be $400? And what multiple do I put on top of that? So, look, I think, folks are thinking, above 8,000 probably in the next 3 to 6 months as a bull case.
By the way, I don't know if you've seen, Jim Bianco had a chart showing stock market concentrations, and each time, obviously, there's a peak and then the bubble bursts, starting with railroads in the 1800s, right, and the dot-com peak and burst as well. Does this have to end that way also?
I mean, what are the old saying, things always end badly, otherwise they wouldn't end. So I guess at some point it's going to end in a not friendly way. But we've generally not been too concerned about market cap concentration. To your point, this has happened historically, whether it was energy companies or banks or Intel or, name your sort of really powerful theme, IBM, GE, some of the big healthcare companies. So is it a little more concentrated today than maybe it has been in the past? Yes. But this is just sort of, we've termed it, it's a feature, not a bug of markets, that you have these really powerful themes. Those companies get rewarded. You get a little bit of a concentrated index. That theme sort of, grandfathers out, and you go on to the next one. So is it going to end well? Probably not, because things just don't normally end well. But are we really, really concerned about the concentration? Personally, not so much.
What difference does it make when the things that are leading are so capital intensive? And I mean AI data centers, because we were in this world where basically one of the big bullish theses was there's still a lot of money that wants to get put to work. It means people can keep buying stocks and credit spreads can remain really tight into infinity because there's just so much cash that needs to find a home. What happens if that dynamic starts to flip, that there is more supply, be it in debt markets through AI data centers or the big IPOs come to market, when supply does look more plentiful and maybe demand doesn't change?
To us, the way you invest in that is you follow the money. So if you think these companies are spending too much, then almost by definition, the recipients of that spending must be earning kind of an above-trend ROE. So that is the bottlenecks trade, whether that's memory, whether that's aluminum, whether that's power generation, which is our personal favorite. I think if you believe one group is overspending or paying an unhealthy price for something, then whoever's selling that thing to them must be really benefiting, right? So hate to say it, it's a little bit of a follow the money scenario in this case. The credit story is non-trivial. You're going to have these large cap tech companies are now going to be very large parts of the credit indices, and there's a lot of implications there. Does credit hedge equity as well when they basically have the exact same trade going on both sides? But big picture, again, if you believe someone's overspending, I think you want to target the companies that are the recipients of that spend. To us, it's power generation, but there's various sort of bottlenecks you can chase after.
Wait, that's interesting. So as credit becomes remade more in AI's image, it's less attractive to hold alongside equities?
Attractive or not, I mean, that's probably a valuation discussion.
Sure. I guess it's a hedge then.
But to your point, if the credit index maybe used to be a lot more financials heavily weighted. Well, now what you're seeing is the Metas and the Microsoft are now finding their way into the CDX indices. So all of a sudden, the sector weightings of those two assets look much more similar than they used to. And you could argue that maybe means they don't hedge each other quite as well as they used to.
This reminds me, by the way, of Blessed Are the Cheesemakers.
Say more.
Because of the whey protein shortage, and we're talking about the difficulty that product makers are having getting whey protein. The only way you get whey protein is from the cheese makers because they separate the curd from the whey.
So invest in the bottlenecks. Invest in the cheese bottleneck.
Exactly.
I like it. Stuart, thank you very much.
Thank you very much.
Do you have any cheese thoughts before we depart?
Buy cows, I guess.
There you go. Stuart, thank you. Bullish on both the S&P and on cows. City head of U.S. equity.
Bullish on cows. It's fantastic.
That is good, yeah. Equity trading strategy, Stuart Kaiser. Let's get a check on your equity market. We're about 9 minutes into your trading day. And wouldn't you know, we're positive, despite the fact oil is spiking this morning, despite the fact yields are also spiking over reports that Iran is cutting off its exchanges with the U.S. over displeasure at Israel, continuing to trade strikes with Lebanon and Hezbollah. NVIDIA, that's what's leading us here. Thank you, NVIDIA, for allowing to add 26 points to the S&P 500. imagine to say that without that, we actually wouldn't be gaining, considering we're only gaining 2.2 points on the S&P, but that would be another all-time high. The chip makers are doing well as some of the software stocks, thanks to Jensen Huang saying, hey, software, it's going to be using AI. I mean, it needs it. It needs it to be buying enterprise software, needs to be buying AI applications in order for this to all make sense. Amazon, Alphabet, Tesla, Apple lead the declines. AMD, you also have some of the competitors. Now that NVIDIA is getting into the PC market, Intel, Qualcomm, those all declining. So if you look at the sectors, only 2 are gaining, and that's enough for this overall index to be gaining. That's, of course, tech with NVIDIA, and energy as the price of oil rises, rather. And then on the downside, you have consumer discretionary, because what suffers as gasoline goes higher, it's consumer wallets, and thus consumer discretionary underperforms. But we're still a little changed to slightly higher this morning now, Matt.
All right. Yeah, with only 2 industry groups gaining, that's pretty fascinating. Coming up, SpaceX is forcing Wall Street to rethink mega listings, and the IPO's success or failure could have significant implications for the market and investors. That's next. This is Bloomberg Open Interest.
तो गाइस क्रूड ऑयल देखोगे अपर सर्किट लगा था, ओपन हो गया है, कंटिन्यूअसली गोइंग अप. सेल मत कर देना अभी भी. फॉरेक्स भी कंटिन्यूअसली अपसाइड है. फॉरेक्स में ऑब्वियसली अपर सर्किट नहीं लगा, इट इज कंटिन्यूअसली गोइंग अप. Iran has halted its massive exchange channel with the US in protest over what it's called Zionist crime, Iranian state media. And that's why I think crude oil is going up suddenly. Iran has halted its massive exchange channel with the US. Major news right now. Positive for crude oil. But US market देखोगे, US market is still positive. US market भी positive चल रहा है, even though crude oil suddenly upside गया है. ईरान मोस्टली आई थिंक उसके चैनल पाकिस्तान और कतर के थ्रू ही थे. यूएस के साथ आई थिंक दे क्लोज दोज चैनल एज वेल. नेचुरल गैस थोड़ा सा और पुल बैक दे सकता है इस एरिया के आसपास कहीं भी. मेजर सपोर्ट तो ब्रेक हो गया है. आई एम एक्सपेक्टिंग थोड़ा सा पुल बैक आ जाए तो वापस सेल करें. दैट इज जस्ट फॉर पुल बैक एरिया. कोई मेजर सपोर्ट अब है नहीं पास में नीचे. Okay, crude oil mostly go towards $100 again. ये एक रेजिस्टेंस है बट सेल नहीं करेंगे यहाँ पर डायरेक्टली कांट सेल जिस तरह का मूव आ रहा है पॉसिबल है अब और ऊपर ही चला जाए ठीक है न्यूज आई थी उसकी वजह से थोड़ा सा बुलिश हो गया सडनली दैट इज रिगार्डिंग द यूएस ईरान Iran state-run Tasmin news agency reports that Iran has suspended all further diplomatic communication and message with the United States in protest of Israel violation of current ceasefire on all fronts, specifically setting Israeli strike and military operation in Lebanon. जिस तरह से जा रहा है वेरी हाई चांसेस $100 जा सकता है वापस क्रूड ऑयल रिमेनिंग टाइम में उस $100 तो जब जाएगा देखेंगे। यहाँ पर एक रेजिस्टेंस है, एक सेलिंग का प्लान यहीं से करेंगे। वैसे तो बुलिश ही है क्रूड न्यूज़ की वजह से, बट मुझे लगता है थोड़ी बहुत प्रॉफिट बुकिंग आनी चाहिए। ज़्यादा रिस्क नहीं लेंगे, ऑलरेडी काफ़ी बुलिश हो गया है। वाह, ये तो थोड़ा सा रिस्की है ट्रेड क्रूड ऑयल का, बिकॉज ऑफ न्यूज़ मोमेंटम। न्यूज़ जो आई है काफ़ी ज़्यादा बुलिश है। डिटेल्स थोड़ा सा देर में पता चलेंगी। फिलहाल अभी इतना ही पता है कि यूएस ईरान के बीच में सारे चैनल बंद हो गए, विच इज़ नॉट गुड बाय द वे फॉर द पीस डील जो बातचीत चल रही है दोनों के बीच में। ज़्यादा रिस्क मत लेना इस लेवल पे। एक मेजर रेजिस्टेंस $100 के आसपास है। यहाँ पर देखोगे $94 के आसपास एक रेजिस्टेंस बना हुआ है छोटा सा, जो लगाया हुआ था वहीं पर है। अगर ये न्यूज़ नहीं आती तो बेटर था, थोड़ा स्लोली स्टडी आता। एक अपर सर्किट लगा चुका है, अगर न्यूज़ कंटिन्यू रही तो दूसरे अपर सर्किट पे भी इजीली चला जाना चाहिए लॉजिकली। 8.42 8.99 8.99% सेकेंड अपर सर्किट लग जाता है शायद, आई थिंक। Oil extend gains on report. Iran is halting talks. Not good. सेवन थर्टी पे डेटा भी है मैन्युफैक्चरिंग पीएमआई का, we'll need to see that as well. कैंडल ही गैप अप हुई है, गैप अप कैंडल क्रूड ऑयल। याद रखना इसमें दूसरे अपर सर्किट पर है प्राइस। डेटा भी आ गया है। मैन्युफैक्चरिंग ईएमआई वाओ इंक्रीज हुआ है, अच्छा है डॉलर के लिए। मैन्युफैक्चरिंग पीएमआई का डेटा अच्छा है। आईएसएम मैन्युफैक्चरिंग प्राइसेस ये थोड़ा सा सही नहीं है। फोरकास्ट 85.3 आया है 82.1। ठीक है, मैन्युफैक्चरिंग पीएमआई का अच्छा है विच इज़ गुड फॉर यूएस इकोनॉमी। मैन्युफैक्चरिंग यूएस में इंक्रीज हुई है। लास्ट 52.7 थी मंथ, फोरकास्ट था बढ़ के आएगी, बढ़ के आई है। 53.3 एक्सपेक्टेड था, ज़्यादा आई है 54, तो 52.7 लास्ट थी, 54 इस बार आई है, तो काफ़ी अच्छी है। यूएस में मैन्युफैक्चरिंग इज इंक्रीजिंग, गुड न्यूज़ फॉर द यूएस इकोनॉमी, बैड न्यूज़ फॉर द गोल्ड। कुछ खास इम्पैक्ट हुआ नहीं है। कोई डेटा नहीं है आज, अब सीधे कल आएगा डेटा जॉब ओपनिंग का। यूएस क्रूड ऑयल है, ब्रांड क्रूड ऑयल को भी देखोगे वो तो ऑलमोस्ट $9600 पे पहुंचने वाला है, $96 पर बैरल पहुंच गया। स्ट्रेट ऑफ हॉर्मुज क्लोजर थ्रेट, the resistance front, and Iran has announced plans to fully close the Strait of Hormuz and open additional fronts, including the Bab el-Mandeb Strait, raising significant geopolitical concern for global trade routes. मेजर न्यूज़ चल रही है फिलहाल के लिए, क्रूड ऑयल रिएक्ट कर रहा है उस पर। न्यूज़ तो काफ़ी ज़्यादा बुलिश है। मेजरली यूएस और ईरान के बीच में जो बातचीत है वो बंद हो गई है, सारे चैनल ही क्लोज हो गए हैं। याद रखना ये इस लेवल पे थोड़ा रिस्की ट्रेड है, क्रूड ऑयल का ज़्यादा रिस्क मत लेना इस लेवल पे। न्यूज़ की वजह से पॉजिटिव है, लेवल तो ठीक ही था। यहाँ पर अगर होल्ड नहीं करता है तो फिर यूएस डॉलर में अराउंड $100 के आसपास ही एक रेजिस्टेंस दिख रहा है, अगर ये होल्ड नहीं होता है तो अभी। नेचुरल गैस ऑल्सो रिमेंबर, इसका ये ऑलरेडी सपोर्ट था मेजर, ये भी ब्रेक हो चुका है ऑलरेडी। वी जस्ट एक्सपेक्टिंग अ पुल बैक कि वापस सेल करें, कोई स्ट्रॉन्ग बाइंग अब एक्सपेक्टेड नहीं है। मेजर सपोर्ट काफ़ी लो लेवल पर है, वहाँ तक शायद ना गिरे, पहले रीटेस्ट करने जाए तो बेटर है। तो याद रखना ये जो ट्रेड लगा रखा है दैट इज़ फॉर अ पुल बैक ट्रेड, जस्ट फॉर पुल बैक। थोड़ा सा एसएल बड़ा है तो कोशिश करना कि लो एंड के आसपास एंट्री मिले। ठीक है, बहुत ऊपर से लोगे एसएल काफ़ी बड़ा हो जाएगा, उतना रिस्क रिवॉर्ड अच्छा नहीं है। 1:2.5 ही मिल रहा है बस, तो कोशिश करना कि इस एरिया के आसपास कहीं एंट्री मिले सो दैट एसएल छोटा हो जाएगा। यहाँ पे एसएल थोड़ा बड़ा है, क्योंकि इसमें जितना मेरे को दिख रहा था यहाँ से जो नेक्स्ट सपोर्ट है उसके बीच में रिट्रेसमेंट जोन इसी एरिया पे बन रहा है एक्चुअली में। तो 80 280 के आसपास कहीं एक सपोर्ट है शायद उसमें। फॉरेक्स में तो 280 के आसपास सपोर्ट बनेगा, तो ये ऑलरेडी एक वेव जा चुकी है बाइंग की, ये सेलिंग आ रही है। अगर इसको कंटिन्यू करना है तो इसी एरिया के आसपास से रिटर्न करना चाहिए। जितना भी रिटर्न करता है वो रिटर्न करेगा तो फिर एक एम बना के गिर सकता है। ये कैंडल भी ओपन इक्वल टू हाई है नेचुरल गैस में, ओपन 305.3, हाई 305.3। करते रहो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। कि डे लो मोस्ट प्रोबेबली क्रूड ऑयल में $90 के अराउंड एक मेजर रेजिस्टेंस था, उसका फॉरेक्स में ब्रेकआउट हुआ है. नाउ दिस लेवल आल्सो एक्ट लाइक अ सपोर्ट मोस्ट प्रोबेबली. सेलिंग का प्रेशर बन रहा है, बट याद रखना इतना भी नहीं है. जब तक प्राइस वापस से 8600 500 के नीचे ट्रेड करना शुरू नहीं करता, ये नीचे काफी स्ट्रॉन्ग सपोर्ट बन गया है. लगता है क्रूड ऑयल ऊपर ही जाके मानेगा $100। इस लेवल को ब्रेक करता है तो फिर अब सेकंड अपर सर्किट पे चला जाना चाहिए लॉजिकली। थोड़ी बहुत ही सेलिंग आई, कुछ सेलिंग भी नहीं आ रही है। ईरान और यूएस की जो न्यूज़ आई है लग रहा है सुपर बुलिश है फॉर क्रूड, स्पेसिफिकली जब अगर टेस्ट सपोर्ट और रेजिस्टेंस पहले ही हो गए हैं। याद रखना MCX और NSE दोनों ने ही सिल्वर 100 फ्यूचर लॉन्च किया है। लॉट साइज 100 का है, 100 ग्राम्स एंड 10 रुपीज़ पर ग्राम्स का प्राइस कोटेशन। उसको भी आज से ट्रेड कर सकते हैं MCX और NSE दोनों में ही। ये बाकी देखना पड़ेगा ईरान की ओर से जो नया स्टेटमेंट आया है, क्या ईरान और यूएस के बीच में फिर से बातचीत होती है या फिर नहीं, बिकॉज उन्होंने नई डिमांड रखी है ईरान ने, दैट ईरान there will be no talks until Iran demands on ceasefire in all fronts, especially Israeli operation in Lebanon and Gaza are met. तो जब तक ऐसा होता नहीं है, chances are very less that Iran and US talks are continue. एक पॉसिबिलिटी है कि यूएस और इजराइल वापस स्टार्ट कर दें वॉर।
do it. Gotta get the important stuff first. S&P down 5, the Dow down 190, the Nasdaq up 10. Go figure. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages mixed to little change. And for the time being, oil back in the driver's seat on this report that Iran's going to hold exchanges of messages with the U.S. Brent up close to 7%. Still under 100, though, 97.35 a barrel. Competitors to NVIDIA sinking on word NVIDIA is entering the PC market with this new chip. So you have shares of Intel right now. They are down close to 4%. NVIDIA, on the other hand, that is up 4.6% on this news. Aaron Cannon at Clear Harbor Asset Management says, you know what? Investors still grappling with the impact of artificial intelligence.
On the tech side. But there's also, the elephant in the room, and we talk about it almost every day, which is AI. And it sort of transcends both the economic picture, the earnings picture, as well as the Fed picture. How is Fed Chair Warsh going to deal with that elephant?
For the S&P 500, 6 points lower. The NASDAQ 100 up 32 points. So it's on track for maybe a record if it closes in the green. And the Dow right now down 210 points. An interesting study from the New York Federal Reserve Bank. It says the rise of remote work explains more the recent increase in unemployment among young college graduates than the proliferation of artificial intelligence. According to the study, at least 64% of the rise in jobless rates among college-educated workers under the age of 29 versus pre-pandemic levels can be attributed to work-from-home trends.
But these are the young people who want to work in the office, supposedly, right?
These are the young people who want to work anywhere.
Okay, fair
I got a
point.
couple. Get them out of my house, please.
You need them off the payroll.
Off the payroll, out of the basement. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Speaking of office work, here's a stat I've been waiting for. I'm waiting for since the pandemic. Office conversions and demolitions exceeded new supply by 3 million square feet in the first quarter of 2026. Only the second time this has occurred since 2008. So that's pretty good for the whole supply-demand thing. Let's break that down with Mark Salvatelli. He is president and chief executive officer of NAIOP, the Commercial Real Estate Development Association. He's a Penn State grad, so he can stay. Mark, talk to us about the commercial real estate market here, broadly defined. We're seeing signs of life really for several quarters now. What are you seeing?
We are seeing signs of life. As John was just mentioning in his update, you were seeing this younger cohort really desiring to get back into office. And a lot of companies are bringing people back into office. What we're seeing, though, is that growth is really being fueled by buildings that are in the urban cores, highly amenitized, where people could come back and they feel part of a community. And that's really helped drive this growth that we've seen in the usage of office space now for 3 consecutive quarters.
We keep hearing how there's a lot of demand for higher quality buildings, some of what you're describing with the amenities and the layout that allows for interaction between different workers. Where does that leave the buildings that are, grade B, grade C, the stuff that looks like it's from the 90s and hasn't been upgraded?
Yeah, and it's a great point, Scarlett. That is actually probably the area that is still lagging behind here. Spaces that aren't nearly as amenitized, perhaps aren't in the urban core, and some of which, particularly as you're talking about Class C, have reached their functional obsolescence anyways. But what we're trying to do now is, developers are really trying to work with local municipalities to try to find ways to perhaps solve 2 problems at once: the vacant office space and, of course, the big housing crunch that exists pretty much anywhere in America, and doing what we can to convert some of those obsolete buildings into residential or other uses as well.
Interest rates are rising. They're higher than a lot of people would like to see them. How's that impacting kind of the commercial real estate market these days?
Yeah, look, when you look to the past 5 to 10 years, interest rates are almost across the board higher than they have been during that time frame. And it has put a bit of a cap on development. You know, that uncertainty combined with the geopolitical uncertainty that's out there has really created increased caution within the commercial real estate community. Doesn't mean development's not happening. All it means right now is that there's really a lot more putting pencil to paper to make sure that potential projects are going to pencil out.
What are the economics of new construction versus gutting, renovating existing, for instance, Class C buildings? Because it's not just interest rates that are higher, but also there's elevated construction costs. Labor is a lot more expensive than it was just a few years ago.
Yeah, and you cited two great points there, Scarlett. Both the labor and the materials themselves are certainly higher. Now, when it comes to building a new facility, you know, those are the prime concerns. But when we're talking about converting something, perhaps a Class C building into residential, there are other costs that come to it as well, too. The floor plates for office, while similar to residential, aren't the same. Building codes, zoning ordinances, these have to be accounted for as well, too, because often that takes additional work. So there's even more costs associated with converting a building from office over to residential than simply just the elevated labor and finance costs and construction costs that we see perhaps with starting a new building right now.
Mark, we know that real estate is local by nature. Where in the U.S. is it the fastest to be able to convert an office building into something residential?
Yeah, it can really vary by market in terms of fastest, but I will rephrase that, Scarlett, and say we are seeing certain markets where conversions are happening, more conversions are happening than perhaps in other markets. We initially saw it in Manhattan, no surprise there. Washington, D.C. has really made a concerted effort into converting some of the older stock over to residential now. Actually, Calgary, Alberta was really kind of the pioneer in this, as they were doing this really post Great Financial Crisis with the tumbling of oil and gas prices, which of course have a real impact on the Alberta economy. But right now, I would say DC is probably one of the leading markets that we're seeing in terms of the amount of conversions that are happening.
Mark, I spent the weekend driving around central Virginia, and I saw a lot of suburban office parks. Every single one of them had a sign planted in the ground with office space available. How's suburban office looking?
Yeah, you know, as I mentioned earlier, you know, we've seen the real strength in the urban core, but when you're looking at the suburban market, you know, that's lagging. Now, you know, you cited that, you know, you could certainly see space available signs where you were driving around there. And in a lot of suburban markets, that's often the case. You know, typically suburban markets are, you know, more of the Class B space. They're obviously removed from the urban core. Doesn't mean that they aren't growing. You know, we're in a suburban office park here at NAIOP's headquarters, and, you know, our building is 85% leased right now. We just took more space, actually, and expanded what we have. So it's lagging, but the lag is starting to close from what we've seen.
How much demand is there from the co-working companies, the WeWorks and the companies that are trying to do what WeWork is doing? Is that still a force of demand in the market in commercial real estate?
It is. You know, it may not be the force that we saw leading up to the pandemic when everybody was abuzz about co-working. I mean, think about how much WeWork was in the news prior to the pandemic. But you know, while that kind of fell off a cliff for a while, there's been a noticeable increase in co-working companies that are once again leasing space. And that's not limited perhaps to just some of the gateway city markets. We're seeing that in a number of markets, but again, that growth is still largely concentrated in the urban core.
Mark, thanks so much for joining us. Appreciate it. Mark Savatelli, President and Chief Executive Officer of NAIOP, which is the Commercial Real Estate Development Association, joining us there. My number 3 offspring works for a major national financial institution in a sales role. Mm-hmm. They're still 3 days a week in the office, and I told him...
In New York?
No, in L.A.
Okay.
And I told him, get in the office more, and he says, there's no room.
There's no room. Yep. So everyone's hot desking, and they're being limited to 3 days a week.
And I was not happy with that.
Well, the banks wanted to cut down their costs, so this is how they did it.
I guess that's kind of how they did it. But anyway, I said, get in there as
Does he
much
have to
as
go
you
in with
can.
a rolling suitcase every day?
I don't know. We'll see. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, very good. We got Scarlett Fu, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. We were supposed to have Isabel Lee last hour and extend. They bait and switched me, put Eric Balchunas in, which was a crushing blow.
That was a downgrade for you, wasn't it?
That was a downgrade
Yeah.
for me. But we got Isabel Lee now, cross-asset reporter for Bloomberg News. She's in our studio. You guys have a big take story out today. Lou Wang, Bailey Lipschultz, and you, Isabel Lee. This SpaceX IPO, this is kind of setting new rules and new norms for the IPO market, is it?
Yes, it's just so consequential. It's reorganizing a lot of the parts of the markets. And one of those that it's reorganizing is the stead, quiet world of passive investing. So because a lot of the companies behind the massive indexes you can think of, the company behind S&P 500, NASDAQ 100, Russell, they're changing and have changed their rules to accommodate mega cap IPOs like SpaceX. They don't really say it's for SpaceX. It's just SpaceX, because when companies go public these days, they're mega companies as opposed to in the past when they're just, a company. Now you scale privately, you raise funds privately, and when you go public, you're the super giant company. So for the NASDAQ, I think the seasoning period, which you can think of it as the wait time before they add you to the NASDAQ 100, it used to be 3 months. They've narrowed it down to 15 days. For FTSE 100, it's 5 days. S&P is still in consultation, but from 12 months, 6 months.
Right. I mean, it feels like they have to go down that path if everyone else did. Is this a one-time thing where they're changing it for SpaceX, or is this from here on out? Because if the SpaceX IPO goes off without a hitch, then we're also going to see Anthropic and OpenAI list as well, and they too could then then potentially join the NASDAQ 100 after 15 trading days.
Yes, they never say it's for SpaceX. It's for mega cap companies. So one could think it's likely also for Anthropic and OpenAI. And this isn't unprecedented. In the past, they've also tried to change the rules to accommodate Meta, if I'm not mistaken, in 2012. But analysts estimate that for SpaceX, if the rules apply, index funds would have to buy $20 billion worth of SpaceX shares, which is a lot. And that could really move the markets. And that's not even considering where it will be. Is it going to be communication? Is it going to be industrial? Is it going to be...
Oh, you mean what is it going to be classified
the classification, yes. Is it going to be a tech firm? So, yeah, no one knows, but
It's interesting you mentioned that because I was wondering, like, which analysts on Wall Street will be covering this company?
Right. So, yes.
And so what I want to understand is a lot of the aerospace and defense analysts.
Rockets usually are industrials, but
Yep.
then if you look at the revenue generating, I mean, it has cloud services deals with Anthropic. That's communication.
Yep.
Sorry, no, that's tech.
Yep.
But then they, Nicolas Colas of Data Trek
He's
Research,
awesome.
he said it might be communications
Right.
because of the sales. And guess where Alphabet and Meta is? Communications.
No matter what, it's going to be the gigantic
Yes.
company in that sector, especially if it's something like communications, which doesn't have as many names as the tech sector.
100%, but it's just so unprecedented, to be honest, and it will also pave the way for the mega IPOs we're going to see at the end of this year.
And what I like about the big tech stories, they're just really interesting stories, and they're deeply resourced and deeply sourced, all that kind of cool stuff. They have nice, pretty pictures. So I like the pictures.
Pretty pictures always help.
And they've got a pretty picture about how SpaceX IPO stacks up in terms of offer size, the biggest, and in terms of market cap, 1.8 trillion, second only to Aramco.
Nothing can just compare, honestly.
It's just extraordinary. So it's way, way off the grid here. I guess, do we expect this thing to just do a normal roadshow? Are they going to go to, I haven't even seen a roadshow schedule. Are they going to do a day in New York, a day in London, a day in...
That I'm not sure. I think it's going to be mid-June, but I want to bring up one important point also. They're going to allot 30% to retail traders. And just this morning, news broke that 5% will be allotted to employees, which I think is more normal.
Why is that unusual?
That's a huge size because in the old playbook, it's institutional money that gets a lot of this and retailers are just left with leftovers. But now it's really putting the retail investors to a pedestal and recognizing them to be an important part. I mean, it's 30%, which is still minority compared to the 70%, but that's bigger than anything we've
Well,
heard.
my deal is if it went 30% retail, that means it was a bad deal. I couldn't get the institutional.
Well, okay,
but this is different. This is Elon. And
But
I think
is it different?
retailers-
Because does that mean there's going to be enough demand after the stock lists and is a publicly traded company? Is it going to have that swell of demand that usually boosts the share price?
Yeah,
I think that's what everyone's going to be worried about. And then if you go through Reddit, the best source on earth.
I know I've got it on my phone, but I just don't find it useful.
Yes,
Dude.
we
I'm
talked
trying.
about this,
We're
Paul.
getting you. We're gonna. You're gonna be a convert
Some
soon.
people were like, "Why will I even buy?" They think it's a scam. We all know some people think that, but others are like, "Why will I even try buying when it's going to be in my index fund, aka my brokerage account, soon?" Which again, because of the seasoning shortened periods.
And then another little derivative trade is: do I sell my Tesla because I can get
Right.
Elon
Yeah.
by just owning SpaceX?
Too much concentration risk if you have both Tesla and SpaceX.
So if you have an index fund, you basically have SpaceX in a few months.
Yeah, but half the people in this country, I think it's more than half, don't have any
Exposure to equities.
exposure
That
to
is
the
true.
equity
That
markets
is true.
at all. But but you just look at Tesla, how that's traded over its life. It's traded at just huge valuations on huge volume, huge market cap. It doesn't trade like an auto company, obviously, but it's a play on Elon Musk. And
You
I think
believe
that's
the
what
dream.
the bankers are
Yeah.
probably. It's a large part of their pitch, and the valuation is, hey, this is your chance. I think they have their total addressable market is $28.5 trillion.
Yeah, almost 30 trillion.
That sounds like
These-
one of my IPOs from back in the late 90s. Okay, here's the
Really?
pet market, pet food market, and here's what the internet's going to take, and therefore...
Oh, the references to pets.com don't end.
Exactly. And guess what? It worked. Until it didn't. Isabel Lee, thanks so much. Appreciate that. Isabel Lee, cross-asset reporter for Bloomberg News with the SpaceX story. Big take story here. You can read more of this story on the Bloomberg terminal and at Bloomberg.com/big take. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. We've got mixed trading in the equity markets here today, kind of quiet. The S&P's down 7 points. The Dow is down 200. The Nasdaq's up 11 points there. 10-year Treasury yields, they're higher sharply, up 7 basis points, 4.51%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning, good first day of the second half of the year as well, and good first day of June. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot to cover on this second hour of Bloomberg Intelligence. There's some M&A deals to talk about. People offering to buy MGM Resorts. That's a company controlled by Barry Diller for $48.30 a share in cash. We'll get to that with Jody Laurie, our senior credit analyst here at BI. Matthew Palazzola, our senior analyst who covers PNC Insurance. We'll talk about Berkshire Hathaway making a deal of its own, buying the home builder, Taylor Morrison, for $6.8 billion in cash. Adam Phillips is Managing Director of Investments for EP Wealth Advisors. He'll give us his outlook on the markets. And we're going to get a check-in on geopolitics. Are the U.S. and Iran in talks to come up with a peace deal? Are they not? Ed Price is Senior Non-Resident Fellow at NYU. He will join us with more on that. And Woo Jin Ho, our Senior Hardware and Networking Analyst, will be giving us a preview of earnings out of HP Enterprise this evening after the closing bell. First, though, let's head over to John Tucker for our Bloomberg Business Flash.
All right, let's start with oil. It's surging. Traders reacting to the Iranian report that the country is going to stop exchanging messages with the U.S. Energy, right now, the best performing major industry group in the S&P 500. Brent up over 7%, 97.59 a barrel. So it's lifting treasury yields, as Paul was mentioning. The twos up 8 basis points, 4.08%. The 10's up just about 8 basis points, 4.50, and the long bond back above 5%, 5.02% for the 30s. Best performing individual stock in the S&P 500, back to MGM Resorts. Barry Diller, again, reportedly planning a takeover bid. Keith Lerner at Truist Advisory, meantime, says the 9-week winning streak for stocks, that can continue.
We looked back since 1950 and looked at how often has this occurred, and there's been 10 other times since 1950. And when you look a year later, 8 out of 10 times the market has been up with low double-digit gains as the average.
Right now, the S&P 500 down just 6 points, 74 in the index. The Dow down 224 points. The Nasdaq Composite Index up right now 18 points, up just about 0.1%. I know you love it when I do sports news.
Oh, boy.
Anyway, ESPN says Serena officially making her comeback to professional tennis. Serena Williams is going to play doubles next week at the HSBC Championships.
Where's that being held?
I don't know.
I mean, I know French Open is on the clay court.
Hopefully somewhere where it's not real hot like the French Open. But
right.
23 major titles, Serena Williams. She was in the studio here once. It was back a couple of years ago. Very nice.
The best tennis player of all time. No
Oh,
question.
without a doubt.
And arguably one of the best, and the best athlete of all time. I mean, what she accomplished was crazy.
Anyway.
Well, she's not done, apparently.
Yeah,
She's
I know.
not done.
Good for her. Good for us.
We check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, JT, for that Bloomberg Business Flash. Let's take a look at some stocks on the move this morning. We have a mixed market. The S&P slightly lower than NASDAQ, basically unchanged. Elena Popina is here with us. Elena, what are you looking at?
Yeah, a mixed tape indeed, but a lot of really interesting stocks trading and exhibiting a crazy pattern. I'll start with IBM. IBM, the IT services company, is seeing a lot of speculative activity today. It's up more than 7% after a 6-month-old video of Donald Trump praising the company's CEO recirculated over the weekend. Back in the days when that happened in December, stock didn't react at all. There was little to no reaction. But right now, over the weekend, over Saturday and Sunday, traders recirculated the tweet over Reddit, over X, and as a result,